Apart from that, let's also watch out for BL because they have won an order worth 732 crores. MTAR Tech won an order worth 264 crores. And V2 Retail because QIP is going to happen in this company.
Gaurav, thank you for that update. Lastly, Sudarshan joins in with cues from the F&O space. Sudarshan, good morning. We've been oscillating between gains and losses all through the week, but what's the F&O data indicating?
So while the derivative data that we are getting and the cues that we are getting from they are not looking that great, but the hope is that market takes the cues from what our Indian women cricket team has done yesterday evening. And today is the last day of the week and we managed to get back to the level above 26,000. But as far as yesterday's session is concerned, Nifty and all the other frontline indices have failed to hold any recovery, and at the end, Nifty closed below 25,900. For today, factoring the global cues and the US futures, GIFT Nifty is indicating a start with minor gains. Yesterday, we saw FI selling more than 3,000 crore, while DIs continue to be on the buy side. Yesterday, also, they have bought nearly 2,500 crore. In the index futures, too, we have seen FI selling nearly 2,400 crore. Now, long's exposure of FIs has fallen to 17% from the recent high of 24% that we have seen. And also, they have added short positions of more than 10,000 contracts. Now, the range as per options data for Nifty is from 25,600 to 26,200. So yesterday, 26,000 call has seen huge increase in the open interest, but at the same time, premium has seen a sharp fall. On the put side, 25,600 has seen addition of nearly 15 lakh shares in the open interest. At the same time, premium too has increased. So support for Nifty, 25,600, resistance 26,135. For Nifty Bank, support would be 57,500 and resistance would be 58,600. Samant Capital has come out of the band. Apart from this, keep an eye on two stocks. USL has reported strong Q2 earnings, so keep an eye on that. And second only, Cipla is seeing fresh shorts.
Sudarshan, thank you for that update. Take a short break. All the cues from the global markets on the other side. Stay tuned. Welcome back onto Wall Street action. It was a negative session for the benchmark indices led by the Nasdaq, and the losses were led by Meta and Microsoft, which saw declines after their results. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
U.S. markets were down across the major indexes in Thursday trading as some big tech earnings sparked concern among investors. The Dow falling by 110 points. The S&P 500 was down 68, but the tech-heavy Nasdaq took the biggest brunt, losing 377 points. Thursday trading saw a rotation in general out of big tech as investors grew a bit concerned over the increased spending outlooks on AI from both Microsoft and Meta, a concern overshadowing strong quarterly results from both companies. Meta took the biggest hit, down 10%, as investors balked at the company's plan to increase its capital expenditures on the AI race ahead. There was a similar reaction to Microsoft's future AI spending plans, its shares falling about 4% on the day. But there was a bright spot, Google parent Alphabet bucking the trend, up 3% on the day after huge cloud growth for the quarter. The company also hitting $100 billion in quarterly revenue for the first time. And the Los Angeles Lakers officially have a new owner. The NBA Board of Governors Thursday gave unanimous approval for Guggenheim Partners CEO Mark Walter to be the new majority owner of the team. Walter in June agreed to buy the Lakers from the Buss family at a valuation of $10 billion. That's the most ever paid for a professional sports franchise. But this isn't his first foray into sports. He's also the majority owner of the Los Angeles Dodgers, which right now lead the World Series 3-1. That's what's happening here in the U.S. Back over to you in Mumbai.
Bertha Coombs, thank you for that update. Let's now listen into some experts on the latest Fed decision and commentary from Jerome Powell on the policy action in December.
The rate cut in the U.S., though, is definitely a hawkish cut. And I think the language that you saw out of the Fed basically saying a growing chorus, it really put December into question right now. So I think what you're seeing is just the market reaction today is, well, China, there was anticipation of this, but no big surprises. So that's been more of a sell the fact. I think on the Fed, we had thought that Treasury yields were probably about 20 basis points too low. And so you've seen the move. You've seen a move on that. QT ended as we had expected, but I think the language that Powell chose was very blunt, saying that there is a growing chorus. The dissent also from Schmidt was a bit of a surprise. I mean, mirroring the 50 basis points, dissent was not a surprise, but it does put December more into question.
All right. We have 6 weeks. The next meeting is December 10th. I think the next 6 weeks are very important because even though it ends December 10th is 2 weeks before Christmas, we're going to get a good idea about how the consumer is going to be reacting to a number of tariff increased prices from all the goods that they're going to buy for the holiday season. And by the way, whether the government opens or not, and I certainly hope by December 10th it's going to be reopened, but I think they're going to have enough data. I think they have enough alternative sources of data to determine whether there is going to be a slowdown of the consumer. The good news is I think the Fed has our back. They're essentially saying if we do see a slowdown, we will cut.
A couple of things. One is highly unusual for him to be so clear about the next meeting. Normally, they're a little more circumspect, but he was very much clear at pushing back. Secondly, I thought not a total surprise. I think markets had forgotten the September dot plots that showed, roughly an evenly split committee. And after the meeting, a number of the Fed presidents, particularly President Schmidt and a few others, had expressed some disagreement or some concern. So, I think the market, had they really been listening, would not have been as surprised. But to be fair, it is highly unusual for a chair to be so explicit about the uncertainty in the December meeting.
And Dia now joins in with all the updates regarding President Trump in our special segment, Trump Watch.
Good morning. President Donald Trump's administration has agreed to a year-long delay of a sanctions framework that would have dramatically expanded the number of Chinese companies subject to U.S. trade restrictions. Now, in return, China has reportedly paused its latest round of rare earth export controls. As part of the same agreement, Beijing is also committed to purchasing millions of tons of American soybeans through 2028. And now, in a separate development, President Trump said he has instructed the Defense Department to begin nuclear weapons testing on an equal basis with Russia and China. However, both nations have not confirmed any recent explosive tests. Vice President J.D. Vance said that the U.S. nuclear arsenal needed to be tested to ensure it actually functions properly, but did not elaborate on the nature of the tests ordered. Listen in.
We have more nuclear weapons than anybody. We don't do testing. We've halted it many years ago. But with others doing testing, I think it's appropriate that we do also.
Any details around the testing, sir? Like where, when?
We would be. It'll be announced. We have test sites. It'll be announced.
And finally, the White House has announced a record low ceiling for refugee admissions for fiscal year 2026. The refugee admissions cap has been set at 7,500, the lowest in U.S. history. The administration says the move is part of a broader review of refugee and migration policies. That's all for today. Now back to you.
Dia, thank you for that update. Take a short break. Cues from the commodities market on the other side. Welcome back. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Some buying for gold at lower levels, but what else are you watching out for?
Oh, well, yes. For the gold prices after 4 days of decline, $4,000 an ounce come back into the markets there. This is especially after the World Gold Council report, which tells you that the global demand in third quarter hit a record highs, was up by nearly 3%. Much of this, of course, was investment demand. The jewelry demand, including India and the rest of the world, actually has seen a bit of a decline. But the global central bank buying was 28% higher on a quarter-on-quarter basis. And while the other countries continued to buy, and there are 23 countries which have said that they will continue to buy gold, it really has been about Kazakhstan and Brazil now coming back to the markets to buy gold as well. So more and more central banks showing interest in gold buying. Having said that, of course, looking at the strength in US dollar index and perhaps no rate cut in the month of December, that seems to be keeping the prices in check. And that's exactly the point that has led to some profiting in other commodities also. So when you look at copper prices, some decline onto that one as well. But for copper, it also is about the statement coming in from Anglo American and Glencore saying that their production in 2025 has been lower. So is the reason you have copper prices trading firm.
Manisha, thank you for that update. Now, Lenskart's 7,278 crore rupee IPO opens for subscription today and will close for bidding on the 4th of November. Now, the price band for the offer has been set between 382 to 402 rupees a share. The company has raised 3,268 crore rupees from nearly 150 anchor investors. The question, however, is, are valuations comfortable with a post-issue market cap of 70,000 crore rupees? We spoke to the management earlier this week. Listen in.
In the secondary market is the valuation that matters the most. And I'm looking at your numbers. You're seeking a post-money valuation for almost 70,000 crores in terms of market cap. Just basis trailing numbers, you are offered at a little over 230 times price to earnings, nearly 10.5 times sales. Even if you triple your profits from current levels over the next few years, you would be at around 70 times, right? So what I'm trying to understand is how much value do you think personally you've left on the table for people who are entering right now?
I would say that firstly, as a company and as an entrepreneur, our job is to create value for the customer.
Yeah.
Right?
And now increasingly shareholder as well.
Yes. And the shareholder, as far as valuation is concerned, it is what the market decides. Even if we look at the valuation, there are investors who are selling shares, there are investors who are coming in, and they have done a lot of working to arrive at these numbers. All I can say is they'll be very close to comparables. They won't be off. Sometimes when you look at things without looking at the full perspective, they look different. But yeah, be rest assured that everything will be in line with what they should be. I don't expect anything abnormal.
Now, the big update from the Indian artificial intelligence ecosystem is that starting today, Jio users will have free access to the Gemini 2.5 Pro model for the next 18 months. Rashna Dhanrajani gets us more on this.
Right. Google and Jio have teamed up in a move that could redefine the global AI price war. Google's Gemini Pro will now be available for free for all Jio 5G users. The plan otherwise costs about 35,100 rupees for 18-month subscription. But now it will be free with early access starting today for users aged between 18 and 25. Now, the rollout will expand swiftly to all Jio 5G users. Now, the offer covers 18 months of free subscription of Gemini Pro worth 35,100, like I mentioned, which includes unlimited chats with Gemini 2.5 Pro model, 2 terabytes of cloud storage, video generation on Veo 3.1 and advanced image tools on Nano Banana. Beyond consumers, Reliance Intelligence will partner with Google Cloud to expand access to AI hardware accelerators and deploy Gemini Enterprise, which is a next-generation AI platform for Indian businesses. Together, Reliance and Google are pushing to democratize AI access for over 500 million Indians, making this one of the most ambitious tech collaborations yet in AI.
Rashna, thank you for that update. Now, in other news, the centre has notified the appointment of Justice Suryakant as India's 53rd Chief Justice of India. This follows an official recommendation from the current Chief Justice, Justice B.R. Gavai. Now, if the centre is not, Justice Suryakant is now expected to assume charge as the CJI on the 24th of November, as the current CJI, Justice B.R. Gavai, will demit office on the 23rd. Unlike the two previous CJIs, who each had a brief term of about 6 months, Justice Suryakant is expected to have a longer term of over 14 months. He is due to retire on the 9th of February 2027. And lastly, a win that felt bigger than all other wins, a semi-final that felt like a final. We have seen it all in the movies over the years, but on Thursday night, we got to experience Chak De, Lagan, Dangal, all of it in real life. And that is how every single follower of Indian cricket felt last night, as Team India, with their backs against the wall, facing a record run chase in a World Cup semi-final, pulled off a heist in a night to remember against defending champions Australia. Leading India to glory, Mumbai girl Jemima Rodriguez dropped after the first game, returned in the last league fixture, and given the match, given the context, and given the pressure of playing in front of your home crowd in a World Cup semi-final, delivering arguably the best innings she would ever play. An unbeaten 127, very, very ably supported by Harmanpreet Kaur, India's captain, possibly playing her last World Cup, along with a blinder from wicketkeeper Richa Ghosh. With this, the Indian women's cricket team is now in the final of the Women's World Cup that takes place on Sunday at the same venue against South Africa. Well, we have our Sunday appointments booked for sure, and every Indian cricket fan would be feverishly praying that this team, which has often been labelled as the perennial bridesmaid of the game, does turn up on Sunday and give us the honour of addressing them as world champions when we return to you on Monday morning. And that's it on this edition of Power Breakfast from me and the team. Thank you so much for watching. Bazaar Morning Call on the other side.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome. You're with us on Bazaar Morning Call. We're coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay with me, Nigel D'Souza and Manglam Malu. And while, of course, the boys are pumped up because it's Friday and we're finally getting to the end of the week, it's the girls on top, guys. What a game. I don't know.
Girls on top. You know, I was looking...
I got just the last bit of it, the last few overs.
I was looking at all the numbers yesterday that came in from all the consumer spaces, etc., all the results, but the most important number for me was 341. We got that, and we got that in so much style. A big shout out to, you know, all the performers and all the supporters, and Jemima, what a player. Jemima Rodriguez, I mean, when the time came, she went ahead and made, you know, the innings of a lifetime.
Well, goosebumps even now as you'll talk, right? What an innings. You know, I saw a majority of that game and champion stuff, you know, didn't let the head go down, had our chances, took advantage of it. And that post-match speech as well. Humility, telling you about pain that you have gone through and then coming out on top, you know, because the road is never easy. But when it's tougher, the success that you enjoy at the end of it is even better. And kudos to this young girl and kudos to the team. We have our hands full, Manglam. I'm sure you remember November 2023 when the boys didn't make it past the final. I think the girls are going to go ahead and avenge that loss. And in fact, November, we bring home the cup again.
We bring home the cup again on November. There won't be any heartbreak this time around because the team that caused the heartbreak has been taken out yesterday. But more importantly, the team that caused us a lot of victory and a lot of joy, India versus South Africa. That happened a few months after that in the T20, and we're meeting South Africa again in DY Patil. So, Navi Mumbai, November, let's get it.
But guys, beyond the stats that you all are talking about, I mean, just sheer, I'm no feminist, I don't claim to be one, but just the sheer power, 50 overs of a game, endurance, beating the top team of the world. It's a huge moment for women in sport and definitely a huge moment for women in cricket. So absolutely, 3 cheers.
So we've got our hands full over the weekend, but I think we've got a market to look at. And I wasn't there yesterday. Don't worry, guys. I mean, I'm back today. I think the market said, let's wait for those fresh all-time highs that, you know, young bullish man is not there. But Surabhi, let's go straight to the action.
Okay, so let's straight away get to it. Starting first with the global cues. So what happened? Overnight, Wall Street had a bit of a quiet session. In fact, there was a fair amount of profit taking. If you're looking at the Nasdaq, was down about 1.5%. S&P fell about 1%. And the Dow was slightly lower. Now, the reason behind all this is earnings and a slight disappointment that obviously has come in from some of the Magnificent Seven. Yesterday, Meta's shares were down 11%. That's the biggest loss in the last 3 years. And why? Because Meta is just spending so much on, you know, AI capabilities. They've increased their capex, to hold your breath, $70 to $72 billion for the year. I mean, that's just a sheer raw power of money that they're putting behind technology. And in the near term, obviously, that's a concern for shareholders. And it revived that debate around whether we are in an AI bubble or not all over again. So that was one part of it. But if I talk about some of the other earnings, they were more heartening. Amazon, for instance, was up 13%. The market was delighted with the way their cloud revenues are shaping up. There was 20% rise in the cloud computing revenue. So that worked very well for the stock. Apple's numbers were pretty decent. Apple was up 3%, continuing to chug along with those iPhone sales. So it was all about tech earnings last night. Netflix is doing, I think it's a bonus that they're doing, and a split as well. So that stock was up about 3%. Now coming to, you know, tariffs and what the final contours of the US-China deal are like. So we know that US has agreed to cut the fentanyl tariffs by 10%, and that's straight away, effective immediately, which takes the overall effective tariff on all Chinese goods coming into the US to 47%. So that crisis has been averted. And in lieu, China has agreed to hold back on the export controls of the rare earths by 1 year. So those are the details of the deal that was announced yesterday. Not too much action in the money markets, but yes, on the yield side of things, The 10-year continues to inch higher. It's at 4.1% because of this uncertainty around the December rate cut, whether it's coming or not coming. And that uncertainty, of course, was unleashed by the Fed chief at the end of the policy-setting meeting earlier this week. The dollar, by the way, has quietly inched to near 3-month highs, highest level since August, and it's at 99.5 now, the dollar index. So keep that in mind as well. But while we look at all of these global cues, I think the bigger driving force for our market is going to be, again, stock-specific action and earnings. We've spent the week in largely a range. Those all-time highs have been elusive, but it's not like the market's quiet. There's tremendous stock-specific action. And today, amongst all the, the flurry of earnings, I'll watch out for 3 names very carefully. One is, of course, ITC. It's a large heavyweight. And we'll see if the market is happy with the performance of the cigarettes business, which looks good, actually, 6% growth over there. Bandhan Bank is a big disappointment in terms of P&L. We'll tell you why as we go along. And there is, of course, Swiggy. Forget the earnings. Swiggy is raising a lot of money again. 10,000 crores is what they've got on their mind. So that's something that we'll discuss and debate as we go forward. And finally, speaking of consumer and consumer tech, today is the big day. Lenskart, the debate around valuations continues to rage on social media, in real life and everywhere. In the meantime, they've managed to raise a pretty decent amount of money from anchor investors. So it's all very well managed. It is probably the most high-profile IPO we've had in the last many months. So that's another big talking point today, and we'll get to it in just a bit. But Nigel, first, the technical and F&O cues that you're looking at.
Well, the FIs, they seem to have taken their leg off the pedal. The last series itself, they were not big sellers, but last couple of trading sessions, again, they've turned into sellers. So we'll have to see whether or not this trend is likely to continue, or is just, a flash in the pan with regard to the selling, and they return back to their neutral or their positive stance. That's the hope, because it's clearly weighing on the markets. Yesterday as well, there was a net sell figure if you look at the DI and the FIs put it together. What about in the future space? Well, we were saying, right, that we would like some shorts in the system. They've granted that wish. We've got 10,000 short contracts that have got added. Short positioning added around 83% approximately. So some shorts in the system. I like it. The markets actually, at the start of the series, we made this point, that shorts are relatively lower at the start of the November series in comparison to October series. But we could miss it. So good to see some shorts getting into the system. When you just pull up, the client positioning, they have added some long positions since the start of the series, and the FIs, they've added some short positionings. This is the ideal combination. No worries if it goes in this direction as well, with the clients adding longs and the FIs adding shorts. Moving to the PCI, that had gone dancing away to the upper end of the range. Now it's come back down to the lower end of the range. So that as well is positive, 0.75 odd. Why did it come down? The call writers, they feel that they're in the game. If you look at the 26,000 call, 25,900 call, big open interest built up on both those two strikes, but there was some action on the lower level put as well. I think the markets are in a bit of a range in the near term till we get past the upper end of the range. So the recent high from 26,100, that's going to be the first level of resistance, while the 26,300, that appears to be the major resistance. If we can get past that, we're in for a bazooka move on the upside. So that's going to be important. However, this market, the trend is up. Still the trend is up, I would say. 20 DMA is important, that 25,400, 25,500 odd mark. Till that holds out, you'll have to say that this trend that we started still appears to be intact, and the bulls have some unfinished business at higher levels. And the Nifty Bank will have to play its role, right? It's normally a good month. We have seen that the Nifty Bank has been moving with good amount of strength, and there's a hope that credit growth will actually pick up. So this 57,500 odd mark, look at the options data, look at the recent low as well. That becomes the first level of support that you're looking at. Well, in terms of stocks that we're looking at, Saman Capital, that comes out of the F&O ban. So that normally calls, for a stock to be in focus. So last couple of trading sessions, a little bit subdued, but I think the trend is up. And I think till that 25,500 odd level holds out, I think you'll have to bet on that unfinished business at higher levels.
All right, Nigel, take that point. The trend is up and there is unfinished business at high levels, though we'll have to wait some triggers coming in for us to actually go past those higher levels as well. So could those triggers be global or local? Neeraj Seth, the founder and CIO at 3R Investment Management, joins us now. We've been doing well domestically, Neeraj, but the uncertainty of the globe keeps us on tenterhooks and perhaps just a little away from all-time highs. What is your sense on, what the environment is right now in the globe with the kind of money that is being deployed towards AI? No, play in India, so to say, about this, and the tariff uncertainty that continues.
So I think we are moving towards maybe a slightly lower uncertainty, and there are three parts of it. If you think about it, you have the trade uncertainty, all the tariff discussions. So last 1 week, President Trump's Asia trip, I think on the margin was on the positive side. Not everything is resolved, not even close, but the direction of travel certainly actually showed some de-escalation. From a global growth perspective, there's certainly you're seeing slowdown, but you're not seeing a sharp slowdown. So I think there's certainly a support factor there. And lastly, from a US policy standpoint, obviously the markets were a little bit disappointed with the comments from Chair Powell. But the fact is, this is what one would have expected, a rate cut with some uncertainty about the December cut, which is going to be data dependent. And you're not getting a lot of data right now out of US, but all together, I think we are still in an okay environment from a global perspective, which is, to your point, could be supportive for India. And the last point is the India trade deal. I think it's, if I look at the cues from the last 1 week, there should be some traction there in the coming days and week.
So just a matter before we hit all-time highs in India.
Well, there's a potential now, as you were showing the data, the FIIs have been on the margin selling, slowed down selling again. And there's an additional element there, which is the competition for capital. When you think about Asia Pac, you have obviously the Chinese market doing well. Japan is actually getting traction. The KOSPI in Korea has done exceptionally well this year. So there's a little more balance, but on the margin, the FIIs selling should continue to slow down, remain muted with some potential for inflows if we see the further reversal in the market on the upside.
Well, hi Neeraj, morning, good to see you in. And you mentioned this closure on 20 sessions or so ago, and that's the way it played out, right? The FIs have been sellers. This is a case where they could actually turn neutral. That's what played out. But as you said the last time around as well, earnings growth, that needs to come back. Then we could see the gush of inflows. But going by what you're saying, Neeraj, I think you're talking about that Trump is likely to have peaked out. We are likely to have seen peak Trump tariffs. Is that correct?
I do believe so. The direction clearly is softening.
All right. And what about the Fed? What do you make of the Fed action, yesterday with regard to that cut? And what's the trajectory they'll follow going ahead? And if you could also come in on gold. I think you were quite positive that gold could continue to trend up. What's your view out there? Fed action and gold. Please go ahead.
Sure. And by the way, these two are somewhat related.
Yeah.
So first of all, the Fed action, it was very much in line with what I would have expected, a 25 basis points cut with data dependency for future trajectory. I still think the Fed has room to cut another 50 to 75 basis points before they pause. So December is still very much in play. But in absence of data, the point about data dependency will stay true. I don't think that's changing. So on the margin, still in the camp that you will see further cuts from the Fed. And with regards to gold, interestingly, last time when we were chatting 20 days back, gold had crossed 4,000. We again crossed 4,000. So we did a little bit of a round trip with a technical correction. Structurally, from a medium-term perspective, I remain positive on gold. As I said, it is taking the place of an alternative currency for central banks and savers. I think there is a good story unless we see significant shift from a global monetary policy perspective. So if the Fed doesn't cut rates and the dollar keeps strengthening, then the dollar gold, obviously that cross can see gold coming lower.
Neeraj, hi. What about IPOs in India? It's a red hot market. There's never a dull moment. And there's always a fierce debate. Today's a big day as well. Lenskart is one of the best known consumer brands when it comes to eyewear. I don't know if you're participating in this one, anything else. What have you been doing, if anything at all, with the IPOs here?
We're less involved on the IPO side, but just in terms of broad market backdrop, I think India is actually going through the phase of a lot of the financialization of the system. And in fact, probably the only country I can see where the IPOs are going through is a reflection of the investor confidence in the market. So you certainly are seeing that uptick. And this also is another factor when you think about it in terms of the new equity issuance and the IPOs, which will keep bringing the FIIs back in focus as the markets turn.
Okay. All right. We will see how it goes. But for now, at least, the deals market on the primary side and even secondary market deals has been an absolute frenzy in an otherwise range-bound year. Thank you so much for joining in. Good to have that perspective from you. Have a great weekend, and we look forward to chatting again soon. Well, with that, let's quickly tell you what all we're covering on the show today. Plenty of interactions coming up at 8:35. Param Desai of Prabhudas Leadhar is going to join in. We'll talk about some of the top trends in the pharma sector. Remember, there was big news yesterday. Dr. Reddy is hitting a roadblock with respect to the semaglutide launch in Canada. And there's a management transition at Cipla, so lots to discuss with him. At 9 a.m., we'll have Avnish Roy of Nuvama joining in to talk about some of the key FMCG numbers that have come out. Dabur and ITC both reported yesterday. We'll ask him how he is reading through the consumer trends. Pradeep Bhattacharya joins in at 9:20. He's from Edelweiss and he's our market master of the day. At 9:30, we are in conversation with the management of Indegene, talk about their Q2 numbers. After that, the management of Canara Bank joins in. Very good performance by Canara Bank in the second quarter. So we'll find out how the second half is looking. Mr. Raju will join in at 9:40. And at 9:50, we'll be in conversation with the top team at Swiggy. Numbers look pretty steady for the second quarter, but more interestingly, they're out in the market to raise 10,000 crore rupees. So what's behind that? Rahul Bothra will join in with some perspective. Towards the end of the show, Lata will be in conversation with Pratim Sengupta of Bandhan Bank to talk about the bank's Q2 performance, which has been a little sluggish to say the least.
Time to slip in a short break. Got a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. We're looking at ITC, NTPC, Swiggy, United Spirits, Pidilite, DLF, Naveen Fluorine and Emphasis. Long list of stocks reacting to positive news flow. On the flip side, Manappuram Finance as well as Bandhan Bank could be opening up in the red. Slip into that break, come back, we get into further detail on all of these names. Don't go anywhere.
Welcome back. You're watching us here on Bazaar Morning Call. Let's get it stock specific. Our entire team is standing by with the list of CNBC-TV18's top stocks for the day. I'll start with ITC. Reported its numbers last evening and it's a decent set that has come in from ITC. The cigarette volume growth coming in at 6%. The street was expecting 5 to 6%. So that's a positive. FMCG revenue growth, that was a surprise because it grew at around 7%. The street was expecting just 3 to 4%. And if you take, the notebook business out, which has been facing structural issues, the FMCG revenue growth is actually 8%, which is much higher than all the other peers that have reported their numbers. What is not good? The agri business, that has seen a revenue decline of 31%, was impacted by a seasonality and a high base. And more importantly, the company said value-added exports were impacted by geopolitical uncertainty and US tariffs. That does not account for much in the ITC SOTP. What's good is the cigarette business and the FMCG business, and that's exactly what will take the stock higher. On a reported number basis, 18,000 crore revenue, the street was working with 19,000 crore. That miss is largely on account of the agri business revenue miss. But EBITDA, 6,250 crores, largely in line. Net profit at around 5,200 crores, much above street expectations, going with green for ITC. But from ITC, let's go on to NTPC. Vivek, what do you have?
The NTPC, this particular quarter Q2 on account of rains was expected to be a muted quarter for all utilities. In line with that, it's a subdued quarter as far as NTPC is concerned. But the conference call takeaways indicate that commissioning plans are on track. Valuations are cheap, and also when you're looking at the tariffs on a year-on-year basis, they're actually improved. Along with that, cheap valuations is something that should support NTPC stock in the session today. So revenues, looking at came in at close to 39,166 crore versus a poll of slightly over 39,050 crore. EBITDA coming in above the 10,000 crore mark, and margins quite strong at 25.6%. Profitability exactly in line with our poll, 4,650 crores. Now, talking about the generation as far as H1 was concerned, that fell 6.5% on account of subdued demand. PLF stood at 66.1 versus 70.6, again indicating that demand has ensured that actually there has been subdued demand across most of the categories. Average tariffs has actually gone up and has come in at 4.9 kilowatt hour. Now, talking about the key takeaway, capacity addition targets for FY26 has been maintained at 9 gigawatt. That is a key positive takeaway, number one for NTPC and also for other suppliers like BHEL, indicating that the Lara Ultra Mega Thermal Power Plant is on track.
Okay, all right. Thanks a lot for that, Vivek. Mangalam, coming back to you. Swigging it away. How were the results?
Well, the most important number from Swiggy was not the reported number. It was the QIP that they are planning. A 10,000 crore QIP is, what the management is planning. The board meets on November 7th for that. So that's the important part. Apart from that, if you look at the numbers, 54% growth in the reported revenues, EBITDA loss widened. And that was, the as per script because the companies are investing in quick commerce. The other things that if you look at, the one thing that stood out for me for the last couple of quarters, in food delivery, they've been doing better than Eternal or Zomato. Largely telling you that they're gaining market share in the food delivery business. However, quick commerce, they are on their path. Blinkit is much ahead as compared to Instamart, but 107% growth versus 152% growth. They're adding dark stores as well. The internals of the quick commerce business, average order value grew by 40%. And contribution losses declined by 30%. So that's a margin of close to minus 2.8%. But importantly, versus last year to now, non-grocery is at 26% versus just about 8%. So obviously that's margin accretive and that would be a positive. And the final thing they'll be looking at, their cash on books right now is 4,600 crore rupees. They've announced a stake sale in Rapido, for which they will get 2,400 crore rupees. So that would be about 7,000 crore rupees. And now with the QIP that comes in, their cash balance will be around 17,000 crore rupees. How does that compare with Eternal? 18,000 crore rupees. So it brings their war chest at par with Eternal and in fact a little more than Zepto as well. So all these factors would keep them in the stead for competition ahead, and that's something we'll be watching out for.
I mean, that fundraising was really something that caught my eye as well, and we'll quiz the management about it because they've come to the market, now they're already looking at more equity raising, but is it just a sign of things in the quick commerce arena? Rahul Bothra will join in at 9:50, promises to be an interesting conversation, so do stay with us for that. For the time being, let's head to the financials and figure out how the numbers look like. Gaurav is going through a slew of earnings, Manappuram Finance as well as Bandhan Bank. Give us the highlights, Gaurav.
Yes, both the companies actually reported weak show when it comes to second quarter. First, let's talk about Bandhan Bank. When we look at the numbers, net interest income declined almost by 12%, PPOP that declined almost by 30%, and when it comes to profit, that declined almost by 88% on a year-on-year basis. And I'll tell you why. When we look at net interest margins, now they have contracted almost by 60 basis points sequentially. Now this was something which was not factored in by any member on the street, and the reason being that there is change in asset mix and at the same time some impact from the repo rate cut. Second is that when we look at asset quality, we did not see any kind of easing of asset quality. In fact, the credit cost that remained stable, slippages remained stable. In fact, when we look at the EEB portfolio, which is a microfinance portfolio, we saw some stress in the SMA 0 book as well. And this was because they said that the number of days were lower because of the holidays that they had in the fag end of second quarter. Apart from that, when we look at brokerages, they have also reduced their target price. We have got in the likes of Investex, CLSA, Nuama, all have written bearish note on the company. When we look at Manappuram now, here also we did not see any great set of numbers. In fact, the AUM that remained flat on a year-on-year basis. When we look at the gold portfolio, that actually did well. That increased almost by 30%, but Ashirvad, that has declined almost by 50% on a year-on-year basis. Apart from that, when we look at the numbers, net interest income that declined almost by 18%, PPOP declined almost by 35%, and PAT that declined almost by 62%. All of the numbers were a bit below Street's expectation. When we look at yields now, that was also another surprise that came in. Yields have come down to 19.7%, and at the same time, management also said that it will remain somewhere in the range of 18.5. So definitely weak set of numbers, not great set of commentary as well. And on back of that, we will be watching out on both these companies today.
All right, we will be watching out for both these companies today. In fact, management of Bandhan Bank will be joining us today at 10:15 a.m. to talk about their second quarter numbers as well. Thanks a lot for putting those numbers up for us, Gaurav. Let's talk about the other two sets of numbers that have come in. United Spirits and Pidilite, both of them solid. In fact, United Spirits a lot more. And this was one of those stocks that we had pointed out as one of the stocks to track also because the last couple of trading sessions it has been doing well. We've seen good numbers coming in from the likes of Radico, etc. And United Spirits, people weren't expecting as much, largely because of their Maharashtra exposure. But the Andhra tailwinds, they continue to boost performance. And a favourable base has actually offset the Maharashtra policy changes. And more importantly, better product mix and benign raw material environment has boosted their margin. So let's put those numbers into perspective. The street was working with a number of 3,080 crores on the top line. The company has reported 3,170. 552 crore EBITDA, the company has reported 672 crores. And the net profit has been a massive 100 crore beat versus expectations. So 472 crores versus 387 crores. If you look at these numbers on a year-on-year perspective, and that's when you get the story, 11.5% revenue growth, 32% EBITDA growth, and 41% profit growth. P&A volumes up 8%, expected 6 to 7%. Popular volumes up 6%, expected 6 to 7%. I'm sure a lot of you guys contributed to that because, you know, the management has been saying we don't want people to drink more. We just want them to drink better, and that's good for their margins as well. But Pidilite, again, Fevicol ka jod, you know, it's consistent, solid performance. 3,500 crore revenue, EBITDA 850 crore, bang in line with expectations. Net profit 585 crore, again in line with expectations. But year on year, it's a 10% growth across all parameters. Consumer business volumes grew 10.3%. B2B volume grew 9.9%. And the company is saying it was partly impacted by lower exports. But 9.9% versus expectations of 9 to 11%, no problems whatsoever. And they expect the operating environment to improve out here as well. So solid performance coming in from Pidilite, consistent and very good from United Spirits.
When you get 9 to 10% growth from a consumer company, you take it. You don't ask questions, you just take it.
And the big takeaway actually from what Mangalam said is, looks like people are drinking a lot of whiskey because United Breweries was...
United Breweries wasn't very good.
Was very good.
And because it's the weather, right? Nigel would know this a lot better. For me, it's the pakoras that I eat when it rains. But when extended monsoons, you drink whiskey and you don't have as much beer. So I guess summers is when beers are more sold.
Let's go to the next.
Let's go on.
Let's go to the next set of numbers then. Thanks a lot, Bagla, for that. Sonal joins us to tell us about Navin Fluorine and DLF. Sonal, morning.
Good morning, Nigel. Well, strong set of numbers coming in from Navin Fluorine. It was a top-down beat. Revenues up 46%. EBITDA almost doubled on a YOY basis. We had margins coming at 32.4% versus 21%. Profits also higher at 148 crore rupees. All the segments did really well. Their HPP segment 38% higher, specialty chemicals 35% higher, CDMO business saw a growth of 98%, and in the conference call, management mentioned that they are upping their guidance for FY27 in terms of EBITDA margins to 28 to 30%, and there is an upward bias risk to it as well. So strong set there. DLF also good bookings this time. They have already achieved 72% of their full booking target for the year at 22,000 crore rupees. So in the first half they have already achieved 72% of it. Pre-sales are up 526% on a YOY basis. Of course, this is on a low base, but this was aided by the Mumbai project launch, which saw good response. Customer collections were also good, 13% on a YOY basis. The conference call is today though. We'll get more details, but going with green on these numbers.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Rima. She's here to tell us about Emphasis. Morning, Rima.
Hi, good morning. Steady set of numbers from Emphasis. The company reported a 2% revenue growth quarter on quarter. Year on year, it's about 6%. EBIT margins stable, unchanged at 15.3%. But the company commentary is positive. For starters, they're saying they expect 2x the industry growth. So doubling the industry growth because H1 has been strong and the deal wins have been very robust. Margin guidance remains unchanged at 14.75 to 15.75. The deal wins in the first half of the year are more than the deal wins that they had in the whole of last year, and plus the pipeline is at a record level. So the commentary is positive, and Q2 has been a stable quarter for the company.
All right, Rima, thanks a lot for that. In case you missed it, here's a quick recap of all our top stocks. The ones with positive news, we have ITC, NTPC, Swiggy, United Spirits, Pidilite Industries, DLF, Navin Fluorine, Emphasis. But the ones with negative news flow, we have Manappuram Finance and Bandhan Bank, all of them on the back of weak results. Let's get in Manisha Gupta now for a roundup of all the action coming in from the commodities and currency market. Manisha, good morning.
Thank you for that. Well, I'll start with the gold prices, where after 4 days of decline, we're looking at some buying coming back. So $4,000 an ounce is back on your screens. Remember, we did see 39.25 off a low in the markets yesterday itself. Well, this has to do with the World Gold Council report, which says that in the third quarter of this year, the global gold demand hit a record high on a quarterly basis, up by nearly 3%. Within this, it is the central bank buying, which has gained up by 28% on a quarter-on-quarter basis. Almost nearly 23 countries have continued to say that they would continue to buy gold, and Kazakhstan and Brazil is an addition to that. The jewelry sales, of course, including India, have been weaker in the previous quarter, but the investment demand absolutely rocking there. The other thing I want to keep a focus on is the base metal prices, where we have seen some profit taking. This is because of the strength in US dollar, with Powell's statement saying that December may not be a rate cut. That's what's bothering the markets. But having said that, the kind of supply declines, mine disruptions, and the fact that you're also looking at US and China truce in sense of trade agreement there are some of those supportive factors. All in all, October is going to be a very strong month when it comes to base metals as a space.
Okay, all right, got it, Manisha. Thank you very much for that. So those are some of the important commodity cues for the morning. We'll take a quick break. On the other side, we'll have Siddharth Khemka of Motilal Oswal Financial Services joining in. We'll talk about the flurry of earnings that we've seen overnight, plus some of the other interesting stocks for the day.
Welcome back. Hope you're having a good morning. As promised, we have Sid Khemka, Head of Research, Wealth Management at Motilal Oswal, who joins us on the show. Hi, Sid. Good morning. Good to see you, Ben. Let's talk about Swiggy. You all have been positive on this space. How do you read those numbers and preference between the two, Eternal as well as Swiggy?
Hi, good morning, Nigel. Glad to be on the show. I think if you look at the key internals of the numbers between Swiggy and Eternal, I think Swiggy came out with a good set of numbers, a better set of numbers. We are seeing that the cash burn has come down. The quick commerce numbers are seeing sharp improvement, both in terms of the average order value, the contribution margin that has seen us that is witnessing an improvement. And I think overall they are now entering a phase of profitability. The management is guiding for the EBITDA break-even by the first quarter of FY27. So overall, what we see is that while the talks of competition is coming back, but it may not happen in the way we saw in the past. There is a calibrated expansion that they are doing. Plus, the capex that has been done in the recent past, the new dark stores, that will start contributing over the next few quarters. So overall, we believe that this is a company which is now entering the phase of profitability, supported by an operating discipline, improving network efficiency, and the combination of the steady food delivery growth, rising Instamart order values, and the easing fixed cost drag. That makes us positive on Swiggy. We have a target price of 550, giving an upside potential of 31% from current order levels.
Okay, 550 on Swiggy. Since we're talking about new age companies, these days most IPOs that list, and we were having a laugh on this yesterday as well, everything that lists is a tech company these days in India. I mean, you have a computer, I think you become a tech enabled or tech focused company. But jokes aside, Lenskart, Siddharth, big debate raging. Which side are you on? Subscribe or not?
Yes, good morning. I think that debate is continuing. So while we like the business model, the growth, and whether you can add that digital thing or not, but I think it's definitely a new age business and e-commerce business. The growth going forward is now largely, I think, is being driven by the offline store. So you may not call it as a pure digital company anymore. So as I said, the debate is on whether the valuations justify the future growth. But one thing is for sure, they've built a good brand, they've built a good business model. Online and offline mix is pretty well. We saw that with the same with Nykaa, that a pure digital model, especially in the consumer business, may not do that well in a country like India. So you have to have an offline presence as well, where the consumer can come, touch and feel.
No, Siddharth, no one's debating or arguing against the business. I think, most of us have been probably customers as well at some point in time. No one's arguing with the experience of the business. The only argument is on whether, 200 plus times PE is justified. I think the so-called grey market is indicating that there'll be a 40-50 rupees pop on top of that 402 issue price. The question is, I mean, is it long-term wealth or not? Once all these anchor investors go, when the lock-ins end, what happens then? I mean, if someone were to ask you, I need a great long-term portfolio idea, 3 years plus, should I subscribe to Lenskart or not? What would you say?
So right now, Surbhi, I would avoid, as you rightly said, the valuation is still high. I think there is a lot of hype and a lot of investors have gotten, big names have gotten, and hence you could see that pop. But I think the next 2-3 years, the profitability, the growth, sustainability, that could determine. And we have seen some of the other companies, they have already listed and have gone through the grind. And now we have a clear path to profitability, clear path to growth. So a clear answer is no. Definitely, we'll have to wait for a few quarters of delivery and then we see whether we have a positive view. But at current juncture, I think there is too much of hype in terms of the valuation and growth that the company is offering.
We take that point entirely. At current juncture, we will obviously have to pay a little more to enter, if at all, given the valuations. But important part would be post-listing what their path to growth would be, and then the street would realign their estimates on that as well. But speaking about realigning estimates, something a lot of the pharma analysts would have done yesterday for some of the semaglutide expectations that they had as well. Param Desai, the analyst at Prabhudas Lilladher, joins in. Param, among the top losers yesterday, we had the name. What do you make of the kind of shift that we will see for semaglutide for Dr. Reddy's in Canada, and how much of that is factored in right now after the fall yesterday?
Good morning. So if you see semaglutide, big opportunity for a Dr. Reddy, and that is one of the key growth driver to replace the price erosion of the Revlimid. So in my view, it's a temporary glitch. They will be basically, they already have got the reviews in the past, so no additional studies are required for that. So in the best case scenario, in our view, I think they can launch the product in the next 5 to 6 months if all goes well. So far, not any generic has got an approval in the Canada. So that's a good sign. I think some of the generic guys have a TAD in Jan 2026. So if there is not much prolonged delay beyond March, then it won't have too much of impact, and Dr. Reddy also will be in the first mover kind of thing. But anything delayed beyond March 2026, I think yes, then it will hurt, and we will see the estimates going down.
Okay, so that's Dr. Reddy's. Param, just to complete the point, I mean, would you say this is just a transitory hiccup for Reddy's, or is it materially altering the course of the earnings scale-up that you were factoring in before this?
I believe it's a transitionary thing, because it's not that they require additional studies and all that stuff. It's some additional clarification has been asked by the agency. So the thing launch will happen. I think it's a question of whether it will take 3 to 6 months or it will take 9 to 12 months. That is the key thing to watch out for. If there are 2, 3 more generics before Dr. Reddy come into the market, then yes, then this will be a bit negative.
All right. Hi, good morning, Param, and good to see you, Ben. What do you make of Cipla as well, the results and the news flow? Mr. Vohra's moving on. Your take on it?
So earnings were pretty much largely in line. Yes, Mr. Umang had been a key personnel in driving the Cipla's growth prospects over the last, say, several years. But I think, in my view, I think Cipla is a large institution, and Mr. Achin, who will be replacing, when he was in part of the Cipla for a reasonably good amount of time in handling the India part of the business, and is a global CEO. So I do not, it's more of a sentimental, say, negative. I think from an earnings perspective, I do not see this transition impacting the say profitability or EPS.
All right, we take that point. Thank you so much for joining in. And just before we let you go, do you track Shelly Engineering as well? Or, I mean, would you have a view on some of the second order impact because of the semaglutide pens that they make for Dr. Reddy's?
No, we do not cover Shelly Engineering.
So Param, leave us with some top ideas, or even from an earnings perspective, second half companies that can perhaps really show the best growth. Which are the top stocks for you at this point?
Yes. So on the pharma side, largely Sun Pharma, Lupin. That's our top picks on the generic side. On the slightly more on the domestic pharma, Ajanta Pharma, Eris Life. These two are the preferred names on the slightly tilted towards the domestic pharma. And on the hospitals, we are very constructive on the space.
Okay. All right. Got that, Param. Thank you very much. Quick conversation today. But thank you for the perspective on some of the key stocks that have been in news from the pharma basket. Well, we'll take a quick break on that note. On the other side, we'll have the technical setup coming up. Shrikant Chauhan and Mitesh Thakkar will join in with today's trading calls. Welcome back. Let's just quickly glance across Asia and maybe we can get the implied open up. The bulls have had to wait all through this week. The all-time highs have been fairly elusive. So, it's a fairly mixed picture across Asia. Don't have too much of clarity. The Japanese market is roaring away. The Nikkei, by the way, is up 1.2% right now, chugging along to the 52,000 mark now. Implied open for us. Let's get that up as well and see how it's doing. The Chinese markets, mainland China, Hong Kong, they're all down. Implied open is doing nothing. It's just 1 point, hardly 1 point up. Okay, so against this backdrop, let's continue to focus on some more stocks and company-specific action. Reliance Industries has tied up with Google to offer free Gemini AI access to Reliance Jio users. Rima is here with more details. Rima, tell us, do all users get it? Is it for a certain category of people? How does it work?
So this is indeed very exciting news for the 500 million plus Jio users, because Reliance Jio has tied up with Google and they will be offering free Gemini AI access to all of Jio users. It starts with a younger cohort, 18 to 25, but you get access to 18 months of Gemini AI, which is otherwise priced at $35,100 or nearly $400 million. And with this, you can create videos, you can create images, and you also get access to Google's 2 TB cloud storage. But there has been this race where global tech companies are now trying to woo India's internet AI users. We have more than 1 billion AI users. So Perplexity tied up with Bharti Airtel. Very recently, OpenAI said that they will be offering their ChatGPT Go, which is a lighter but a paid version, free starting November. So, the question is, why this gold rush to capture India's internet users? For starters, as I said, we are the largest growing digital population. If you give free access now, it builds that habit. It gets you locked into the entire AI ecosystem, and then companies benefit by getting in the data from diverse multilingual market, which can help improve their AI modeling. And if you partner with telcos like a Bharti Airtel or Reliance Jio, you don't have to spend on marketing. But this Google Reliance Jio marketing partnership extends beyond offering Gemini AI, which is of course the big news, but they're also working together to provide Indian companies better access to Google's special AI chip called Tensor Processing Units. That's the second, the second layer of the partnership. And the third one is Reliance Intelligence will be helping Indian businesses use Google's AI agentic platform called Gemini Enterprise. So, as I said, very exciting news for all Jio users.
All right, good news for all the Jio users, but the big movers yesterday, Hormaz joins in with the ones that saw particularly heavy volumes and something that stood out from the delivery data.
Morning, Manglam, and mostly earnings reactions, a lot of them on that. That Revenues Tech or Ixigo at one point was down almost 20%, still closed around 15-16% lower. And if you take a look at the volumes, it was the biggest single day fall on record, of course. The volumes were the highest in the last 4 months. We had almost 2.5 crore shares that were traded on Ixigo yesterday. The 20-day average is around about 45 to 46 lakh shares. And out of those 2.5 crore shares, 84 lakh shares were marked for delivery. Here, the 20-day average is only 13 lakhs, so almost 7 times the 20-day average delivery volume on Ixigo in yesterday's trading session. The other one that fell yesterday was Shaily Engineering, and in proxy to what happened to Dr. Reddy's yesterday, there's the biggest single day fall in over 3 years now. The volumes were the highest in over a month. They had more than 15 lakh shares that were traded. The 20-day average is close to 3 lakh shares, and out of those 15.5 lakh shares, 5.5 were marked for delivery, and the 20-day average here is less than a lakh. It's only 95,000 shares. And the stock is at a very key support level of 2283, which is the 50-day moving average. Why is that significant? Is because it has not closed below that level since August. Now, Chennai Petro has had a very good week. It has had 2 days of stock movements of 9% or more. And 3 out of the last 4 trading sessions on Chennai Petro have seen more than 1 crore shares that have been traded on the stock. Even in yesterday's session, we had 1.7 crore shares traded. 20-day average is only 34 lakh. And the delivery volumes are 25 lakh shares mark for delivery. The 20-day average is 7 lakh shares, and it's had a fairly good year as well, has Chennai Petro. It's up 42% on a year-to-date basis. And lastly, Sagility is the 8th day of gains for the stock yesterday. It's up 20% during this period, and the volumes in yesterday's session were the highest since its listing. Incidentally, the stock listed on the 5th of November last year, so it's almost a year to Sagility's listing as well. And 55 crore shares were traded yesterday. The 20-day average is just around 2.5 crore, and out of those 55 crore, 10.5 crore shares were marked for delivery. The 20-day average here just above a crore.
Right. Thanks a lot for that, Horma. So those are a bunch of stocks. A couple of them that stood out from numbers yesterday. Sid Khemka still with us. United Spirits, what a solid set that came in from at least, the premium volume part and also the operational performance. The company reported 41% jump that we saw in their profitability as well. What do you make of this one, Siddharth? And even Pidilite, consistent, solid 10% volume growth for the last many quarters, as many quarters as I can remember.
Yeah, hi. So I think United States, we saw a strong beat across in terms of performance and all-time high margins. So I think the efforts that the management has been taking in terms of growth as well as premiumization, that is playing out well. The mix that is improving, and so now you have the P&A revenue, which is now 90% of revenue mix, and the popular segment which has come down. So that is aiding margins. I think the growth was also supported by re-entry into the Andhra Pradesh and strong performance of innovation launches, and so that is something that they have continuously done. So I think slowly and gradually the efforts are paying off in premiumization, margins are improving, and growth is coming back. So some offset of the Maharashtra adverse policy changes is being taken care of by re-entry into a high growth market like Andhra Pradesh. So overall, I think we remain positive on United Spirits, although valuations are a bit on the higher side, but that has been the case always. So that's the view on United Spirits. Pidilite, I think a steady, consistent volume growth. The consolidated revenue grew by about 10%. Underlying volume growth that was pretty strong at 10%. And it is good to see a company like Pidilite again showing strong performance, a consistent compounder in the past. The again challenge here is that with this kind of growth, net profit growth of 9%, valuations which are still on a 1 year forward about 50-60 times. I think we remain neutral, but nonetheless strong numbers from Pidilite.
Okay, all right. Sid, I want to ask you about a couple of other numbers. I think Gravita is something that you track, right? The stock actually has come off drastically from the top, but these numbers look pretty okay. And we know the recycling theme has got, a good runway. What's your view on the stock? And if you track Welspun Corp, well, very, very good set of numbers. And we explained the company earlier. They are one of the beneficiaries of Trump's tariffs, of Mr. Trump talking about drill, baby, drill, and balance sheet as well as looking spectacular. Any view on both these names?
Nigel, we don't track Welspun Corp, so unfortunately we will not be able to comment there. But Gravita, yes, definitely we do have a view, and as you rightly said, there is a lot of focus on recycling. A lot of new names have got listed in this space, and they have done well. So even if you look at Gravita, the numbers reported, the operating performance was above our estimate. Revenue grew about 12%. Margins saw a marginal uptake, and we have seen the net profit growing by 33%. Even in, if you look at on a segmental basis, the lead business that grew about 11%, there was a 5% volume growth. Aluminium business saw a sharp improvement of 37%, volume grew 27%. So overall, we continue to like Gravita. We believe that the company has the capacity that is getting expanded, and this focus on value-added products, plus the improved domestic scrap availability, that because of the regulatory support, that should lead to a good 25-30% CAGR in earnings over the next 2 years, and hence we continue to remain positive. We have a buy rating and a target price of 2,000 on Gravita.
All right, just finally before we let you go, Latravenues Tech, Ixigo was at one point down nearly 18-19% yesterday. The results that came in, there was a reported EBITDA loss, but if you adjust for the non-cash ESOP expense, there was a 28% jump in the EBITDA, and the cash profits, or rather, the operating cash flow, also jumped by a good 30%. What do you make of these numbers? And the second half, the travel theme, the OTAs, etc. What do you make of this stock? And is there anything else that you like here?
Mangalam, we don't track Indigo, unfortunately, but the entire travel tourism theme that has done pretty well in the last couple of years post-pandemic. I think the domestic tourism has picked up nicely. So we are mostly tracking the hotel space, and there we like Indian Hotels, Lemon Tree. Those are the two preferred picks there. And the third idea that is a quasi play is Indigo, Interglobe Aviation. Again, consistent capacity expansion, newer cities being connected in India, and also the future growth for Indigo is coming from the international destination. So overall, I think hotels and aviation, these are the two preferred picks from us on the travel and tourism side.
All right, Interglobe Aviation, Lemon Tree and Indian Hotels. Thanks a lot for that. That's all for today. Have a good Friday and a good weekend. We speak to you next week as well. Sid, thank you. Take a short break. Come back. We'll have the pre-opening rates, and also we have Abneesh Roy of Nuvama Institutional Equities to talk about so many earnings from the consumer space that came in yesterday.
Welcome back. 15 minutes to go before the session kicks off, and the implied open has given us zero indication of the direction because there's nothing really moving. If you look at the GIFT Nifty and the way the implied open was, which is hardly 1-2 points near the flat line, now it's 4 points down. So that's, well, as clear as it gets, perhaps. Mitesh Thakkar is with us. Let's get his thoughts in on Friday trade. Mitesh, good morning and happy Friday to you. Index, it's just testing everyone's patience, right? But tell us if there's a trade, Nifty, Bank Nifty, anything?
Yeah, good morning, Sylvie. So I think, the index actually, if you look at the movement, The way it's moved from 24,400 to about 26,100, we've already had a good rally. I think we are still trying to digest the gains. We are seeing the moving averages on daily and weekly charts trying to catch up with price. So I think some of this consolidation might last for a few more days, but broadly, closing about 26,200, 220 zones should suggest fresh breakout, and then we can see continuation on the upside. Till then, I think you will have some choppy days, and on the downside, I've maintained 25,800 as the first level, and in a bad case scenario, 25,600.
Nifty Bank this week has managed to put on about 0.6%. Nifty is absolutely flat for the week. Any trades there on Nifty Bank, if at all? Otherwise, stocks, tell us about today's stocks as well.
I'll just cover the Nifty Bank as well. I think twice you've seen the Nifty Bank head towards 58,500, failing to close above it on hourly and 2-hourly chart. So I think that's the immediate pivot because it's at all-time highs. There's no historical level. So this is the current level, 58,500. And on the downside, the first support is around 57,700 and then 57,350. So I think these are the levels I'm watching at. Try to buy near the support levels, and if we get past 58,500, that will be a fresh breakout for the Bank Nifty. On the stock side, I have 3 buys to a sell. A buy on NBCC with a stop at about 115.9 or just below 116, and a target of 124 is what I recommend. DV's managed to get above the previous highs, so buy here with a stop below 6,600 for targets of 6,790. Also a buy on Hoodco. Good continuation signals over here, so keep a stop below 234.5. Look for a target of 250, and one sell call, that's Indigo. After a long time, some negative candlestick pattern averages are slightly on the negative side, so sell with a stop just above 57.85 for targets of around 5,600.
All right, we take that point. We also have Chandan Taparia with us. Chandan, your call on the indices and individual stocks?
Good morning, Manglam. Thanks for having me. So market witnessed some profit booking from higher levels, but the good part is index is absorbing supply near 26,000 marks. We have noticed that index has been moving in between 25,800 to 26,100 zone from last 8-9 days. And I believe a small follow-up is required to commence the next leg of rally. However, data setup are getting mixed cues, but I believe buy on decline could continue as major trend of the market is positive. So I'll focus on key support near 25,800 to look for an upside momentum in the market. Looking at the Bank Nifty index, that also witnessed some profit booking from higher levels, but 57,500 is major support. Till it holds above 57,500, we'll go with buy on decline stance for an upside target towards lifetime high of 58,577. But yes, looking for some consolidation in a broader market where selective sector and stocks will do better than the indices. Now talking about stock specific ideas, first trade is buy on Hoodco. We are positive on the selective selective name which are doing well and given a consolidation breakout on the daily and the weekly chart. And Hoodco is one of the strongest name in that category. Technically, it has given a breakout from a symmetrical triangle pattern, surpasses falling supply trend line. It has seen the buildup of long positions and momentum is clearly visible from last 2 trading sessions. In fact, Nifty CPSE index is doing well and Hoodco has potential to move on higher side. So one can buy with support of 234 for an upside target towards 257 kind of level. Second trading idea, that is buy on NBCC. In fact, it has seen a positive price pattern. In fact, consolidation breakout of last almost 15-20 weeks. It has given a decisive hold above 114. So one can buy with support of 114 for an upside target towards 126 kind of level. And one more trading idea, that is buy on Canara Bank. Positive view on most of the PSU name. And I believe PSU could do well, whether we talk about Canara Bank or SBI and all other names. So Canara Bank can do well. In fact, we have seen positive momentum with surge in trading activities and volume. So one can buy Canara Bank with support of almost 129 for an upside target towards 141 kind of level.
Right, we take that point. Chandan, thanks a lot for that. Meanwhile, let's talk about the big IPO that opens today. Lenskart's near 7,300 crore rupee IPO opens with subscription today. It's open today up until November 4th. The price band 382 to 402. The issue size nearly 7-8 crores, of which fresh is 2,150, and the OFS by promoters and investors is close to 5,100 crores as well. What the company is seeking for what it is giving you is a market cap of nearly 69,241 crores And at the same time, the promoter stake comes down from closer to 20% to closer to 18%. The anchor book is something to go by. There has been strong demand by the institutional anchors. 3268 crores raised by nearly 150 investors, 35% of that having gone to 21 domestic mutual funds, which include the likes of SBI, MF, HDFC, ICICI Pru, among others. And the global participants, we have the likes of Government of Singapore, Norway Pension Fund, New World, Fidelity, T-Rove, etc. What is it that the company is raising money for? 273 crores goes towards setting up their new company-owned, company-operated stores. 591 crore rupees for expenditure around lease, license and rent agreements. And investment in technology is about 213 crores. It's a D2C company that designs and sells a wide range of eyewear products. You would have known about it because of the near 2,150 stores that they have in every nook and cranny of the country, and 40% of their revenue that comes in from outside of India as well. If you look at their financials, last year they did revenues of 6,650 crores, of which nearly 40% came in from overseas markets, Southeast Asian markets, margins of really 15% and a net profit of 300 crores. The first quarter of this year, the revenue was 1,900 crores, EBITDA margins of almost 18% and a profit of 61 crores. A strong business which is 2.5 times bigger than its nearest competitor in India, and at the same time, we have seen a fairly widespread and wide recognized brand and a good back-end integration as well. But all of that at what price? 10.5 times FY25 price to sales, 234 times FY25 price to earnings. So this is exactly the question that I asked the management, and this is what they had to say. In the secondary market is the valuation that matters the most. And I'm looking at your numbers. You're seeking a post-money valuation for almost 70,000 crores in terms of market cap. Just basis trailing numbers, you are offered at a little over 230 times price to earnings, nearly 10.5 times sales. Even if you triple your profits from current levels over the next few years, you would be at around 70 times, right? So what I'm trying to understand is how much value do you think personally you've left on the table for people who are entering right now?
I would say that firstly, as a company and as an entrepreneur, our job is to create value for the customer.
Yeah.
Right?
And now increasingly shareholder as well.
Yes. And the shareholder, as far as valuation is concerned, it is what the market decides. Even if we look at the valuation, there are investors who are selling shares, there are investors who are coming in, and they have done a lot of working to arrive at these numbers. All I can say is they'll be very close to comparables. They won't be off. Sometimes when you look at things without looking at the full perspective, they look different. But yeah, be rest assured that everything will be in line with what they should be. I don't expect anything abnormal.
Okay, so that's the management's justification to that very pointed question that Mangalam asked, saying, what about the asking price? Is it fair? Does it leave anything on the table or not? We'll keep discussing this through the course of the day. And in a bit, we'll discuss FMCG earnings as well. Before that, I just want to highlight two stocks because we have some very sharp result reactions worth pointing out. Navin Fluorine, 11% higher. Navin Fluorine's margins same period last year were 20%. Now that margin has come up to 32%. The company is saying that they will probably sustain margins at these levels. They're expecting a very strong second half. The market loves that commentary. So keep this stock on the radar. On the exact flip side is Bandhan Bank. When the pre-open session opened, it started 10% lower. Now it's kind of cutting those losses to an extent. Still down 4%. But it's been a really disappointing quarter. A major crunch on margins, about 60 basis points lower. Their net interest income is down 12%. Their asset quality has deteriorated. So just keep these two stocks on your radar among, of course, the slew of earnings reactions that we'll have today. Mangalam, but we've had a bunch of FMCG names as well, Dabur, ITC, all of them reporting overnight.
A lot of numbers that came in. In fact, post-markets, we had ITC, Dabur, Pidilite and United Spirits, among the others, along with a lot of the companies that Abneesh tracks. But these are the major ones. Abneesh, what do you make of these numbers quickly? If you could tell us, one line on each. ITC, 6% volume growth, fairly steady. Pidilite, consistent double-digit volume growth. Strong margin outperformance from United Spirits, and Dabur, fairly in line.
Yeah, hi, good morning. So out of those four results, we'll be most positive on United Spirits. We expect United Spirits stock to do well in the near term, medium term because of four reasons. Clearly, Karnataka and Andhra are making up for the Maharashtra decline. Maharashtra, there is a double-digit decline, but stock is already factoring in. And we expect second strong year for Andhra market for United Spirits. Gross margin, EBITDA margin, both were multi-quarter high for United Spirits. And next 1 year, on the raw material side, both glass and ENA look under control. There is the UK FTA kicking in the FY27, so that will also benefit. And if any value unlock happens in IPL at some stage, that's a further option value. The new MD clearly is far more focused on ground. On rest of the three results, as you rightly said, mostly in line. So Pidilite, great compounding story, but not much valuation comfort. But Sudhanshu was delivering again second quarter in a row, good margins, good volume growth, double digit. So that's quite good. Dabur and ITC, I will say more of a Q4 recovery story. ITC, I would expect margin recovery in cigarette business in Q4 because leaf tobacco prices have come off. In December, what happens to the taxation in cigarette? That is very important. As of now, 6% volume growth is a good number. My sense is ITC is taking corrective action against Marlboro. And that's why if you see, it's a good number for such a 75% market share. Dabur and HUL, same issue. In the October month also, GST transition impact is there. So I would again say Dabur is a Q4 story. HUL is also a Q4 story. So we'll prefer United Spirits at this juncture, and we expect strong recovery and strong all-time high in the stock in the next 1 year for United Spirits.
All right, all-time high the next 1 year for United Spirits. Abneesh, just out of curiosity, which analyst in your team will be tracking Lenskart once it lists? Because the company calls itself a tech company and the business is retail. So I'm just trying to figure out.
We will discuss that. Titan, if you see Titan Eye, obviously is part of retail and that's also a bit similar, but we'll discuss that and we'll come back.
All right, we'll discuss that and come back. Would you basis, what is happening in Lenskart, have you ascribed any sort of valuation to Titan's eyewear business? Or once you look at that, the valuation that they get, and then you look at comparing them and perhaps add it to your SOTP at some point?
No, I think for Titan, jewelry business is still the big daddy, and versus Lenskart in that part of the business, clearly Lenskart is far bigger, far more nimble and much more innovative, I'll say. And that always happens, right? In Titan kind of a large company, jewelry and watch will get a higher priority. So I will say, yes, jewelry now, good thing is because of the price coming off in gold, we are going to see grammage growth gradually come back. So I will say, yes, Lenskart maybe add some option value, some uptick. Ultimately, it's all about jewelry business, jewelry margins. We are positive on Titan from medium long term, and we see that definitely volume growth in the gold will come back, jewelry will come back because of the gold prices cooling off. So we are positive from that rather than Lenskart kind of a
all right, if that happens, that will just be a bonus over and above whatever is happening. Apart from the numbers that came in yesterday, some came in day before yesterday as well. And Radico Khaitan really stood out in terms of their volume growth. Over 24% is what they're guiding for this year. And the premium part's doing a lot better. The stock obviously has seen a run up, but do you think there is room for more? And what do you make of that performance?
So we don't cover Radico. We like the space, Alcobev space, clearly next 1 year, 4 key reasons to celebrate. Of course, because of the GST cuts, the disposable income in the consumer's pocket is higher, and we see discretionary segments in FMCG benefit, and paints and spirits will be the 2 pockets where we see a benefit of that. Of course, biscuits and snacks should also do well. Second, of course, is the UK FTA margins will kick in terms of the FY27. Third is from a ENA and glasses, next 1 year, things are benign. From an Andhra market perspective, I think Radico has also gained a lot of good growth there, and they are one of the leaders there. My sense is Andhra second year also is looking good. So yes, the entire space is looking good. We cover United Spirits, and even the other spirits companies are seeing good growth in Karnataka and Andhra. So we remain positive in the space. We have a buy on United Spirits.
Okay, so on a high on Alcobev. Got that, Abneesh. Just wondering, I don't think you track Swiggy, or do you?
No, we have our internet analyst, Nikhil, who tracks Swiggy and that space. I track from the FMCG and the overall retail perspective.
Okay. All right. Swiggy for another day then. Thank you very much for joining in. Stock's holding up actually because, as Manglam was explaining to us, all the internal parameters, whether you're looking at their food delivery business, where they're really gaining a lot of market share, actually doing better than Zomato, or you're looking at their quick commerce business, there also I think a lot of the internals, including the contribution, the margin at the contribution level, which is still a loss, but the losses are reducing now.
It's in the right direction, but more importantly, everyone's looking at the war chest right now, because after the QIP, they'll have around 17,000 crores, which is pretty much in line with Eternal, and over $1 billion more than what Zepto is. So what they will do with that war chest is something we will most definitely watch out for. In the pre-open, ending slightly higher right now. 2 seconds to go for the market opening. The Gift Nifty was indicating a flattish start, mild green. Perhaps that's exactly what has happened, a flattish start. This one on the mild red side of things. Let's see what's moving. On the way up, we have BEL, which is among the top Nifty gainers. Eicher Motors is mildly higher. No one big name which is seeing a big gain or a loss. On the way down, Cipla as well. All the losses are curtailed less than 1%. The broader markets is where the action would perhaps be. United Spirits, that definitely is the stock of the morning in the F&O space, up 4%, solid margin performance coming in, so that one's taking the cheers. And on the way down, we have Bandhan Bank and Manappuram Finance. Both these numbers not impressing the street, and Gaurav mentioned that, both those stocks lower as well. Dabur, we didn't speak about those numbers, they were largely in line. There was a mild miss on volumes at 2% versus street expectations of 4 to 6%, and they've launched a Dabur Ventures fund, in which they'll invest 500 crore rupees to invest in some of the new age companies. That's, seeing some bit of profit taking. And a big move is what we're seeing on something like a Navin Fluorine after good results as well.
Yeah, Navin Fluorine's been a real rock star with the kind of improvement they've showcased in Q2. And the market perhaps believes that finally the worst, finally it's over for some of these chemical companies. By the way, NTPC is reacting quite negatively to its numbers. It's down to 2.5%, making it the worst performing stock on the Nifty. Cipla is still reeling under some stress, so 1.5% lower. Remember, it's not just Mr. Vora's exit from the company. Cipla also lowered its guidance on the US business. They will not be meeting their earlier benchmark. Slightly more slower rate of growth this year. That's what they're saying. So that stock's down. Max Healthcare, Apollo Hospitals, actually, the entire space is under a little bit of stress today. Some of the metal stocks are also losing ground. Tata Steel, Hindalco, some of these stocks on the lower side. The banks are not exactly fired up. SBI, Kotak Mahindra Bank, all fairly sluggish this morning. On the upside, there's just ITC, BEL and Eicher Motors. But really, all the action is in the broader markets and in the result reactions. United Spirits, the stock that Abanish was just talking about being one of their top picks, is up 4.5%. And by the way, TD Power reported numbers. TD Power's numbers also good. Stock's up 9%, Nigel.
Well, that's right. TD Power is one of the stocks actually I was, it's spotted with regard to a good earnings reaction. Motilal Oswal is a little bit weakish. That stock has opened up with some pain. Welspun Corp is up 1.5%. The metals pack is down, but this one seems to be outperforming. Growth is good out there. EBITDA number at record levels on this one. Order book as well as at record levels. And everyone's fretting with regard to Trump's tariffs. This is the potential beneficiary because it's located in the United States itself. So big move is what we're seeing, on that one as well. Volumes as well fairly high. Finutex Chemicals, I think it goes X the bonus, I think, today. So that stock, in fact, has become a 28 rupees stock, become more liquid. Stock is up more than 15%. Finutex Chemicals, it was a 250 rupee stock. I think post this corporate action, that one's in fact up. And IFB Industries, another stock that's been reporting a lot of weak results. Now it seems some of that good work with regard to margin focus, that's playing out. And that's why that's up close to 2.5%.
There's two stocks, Nigel, I wanted to point out before we move forward. One is V2 Retail. The QIP opens today. So that stock's up around 4%. So that's a positive move out there. Fundraising for V2 Retail. They've been growing well. The management had told us that they are targeting 50% revenue growth in this year and the year after that as well. And the second one, Gillette. 3.5% revenue growth. The street would say there is no great shakes about that. But remember, it's a 9% EBITDA growth, a good growth coming in the bottom line as well. And this was the most disrupted because of GST. Because GST on shaving foam, shaving cream, shaving razors, etc., all of that was reduced from 18% to 5%. So they would have had a lot of transition impact. And now the second half looks a lot better for them because now all these products are a lot cheaper. And here is that shift from unorganized to organized. And they are increasing their TAM, going beyond TAM, total addressable market, going beyond just men and into women products as well with Venus. So Gillette, the street likes those numbers or likes the story more than just the numbers. The numbers not particularly a problem this time around.
Absolutely. I just want to point out that look at Swiggy. From the opening level of about a 3% rise, now it's about 2%. So we'll see how the market digests the fundraising, along with obviously what has been a good operational quarter. Tradeep Bhattacharya, CIO Equities at Edelweiss AMC is with us. Pradeep, it's all about new age businesses and all businesses with a tech hat. These days, every business comes with a tech hat, right? You guys have an IPO fund at Edelweiss. So tell us how you think about it. I don't know if you directly look at it or, I mean, you oversee it in your role in any case. But now when you have an entity like Lenskart coming to the market for, the manager who's running an IPO fund, what do you do? When the asking rate is 200 times forward earnings, does this make the cut for you? And when we're still debating this, that it's a retail company, it's retailing eyewear, but at the same time, it talks about being very, very tech focused. So lines get a little blurry here. Your thoughts?
So good morning. Thanks for having me on your show. And I would say that at the moment, we are obviously flooded with IPOs with regards to the names, some good, some very good, and some not so good. And I think given that I can't talk about stock specifics, 2 or 3 important points in the framework with which we analyze IPOs are worth noting. First of all, new age, old age, the fundamental tenet of business is to make money. As long as it's a profitable business, the unit economics are positive, or there's a direction to profitability, we take a serious look at it. That's the first part. The second part is, of course, the valuations, and we kind of we look at what is the competitive landscape, how many businesses are listed in that space, and then take a view on that. So a combination of all of these leads us to to participate in IPOs, some in a bigger fashion, some in others. Can't comment in specifics, but we do have a fair slew of new age.
No, I get it, Trudeep. But okay, in a more general sense, do you see some froth building up at a broader level in the IPO market now? And when you talk about this particular fund, in how many cases do you actually subscribe to the IPO? Because you also participate in recently listed companies, right? So I'm just trying to understand as a mix, how much is it, how much of the investment is going into actual IPOs at the time of, when they're open for subscription, and how much later, and whether you see froth in the IPO space right now?
Well, I think in the smaller market cap segment, in the SME segment, we certainly do see valuation asks being on the higher side. 80% of the fund is invested in IPOs which have listed in the last 1 year. So post the participation in the IPO, we do participate in the secondary market as well. But by mandate, we keep rotating at the end of 1 year, or particularly after 2 years, so that we keep to the theme of the fund overall. But regarding froth, I think in the mid and in some of the mid and small cap related, particularly in the SME area, we do see a bit of valuation excesses coming through, but they usually tend to get washed out over a period of 3 to 6 months after 1 or 2 quarterly numbers come through. So we are not fussed about that.
All right. Hi, Trideep. Good morning. Good to see you, Ben. I recall you were underweight tech, and you'll close that call, I think a quarter or 2 ago. And you were saying that maybe, in fact, it's forming that basing out or bottoming out process. The bad news sometimes does continue, but the stocks have stopped falling the manner they were, and they've underperformed. What's your view on tech right now?
So actually, you would be surprised to know that overall in the last quarter numbers, tech as a sector has seen earnings upgrades. Has seen the earnings upgrades of about 1 or 2%, which is the first time that we have seen in good last 4 to 6 quarters coming through. Given where expectations were, that was seen positively by the street, which is why we have seen off late, if you look at during this result season, a good amount of rally come through in the case of tech. Still, the longer term underperformance stays, but I think true to what I said earlier, I still retain my view that the earnings are in the process of basing out. If we do have a trade deal with the United States, which is quite likely over the next 1 or 2 months, then the sentiment towards the sector gets a little better. And come calendar year 26, if the allocation towards IT tends to be better, then I think there is a good case of earnings bottoming out. We recently saw Cognizant report numbers, and generally the numbers that seem to have coming through are saying that demand is clearly not getting worse, and in pockets there are some improvements coming through. So if you take a 12 to 15 month view, I retain overall the view that tech as a contra play might just about come in vogue.
All right, tech as a contra play might just do well for you. As we speak, the Nifty has moved mildly into the green, and this one has been led by all the auto stocks. So pull up, the intraday of Maruti Suzuki reports its numbers today. That stock's doing well. We have Hero MotoCorp, which has seen a bit of a spike from the lows, currently at the higher end of the range so far. Eicher Motors too has picked some steam, and we are seeing some extended purchase in discretionary names. So Titan, Abni spoke about that as well. Jewelry stocks looking better because of a mild correction in gold prices, so that bodes well for their demand. Titan's moved to the high point of trade, and the additional kicker that may come in, perhaps looking at the valuations of the IPO that has come by just today. The other one that is extending its gains is United Spirits, up 6% right now. Remember, the conference call is at 4 p.m. today after the market shuts. Streets building onto those gains. In fact, going into numbers, the stock was fairly strong as well. So, Pradeep, on a consumer discretionary name and the auto names, how do you feel?
I think first, the welcome change this earnings season in general has been that so far we have seen earnings upgrades come through. This is the first time in the last 1.5 years that we have seen a bit of earnings stability stroke upgrade of about 1 to 2% on net balance across Nifty 50 names coming through, which is why you see the markets where they are. How much they sustain is another question, but that's one part that certainly I would like to highlight. In that context, one of our key areas of overweight has been consumer discretionary. And within this, particularly autos have seen meaningful amount of earnings upgrade come through. And we continue to remain positive on this, particularly heading into the near-term December quarter numbers. So if you add on top of this that there is the overall pay revision will come sometime next year. I think the catalysts are lining up quite well for consumer discretionary as a sector, doing well. And I think we are quite nicely positioned there, and could see further upgrades from where we are.
All right, Trideep, we have the festivities that have begun, and normally you see this October, November and December, play out pretty well. But these companies are reporting very good numbers, particularly, the harder liquor. United Spirits, the stock is on fire today. Radico Khaitan Mangalam was telling us the numbers look quite good. And you have the newly listed companies as well, like an Allied Blenders case in point. They've done some backward integration. They're focusing now on premium sales. That stock's heading fresh 52-week highs. And the other one is Tilak Nagar. That's going to be a whiskey player from a brandy player. What do you make of this pack? There's an argument for a long time that as India's per capita moves up, the penetration is less. Your view on this space, the Alcobev?
We have been overweight this space, and I think the point that I would make beyond just near-term discretionary pickup is some of the companies that you name have had brands which have not only done well in India but also overseas. So these are examples of Indian brands which have been a few, but could be more, which have done or which can go globally and still see a good demand coming through from consumers. One of the companies that you mentioned, beaten earnings by close to about 12 to 15%, predominantly driven by the pickup that they've seen in overseas consumption as well, which was very pleased to see. So net, early signs of some global brands coming through, even though it's in the field of liquor, and hence the stocks have done well.
Take that point. So you're overweight on liquor, and where do you stand on the beer front?
I think it will be too specific to comment on that, but I think our focus...
Nice try, Mangalam. No, the boys are trying, right? Okay, Trideep, very quickly, as we wrap this up, since we're talking about discretionary consumption, I just want to get your thoughts on how you are rating these platform companies, Swiggy. And I'm not getting to specific stocks, but I'm saying otherwise, if a company that came to the market 1 year back, came back in less than 1 year, and said, I'm going to dilute equity because I need more money, the market would really frown. But then these are very different businesses, and they're, raising a lot of cash. They're throwing a lot of cash. There's a war out there. So, and by the way, Swiggy in the last 1 year has not made money for its investors. It is where the stock listed around 420 thereabouts. So is this a long haul game of patience when you're talking about consumer tech and these food delivery and quick commerce companies? Or do you think that this is not something that you are too gung-ho on at this point?
I think overall we have taken notice of the fact that over the last 6 to 12 months, competition in this space came down for a brief while, and these stocks did well. and now competition is again coming back to the fore, and which is why they have to invest and hence raise money. I am, in absolute terms, not a big fan of such such instances. I think companies should have their own cash flows to kind of withstand competition. Overall is the framework that we kind of tend to see. At the moment, though, particularly in the not in the food delivery, but more in the quick commerce side, we see the market TAM quite big. So I don't think the market will lose patience on this anytime quickly. But this bouts of competition needs to be navigated through in such a way that the companies need to stay solvent, so that on the other side. So I think a careful view is the way I would put it. We are not certainly overweight in this space. We have our representation in there, and we are mindful that this could be cash guzzling businesses if not run carefully.
Okay, all right. So caution and care perhaps warranted. Take that point. Thank you very much, Sudeep, for joining in. Good conversation, and you have a good day and a good weekend as well. All right, quick glance back at the screen. Let's see how things have stabilized. We're up. The dips are getting bought, which is always good in the market. You saw the opening slight decline come through, but now we seem to be coasting along, and some of the auto names are finding takers. Actually, auto is the best performing sector in the large cap space. Eicher Motors, Maruti, even Bajaj Auto for that matter, Tata Motors, all the auto stocks are revved up this morning. So looking good. Okay, let's continue with corporate conversations as we keep dissecting more earnings. Indegene is the next company on our radar. The revenue came in line with the estimates, but there was a miss on the operational front. We have with us Suhas Prabhu, Chief Financial Officer at Indegene. Thank you very much for joining in, Mr. Prabhu. Good to have you in. So your top line growth, I think, was as much as 17%. However, margins from about 18.5%, you've come down to 16.5%. Why was this 200 basis points compression at the EBITDA margin level? What were the factors at play? And is it a one-quarter phenomenon? And can you give us some visibility on H2?
Sure. Thanks, Sudeep. So, as you rightly observed, 17.1% growth in the revenue. Coming to the margins itself, we had a couple of transactions that closed in October from an M&A perspective, and we had certain non-recurring, non-operational costs in relation to the transactions that we closed, such as diligence and legal fees, which has impacted the margins for Q2. But given that these are non-recurring, we expect that to get back going forward.
So for the year, what kind of numbers should we work with regard to revenue growth as well as margins?
The revenue growth for H1 has been a healthy 14.8%. We remain bullish given the kind of pipeline conversion as well as growth in a pipeline that we see, and are hopeful of beating our last year's growth rate as we look forward to ending this fiscal year. On the margin front, given that there would be a negative impact of the M&A kind of expenses, though non-recurring in nature, on a full year basis, this might result in a slightly lower growth on the margin front compared to the growth rate on the revenue front.
So can you give us, some indication, even a rough band would do? I mean, will you end the year also around the current 60-odd%, or will it be a little better than that?
At the EBITDA level, I would say we should be a little under 20%. And last year we did around 19.6%. We might be a little lower than that.
All right, we hear you. But what about the deal wins? The first quarter you got a bunch of $3 million average contract values. What have those wins been in the second quarter, and what's your prognosis here?
Yes, very encouraging second quarter. We had 2 deal wins north of $3 million in ACV, and 4 deal wins in the $1 to $3 million range, which is improvement on the large deal wins compared to Q1. The encouraging part was that during Q2, we had our first breakthrough in tech implementation deal with a young pharma company, as well as a pharmacovigilance deal, which is actually a multi-year contract with a med devices company. So these are encouraging signs for us.
All right. I wanted to ask you about a segment which is smaller, less than 10% now, the brand activation. That's degrowing. When does it get back to its growth ways? If you could help us out with that, and also give us a little bit color on the Gen AI initiatives. How are they panning out, and what should we be looking at in the time to come?
Sure. So the brand activation business has seen some headwinds with a couple of projects coming to a close, but we are looking forward to growth coming back in the segment given the pipeline that we are carrying. But more importantly, while the brand activation business, largely coming from an acquisition that we had done in the past, Cult Health, was focused on a brand-by-brand engagement, which sees some bit of natural churn. What we have also done is transformed this capability to be integrated with our enterprise commercial business with a new offering called as Tectonic, where we are seeing the growth. So, one way of looking at it is not just on the standalone, but a rub-on effect on the business as a whole. And that is also the positive that we are carrying from the capabilities that we have in brand activation, having a rub-on effect on the enterprise commercial business of Indigi.
Right. Just to wrap things up on the revenue front, you said that your revenue growth will be a lot higher this year than what it was last year. I just wanted to understand how much higher. Why do I say that? First half, you grew with 14.8%. All of last year, your revenues grew by about 9.9%. So you're obviously much higher at the halfway mark as compared to last year. By the end of this year, what kind of outperformance do you anticipate?
While we refrain from giving any specific guidance, even on an organic basis, we are bullish to be able to get into the range, which is what we are operating at on a year-to-date 6-month basis. And combined with the acquisitions, the inorganic growth rate should go north of 20% for the whole year.
All right. Thanks a lot for joining in. With the acquisitions, the growth rate this year should be north of 20%. We get that enough clarity. With that, take a short break. Come back on the other side. We have the management of Canara Bank waiting by to decode their earnings. Good performance coming in. The stock did well yesterday. Mr. K. Satyanarayana Raju, who joins in to detail those numbers.
Welcome back. Well, the market, was in the red and that dip got bought into, and not just, the Nifty. I think you should pull up the Nifty bank. We had highlighted this earlier. If the Nifty needs to power ahead, the Nifty bank is the one that will have to find its form. And again, it's defended the lower levels, so just keep an eye out on that index. Let's move on to Canara Bank. Reported a solid set of numbers across all parameters. Net interest margins a little below guidance. We have with us Mr. K. Satya Narayana Raju, the Managing Director and CEO at Canara Bank, who joins us. Hi, sir. Good to have you on the show. Well, let's get a couple of basic details out of the way. Your loan growth actually is ahead of what you were forecasting. Earlier, you were indicating that low teens was something that you'll be looking at. What is the loan growth trajectory we should be working with on a steady state basis? Point number one. And as I always ask you, how is the gold portfolio doing in this loan book? And how much of it is the retail gold loan book? Please go ahead.
Actually, always consistently last 3 years, whatever the guidance we are giving for that investor community, we are surpassing it with quite comfortable margin in the credit growth. If you see the last 2 years also the same. The current year also we are given a guidance of 11%, and we are able to show almost 13.5% in the year on year by the end of the September. This is not because that we have targeted for 1 quarter or 2 quarters. Last 2.5 years we have a strategy that we are working on that as per that strategy, that we have to focus more on the RAM sector, so that we should reach that RAM sector at 60 to 60% of the RAM sector and corporate sector at 40. 2.5 years back our RAM sector was at 54%. Now we have reached to the 58%. So the initiatives what we have taken on revisiting the processes, revisiting the products, any bottlenecks are there, what we have addressed those things, centralization of processing, using of the technology, all these things are helping us in growing continuously steadily. That resultant is almost our RAM sector is growing at 17%, and our corporate is growing at 10%. Because the corporate, there is an opportunity for growing much bigger than that, but we don't want to be part of that interest rate war. That's why we are selectively going for that. Even then we could show that the 10% growth. Current year, definitely we expect that this performance will continue in the next 2 quarters. And the second and the third and fourth quarters together, finally annual, whatever it is, the credit growth will be ending at 13% approximately. That 13 and around 13% credit growth will be there. Okay. Among these advances, the gold loan portfolio is also continuously growing around 20-22%. The presently as on date, our gold loan portfolio is 2,11,000 crores. So that's contributing within the gold loan. Our retail gold loan portfolio is around 62,000 crores.
Right.
Just one word, sir, with regard to this retail gold portion, it's been moving very, very steadily. In our last few interactions, it was around 50,000, moved to around 55,000, now it's around 62,000 crores. How do you see this number scaling up? Because gold loan growth clearly has been looking very, very good.
No, definitely, sir. This is actually when we have come out with the metropolitan and urban centers, because there the agriculture availability may not be there, but many people requires that gold loans. The gold loan growth in our bank is better than all other institutes. The reason behind is whenever somebody comes for the loan against gold, it is on emergencies. So you have to saturate your systems, infrastructure and all that the emergency has met within the 15 to 20 minutes. Then automatically the gold loan people they will walk in, they will come to the banks. That systems we could establish very well. That is the reason actually the people who are in emergency needs, especially in the South India, of course, nowadays we are finding the traction across the country. They prefer to come to the first Canara Bank. That's the infrastructure what we created is helping us, and it will continue to grow at the same level in the retail also.
I want to ask you a very basic question. You've had a fantastic quarter, right, on all parameters, stable asset quality, NIM compression is just 5 basis points year on year. What we're trying to understand is that why are you not being more aggressive by hiking your ROA guidance? That's still at about 1 or 1.1%, right? You're tracking above your guidance already. Plus, if there are no further rate cuts, there's an anticipation that NIMs the worst of the NIMs is behind us. So why not hike the guidance?
The guidance can be improved, madam, but NIMs at this moment, what we are given the 2.75 is We are working hard on that. Of course, now currently, I think if there is no further rate cut, then we have stabilized at bottom level. We have reached to that bottom level, and we can see that further improvement in the coming quarters. But if there is again one more rate cut is there, then it will have its own impact on that NIMs immediate for that quarters. But what we are doing that, so we can do that return on asset is increasing that. The reason is still our PCR is compared to other peer banks, so there is a scope to improve. We are at 93.59%. That can be improved to 96, 97%. At the same time, we are also providing additional provisions to have a cushion for that upcoming credit loss provisioning, expected credit loss provisioning. That standard assets provisioning buffer we are creating quarter on quarter. That's what actually we are preparing for the future. We have enough cushions. Even this quarter, we have provided 380 crores additionally to create the provisional buffer against the standard assets.
Really prudent, and that's very heartening to hear, right? That you're sort of, while the growth is good, you are still looking at hiking up your buffers, PCR, and then the expected credit loss rollout as well. That explains, why the ROA guidance for now you're not increasing. Just very quickly, you mentioned corporate growth at 10%. That's interesting. Which segments do you see it sustaining, improving? Everyone's waiting for this corporate growth to really pick up.
No, 10% is not a tough task for us, because just 3 days back, what the latest board committee, we have cleared almost 26,000 crores worth of proposals. There are proposals. Only thing, we are not parting that the interest rate war. That's why we are selectively going that. We are getting the traction, so infrastructure is there, green energy is there, infrastructure related industries are there, data center creation, so much traction is there, real estate is there, and green energy related manufacturing like panels or cells or lithium batteries. These are also is actively participating in that. That's why I have not seen any concern for the 10% growth in the corporate. We have in pipeline, we have more than 50,000 crores sanctioned limits are there.
We take that point. Thanks a lot, sir, for joining in and giving us all those details, parameters, the outlook. You have been doing extremely well. You've been giving decent guidance and going ahead and beating that guidance as well. And when times are good, you are increasing your safety precautions. That's exactly what a bank does. And that's what the street has been doing as well. Post your numbers, there was an up move. And after your commentary as well, continues to be that up move that we're seeing on the stock. In fact, as you can see on the screen, there is also this Money Control stock score just above the line graph. And this is a score which is assigned to each stock based on Money Control's multi-factor algorithm. It's calculated by analyzing over 40 parameters, which include both the current and historical financial statements, price charts, and technical indicators. For each of these stocks, we give an individual parameter. For the calculation of 4 factors, they're assigned a score, which is then aggregated to arrive at an overall Q factor, G factor, V factor, and T factor score. Remember, this is not a buy or a sell recommendation, and any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions. All right, let's continue our conversation around numbers. The one that reported yesterday was Swiggy, a decent set of second quarter numbers. The net loss widened as expected because of quick commerce investments, but the internals on food delivery, GOV growth, as well as, where the quick commerce average order value and contribution losses declining is going ahead, have been tracking well. But more importantly, the companies also said that they will have a board meet to consider fundraise worth nearly 10,000 crore rupees via QIP or other routes as well. Rahul Bothra, who's the Chief Financial Officer at Swiggy, joins us now. Thanks a lot, Rahul, for joining in. Congratulations on a decent set of numbers coming in. But beyond the numbers, most importantly, I remember, when we were speaking before the IPO, during the IPO, after the IPO as well, you said that we have enough cash on our books. We do not need to tap the markets once again, at least in the foreseeable future. And less than a year, you have, money to be raised from the markets. 10,000 crores is what you're looking at. And this, after having sold stake in Rapido for 2,400 crores. So it's not that you don't have cash on your books. Nearly 7,000 crore right now, but you're asking for more. Why dilute equity for another 10,000 crores in almost a year since your IPO?
Good morning, Mangalam. Very good morning to all your viewers. So, as you recall, when we met at the time of IPO, we were in a very exciting quick commerce segment where we were planning almost all the investments. The food delivery business had, of course, turned the corner and started delivering positive, growth and EBITDA. So today, the food delivery business is at a run rate of roughly 1,000 crores on an annual basis. And we are very well, stocked up in overall capital, right? As you rightly said, close to 7,000 crores with the Rapido sale proceeds that are expected to hit this quarter. Having said that, what we have seen in the quick commerce business is that the growth has accelerated. This was the third consecutive quarter of 100% plus growth that we delivered in that business. We've also seen a lot of investments, coming into the sector, both legacy players as well as new players wanting to enter a very, very, high growth segment. So we felt that this is the right time to, stock up what we call the growth capital. We've also been a very innovative company, and we do expect, a few more new services to continue to come out of our stable, as well as, raise a strategic reserve that helps us that we may never have to raise again.
Right.
So Rahul,
So
but give us
these
some
are
more color. Rahul, just give us some more color on this. The 17,000 crores that Mangalam alluded to, which in all probability you'll have once this fundraise goes through. Obviously a large part of it will be organic. You'll keep doing your dark store rollouts. But what else? What else are you thinking when you want to have this war chest of 17,000 crores?
Yeah. So as I mentioned, it's a lot of strategic reserve that we really want to, stock up. We also don't know how long the quick commerce, business will continue to growing at the pace at which it is. We continue to get surprised with the extent of consumer adoption. If you look at just our numbers, we crossed 7,000 crores just in the quick commerce business in the previous quarter. Very strong user additions, doubling our user base over the last year. So we do want to have sufficient, as I said, strategic reserve, and that creates optionalities for us for continuing to invest in the business.
Right. A couple of things. The last time you joined us, you did say that peak of quick commerce investments was behind you. And now you want to build the strategic reserves to go ahead and look at some more investments out here. So there is a bit of dichotomy here. Second part, on the competitive intensity part, how do you see competitive intensity panning out here? Because Zepto has some money. Blinkit has raised some money. They have around 18,000 crore of cash on their books. You will have 17,000 crores. Reported numbers for Zepto would be almost $1 billion. And we haven't even yet spoken about the big guys, the big baskets, the Reliances, and all the others who are eyeing this space. So how do you expect competitive intensity to pan out in the quick commerce space from here on? And what does that then mean for your path to profitability here?
Yeah. So Mangalam, just the announcement of fundraise does not, change our trajectory in terms of the profitable growth that we have alluded to. So we have reiterated our guidance that we will get to contribution margin break-even by the June 2026 quarter. So we have maintained that guidance. Even in the previous quarter, we went down from negative 4.6% to negative 2.6% on CM. It's a pretty sharp move up, backed by some of the key performance indicators like the average order value, which had a whopping 40% increase on a year-on-year basis. So we do believe that the business is on the right trajectory. We have also innovated in launching a lot of new consumer features, especially say Max Saver, which helps consumers to upgrade to larger baskets. We've also added assortment with a close to 40,000 SKU selection available on our platform. So a lot of consumer side metrics have started to show up meaningfully in our growth numbers, and therefore we do believe that the path to profitability is well established in this business. Talking about competition, as you talked about a lot of names, we are seeing some bit of activity. But honestly, I think we are staying true to the problem statement that we are solving for our consumers. We think it's a massive opportunity, and we have all the inputs in place to be able to continue appropriating this more than market leading growth from here on.
All right. Hi, Rahul. Good to speak to you as always. Nigel on this side. Contribution margin break even by when? I just want to clarify which quarter?
June 2026 quarter.
June 2026 quarter. Got it. So the first quarter of FY27. That's out of the way. Since you're moving towards contribution break-even, the stock market likes to look at EBITDA. EBITDA break-even, EBITDA positive number, and PAT positive number. Very clearly, by which quarter will we see Swiggy becoming profitable, both on EBITDA and profit figures? Please go ahead.
Yeah. So, it's hard to kind of crystal ball, beyond, say, some of the numbers that I talked to you about. We also want to retain the flexibility to continue to invest in marketing to attract new users. As I said, we have more than, we have close to doubled our user base in the quick commerce business over the last year. And we continue to see very healthy traction on new user addition as well as, repeat user performance. So we don't want to kind of box ourselves, as we know that there could be potentially, more competition. As of now, it is, benign. We don't see, very, very high competition in the near term. But going out 3-4 quarters, we really don't know the shape of competition that may emerge.
On the food,
retain the flexibility to keep investing at least in marketing while the CM gets into the positive.
Right. So on the food delivery part, now we've spoken enough about quick commerce. There is competition, there is intensity, there is growth. All of that is likely. But the cash cow of your business, which is the food delivery business, it's structurally slowed down. Between 18 to 20% is what now the expectations are. Do you think there is fatigue here? Is there any trigger to structurally take it higher from this 18-20% band versus what it has been doing in the past? And while we're talking about competition in quick commerce, Rapido has come up with the food delivery. Has it made any dent in the market where it's pilot testing right now?
Yeah. So now talking about food delivery growth, I think it's been a pretty healthy growth in both user addition as well as gross order value addition for us. Growing 19% now consecutively for many quarters, and we continue to see pretty good traction there. As mentioned in quick commerce, similarly in food delivery, we have innovated with a lot of new offerings, whether it is the 10-minute version called Bolt or more recently the 99 store, which gets access to affordable meals to consumers. So I think the overall growth can go up, but we as platforms will have to create more opportunities for consumers to participate in what we call the low value meal segments, and that's some of our efforts that we have started to put in. So we are cautiously optimistic to continue to growing at the same pace and hopefully grow faster from here.
Rahul, the good thing about being a very active customer of yours is that you have a day-to-day, visibility on the platform fee, on the surge charges, or the rain fee and all of that. Now, what's interesting is that while you managed to hike platform fee, over the last couple of months, off late, there are some promotions which are talking about above a certain, threshold. For instance, the other charges, you're doing away with them. So clearly, there are some of these promotional rationalizations that are also underway simultaneously. My question to you is this level of platform fee that you have, reached, is that sustainable in the face of the competitive intensity?
Sure. So, Surabhi, as you rightly said, the platforms, we have been able to innovate to find the right kind of consumer pricing. You'll be happy to know that over the last couple of years, our consumer fee as a percentage of the basket size has actually not increased. So while there's been an introduction of platform fee, we have also given back value in terms of extending our Swiggy One program, which gives you access to free deliveries, unlimited free deliveries, right? So there is a certain yin yang that we do in our business to be able to give consumers access to the right kind of pricing and affordability so that they continue to increase their frequency on the platform.
But my question, which is great, Rahul, I love it as a customer, but my question really is that in the face of unrelenting competition, and that's not going anywhere, right? And we haven't even sort of touched upon what happens when the bigger guns get into the space with their full might. Again, I repeat that question, that the platform fee and the other charges that and you just answered that, right? That it hasn't gone up as a percentage of the total value, it hasn't gone up. Will there be downside pressure in the coming months as the war rages on for the customer's wallet share?
Yeah, no, so we will keep finding avenues to give back, value. I think, ultimately it's the overall cart value that, we have to bring, to bear. There is also participation from the restaurant industry in being able to give, value back to consumers. And we are having a very healthy, conversation along with the restaurant industry that how do we continue to increase the size of our business. So I think there could be, things that could go up marginally here or there. But overall, the focus will be to give a lot more affordable solutions to consumers to help us continue to grow.
You speak about affordability and your conversations with restaurants. As customers, we know what the listed price on the restaurant menu is versus what's there on the Swiggy or the other apps like that, which includes your take rate, is bumped up by a fair amount as well. But be that as it may, contribution margins, food business 2.8%. You are expecting it to go all the way up to 5% in the medium term. Just wanted to know what the timeline is out here. Do you have a target for this? By when do you get to 5%, the glide path? And you evaded my question on competition from Rapido in the markets that they are currently doing, food delivery. And they're doing it by reducing the take rate. So on the back of that, do you think this take rate itself comes down for the industry?
Yeah. No, so specifically on the question of Rapido, I think they are test launched in one city. This is a different proposition to say what currently the food delivery business operates. We have launched a similar offering called Toing in a couple of markets. And as I said, these are pre-PMF bets Whether it's Rapido or whether us, we will continue to experiment around how do we provide a lot more affordable solutions to consumers to be able to tap into a higher growth market. But that's a different business segment altogether, a different consumer proposition altogether.
All right, Rahul, it's a good show by Instamart on average order value. But the MTU, or the monthly transacting users, well, that's been relatively slow for the last 2 quarters in Instamart. So when do you see this kind of shift from AOV to MTU? Because that's where the bigger growth will come from.
No, I think for us, the focus remains steadfast on continuing to grow it healthily. I think, both these parameters are important. As I mentioned, we have actually doubled our overall user base over the last year. And, it continues to meaningfully go up. At the same time, with the focus on the profitability as well as continuing to give right value to consumers, some of the initiatives like Max Saver, etc., have also consolidated carts, right? So consumers have been able to, consolidate carts and get a certain, meaningful value out of it. So the focus steadfast remains on being able to attract new users to the category, also convert, dormant users, as well as continuing to grow, at the back of some of the non-grocery selection increase that we have done, which has meaningfully tripled over the last year, right? So from 8% close to 26%, which is a non-grocery selection, which typically comes with high, average order values.
And when does food business do 5% contribution margins by?
EBITDA, I think, Mangalam, you mean, because
EBITDA,
we are close to 3% EBITDA. So see, as a business, there's a lot of operating leverage. We are a technology platform. Even in the previous financial year, you saw close to 80 basis points, being added. Even in the current quarter, we saw 60 basis points, adding just on the operating leverage, despite contribution margin, being in a certain range-bound manner. We do expect, a certain, contribution margin accretion of roughly 100 basis points, and the rest is going to come through operating leverage. And it's, a matter of a few quarters from here for us to be able to get to the steady state.
Okay. Rahul, we come back to the capital question where we started. Now, with this war chest of 17,000 crores, once you do this QIP, you're good for how many quarters? Because one thing that public market shareholders usually, question is repeated dilution of equity. So you're covered for how long now?
Yeah, no, as I mentioned, a lot of this is strategic reserve. We currently have sufficient capital even on the balance sheet, almost all the IPO proceeds that we raised plus more. And with the Rapido divestment, close to 7,000 crores of cash. So, it's not, this cash is not what I call deployment cash, and not a lot of this is deployment cash for which we have, full usage today. A lot of this is going to be strategic reserve, which we are going to create optionalities for ourselves going forward.
So no equity dilution, say, for what, at least the next year and a half? Can you give us any visibility on it?
I mean, you never say never, but at least here I feel that it could never, happen, because I think, technology platforms, when the transition happens to profitability, we have seen in the food delivery business from negative, 2,000 crores to 1,000 crore positive. It can happen in, a handful of years. And similarly, in the quick commerce business, we have seen even competition being able to demonstrate that pathway. So we necessarily don't see, us to be able to hit the market again. So probably one last opportunity for, institutional investors if we do the QIP to enter the stock.
I'm sure they'll give you the elbow room. You are a new age business, and you are in a business that's getting disrupted on a daily basis. So I'm sure,
the only change that I noticed from then to now is that, that time he had said, I wouldn't need it for the foreseeable future. And from then he said, I don't need it for the foreseeable future, but never say never. Interesting one, Rahul. Thank you so much for joining in and giving us all those details. We obviously look forward to, when you raise the funds and what you do with them, and whether you come back again for those funds or not. On a quarter-on-quarter basis, we'll be tracking the performance of your quick commerce business and the margin accretion for your food delivery business, as you do along with competition as well. Thank you so much for joining in. Wish you good luck and a good, festive season as we move towards the third quarter. Take a short break. On the other side, we have Siddharth Rai Mangla of Stockbox Technologies joining in for some trading strategies.
Welcome back. We have Siddharth Rai Mangla, Senior Analyst at Stockbox Technologies joining in. Siddharth, good to have you in. Of course, we want to discuss today's trades and any ideas that you have. But before we get to that, just wanted to get your sense on this extension that SEBI is giving to change the the weightages and the composition of indices where there are there are underlying derivatives. Right, for I think Bank Nifty, now that extension is, the breathing room is now up to 31st of March next year. But for the Fin Nifty and the BankX, I think the changes have to be implemented. Basically, I mean, for the benefit of our viewers, these changes, some of them include that no stock can have more than 20% weightage. The index must have at least 14 stocks. For instance, the Bank Nifty doesn't have 14 stocks right now. So how will this play out, and will it impact, trading in the near to medium term?
Definitely, Survi, hi, and thanks for having me first of all. See, this is going to be beneficial for the index because the primary reason in playing in indexes is not to increase our returns, but to decrease the kind of risk that we are taking. So the decreasing the allocation and increasing probably the number of stocks in indexes is going to be helpful for most people because we have consistently seen an increase in people's trading in these indices, and it is only going to help the participation of individual traders in this indices, and also it is going to, as I just said, reduce the risk as well.
Okay, all right. So we'll see how this rolls out. Now for today's market, stocks, ideas, or any index trades that you have?
Yeah, sure, Surbi. See, if we talk about Nifty, Surbi, the kind of the manner in which Nifty has taken support at 25,800, probably from the second half yesterday, it tells us that there is room for an upside. But again, I just discussed it with Mangalam yesterday that for the last few days, Surbi, for most people, it has been very tricky to take a long position in index because these two levels, 25,800 on the downside and 26,100 on the upside, they've turned out to be very strong levels. So either at this time, Surbi, we can wait for the index to move out of this range, or the other way is to play in those specific pockets or those specific stocks which are consistently contributing to the index's strength. And in fact, today, both of my stock picks are a part of Nifty because eventually I do think that Nifty will be back about 26,000 in the next 6-7 sessions. But right now, these specific pockets or these specific stock opportunities are showing much better momentum than the index itself. So though our positional view in index should be bullish, but a better way to play in the index itself is to go through stock-specific opportunities.
Okay. All right. So let's get to those opportunities, stock ideas.
Yeah, definitely. The first one is from the auto space. The name is Eicher Motors. See, the stock has played around this played above and below the 7,000 mark for past few sessions, but today we have seen a very good breakout above this mark. Will be, in fact, I think the momentum should be extending towards those 7150, 7200 levels. So Eicher Motor can be bought right now. The spot is trading around 7055. Our stop loss will be at 7020, and the targets being the first target is 7120, second target 7150. The second stock is from the IT space. The name is HCL Tech. See, we have consistently seen higher tops, higher bottoms being made in this counter. Today, there's not too much of a move in this stock, but even now the stock is trading around its 3-month highs. So the momentum is very strong. We'll see this. I think this can be one of the outperformers in the IT space. So HCL Tech can also be bought. Right now, the spot is trading around 1551, 1552. The stop loss will be at 1535, and our targets being the first target 1595, the second target being 1610.
Okay, all right, got that. Thank you very much. We'll take a quick break on that note. On the other side, Lata gets chatting with the management of Bandhan Bank to talk about their 2Q numbers. It's not been a great quarter. We'll find out if they have a better visibility on H2.
We continue with our results analysis. Bandhan Bank reported a steep fall in its net profit by 88% from 100 to 112 crore from 937 crore last year, second quarter. Like many other banks, it has reported a fall in its margins. Only the margin fall is a little steeper here, falling from 6.8% in Q1, that is just last quarter, to 5.8% in Q2. The other worry is that its credit cost, which is the overall cost of making provisions for bad loans, this cost barely fell by 10 basis points to 3.4%. For many banks, especially PSU banks, it has fallen very sharply, both bad loans and the credit cost. Finally, the amount of loans or borrowers who have not paid interest in the first 30 days, what in banking jargon is called SMA 0. That amount has also risen. That's an indication of future bad loans to come. If you don't pay your interest, bang in the first month. So these are the worries that are clouding the stock. Of course, after a steep fall, the stock has now recovered a bit. But let's get to the management. Partha Pratim Sengupta, Managing Director and CEO at Bandhan Bank, joins us. Mr. Sengupta, good morning and thank you very much for joining us. You may have seen from the investor calls itself the kind of fears that is bedeviling the investor community. So let us start first with the GNPA. GNPA rising a bit was not something the market was prepared for. They were prepared for the already elevated GNPA. Where has it risen and do you see it falling?
So let me tell you that our bank, Bandhan Bank, has two distinct segments. One, we are in the microfinance, which we call EEB, and the other where we are now making a growth during the phase of transition. So last November, we have started Bandhan 2, where we are aiming towards a transition. And I have clearly indicated at all forums that definitely there will be a dip in the margin. But your question is now on the NPA.
Yeah, first NPA. We'll come to the margin.
Yes. So the NPA, again, if you look at it, we could actually kept it stagnant at 5%. What was there, I don't know, by 9% and 9.6, you are saying only the EEB book, I suppose. It is not the total bank book. Whatever you're reflecting on the screen is probably the EEB segment.
No, at the moment we are reflecting the SMA book, but that's okay. I'm asking you about the GNPA.
So let
that
me
5% what?
GNPA, yeah. So GNPA Q1 was also 5% and Q2 is also 5%.
Yeah, but it's 5% of a larger book.
I'm just telling. So I have again told you that there are two distinct segments.
Okay.
So if you look from the non-EEB book, we are definitely in line with the industry. Whether it is retail, whether it is wholesale, whether it is the housing also for that year. So that is not that much elevated. It is more or less in line with the industry. If you take that portion, it will be around 2 to 2.2% around for the GNPA. But the pain that was coming from the EV segment, we expected that probably it would go down within Q1 or maximum in the first month of Q2. That has not happened and not happened in the entire EV industry. So while our performance, again, if you compare with the microfin industry, we are much better, whether it is in the NPA or even in the disbursement and other parameters. But definitely it has impacted the bank as a whole. So the gross slippages has mostly, so if my gross slippages is definitely elevated at almost 1,500 crores during the quarter, which was almost at the same level as Q1, but out of which almost 1,100 crores have been contributed by this segment alone. So this as I have shown on the screen also, I can say that the only green shoots in that, I am finding that SMA 1 and SMA 2 books are declining.
Yeah.
Particular segment. So which is giving an indication, and also I'm finding an indication that the quality is gradually improving. The second part is that the SMA 0, again, I have told you also previously and also to the investors, you see, we have a system which is also again a very unique to this bank. In this particular EV segment for that year, we go to the field and collect the amount. Now, during holidays, the demand is generated, which was not earlier there. Let me tell you that it was not earlier there. We have made this correction since February this year, in line with the IRAC circular of RBI. So the demand is generated on holidays, but my people are not there in the field to collect the amount. And during the festive season, my major EB areas, that is Bihar, Bengal, Assam, Northeast, and other the major areas for that, they had a consecutive holidays of 3 to 4 days. So definitely that has that is the reason for actually rising the SMS0 book. But I can tell you that till today, because yesterday also we did a homework and we found that almost 85% of it has already been collected. Okay. And I am pretty sure that the balance amount, or there may be a little bit slippages, but most of the funds will be collected in these 2 days. So holiday impact will always be there whenever there are continuous holidays, especially at the quarter ending. It will impact my SMS0 that we have made very clear to the investors also.
Okay. Well, actually your overall net NPA has also risen a bit. Let me come to the gross NPA, sir. If you, I don't know if you have your own presentation in front of you. I'm looking at page number 17 or slide number 17, where you have the segmental NPA. In the segmental NPA, actually your wholesale banking NPA has gone up from 8.1 billion to 9.1 billion. Likewise, your housing NPA has gone up from 7.3 billion to 8.7 billion. That is what is worrying me. I agree with you that you have reduced your microfinance, what you call EEB book, and the rate of growth of the non-EEB book is very good. I mean, I take all that. But when the GNPA rises, even in wholesale and housing, it scares investors.
Wholesale banking also, we have made a structural change. Earlier, the ACL, which we used to call it as the small enterprises loan, it is similar, nothing but an extended part of the EEB. We have, because we want to make a revamping in the entire structure of this loan, we have actually taken it out from the EEB and put it to the wholesale banking.
Okay, so that's actually MFI, erstwhile MFI.
Let me tell you, without that segment, my wholesale banking NPA today stands at 0.70%, which is less than 1%.
Okay, got that then. That was what was not obviously evident in the slide, and that's must have scared people. Can we go with the confidence that this 5.8 is the lowest margin, and in Q3 you will be able to improve on it? Net interest margin?
First of all, again, I'm telling you, as just now I have said, that we started the transition period. It was very much necessary because we are a universal bank. We are not a microfin bank.
Yes.
So that transition was very much necessary. And during this transition, we expected there will be a dip, and we have indicated the dip also. If you look at our strategy presentation also and presentation to investors at various forums, we have indicated the dip. But yes, the dip that has happened, we also did not expect. The first thing is that the repo rate upfronting, which we did not expect an upfronting on the repo rate. So that's right. Whatever has been declared right from day one of quarter two has been passed on to the borrower. This is the first. Number two is that we have also, as our strategy, as our long-term strategy, we found that we are an outlier in the MCLR because my next bank is almost 200 basis points lower in the MCLR. And so we were just positioning all our loans linked to the repo, where there are opportunities to link to the MCLR. So we did a strategy, as a part of strategy, we revamped the MCLR calculation. So that has reduced our MCLR by 200 basis points, and we have passed it to all our home loan borrowers who are linked to that. So that has also affected our rating. Third thing, we have moderated our deposits rate. So savings bank, the moderation has come immediately. But the fixed deposits, which were taken, say, up to March, and mostly they were sitting at 1 year deposits. So that moderation is yet to take place. That is expected a part in this quarter, and the major part will be in the Q4, where you will definitely see an improvement in margin. This is the third. The fourth is definitely the slippages from the EV segment is definitely beyond our expectation. Let me again tell you, so we did not expect that these slippages will continue for this quarter also, but it has happened. But the only green shoots, as I have told you, that SMA 1-2 books are decreasing. So that is definitely a good thing happens. I can definitely say that going forward, this has been a challenging quarter. I must repeat, this has been a challenging quarter. We have seen the least, I would say it is one of the third lowest profit Bandhan Bank has given in the history, but I think we will now only be going upwards.
Okay, now got that, sir. Even your treasury income should not fall. Every bank saw a fall in treasury income because of the fall in bond prices. So all those should work to your advantage. Can you just give me an idea of what kind of a credit growth you are expecting in the second half? There is a lot of noise in the media about very good, customer sales because of GST. So will your loan growth improve?
Yes. So just to give a little bit of statistics. So if you look at my credit growth, we have a Y2Y growth of 7%. Okay. There was a dip from the March level, YTD dip in the March level, in the June quarter from the March level. That has also improved. Now we have grown almost Q on Q growth of around 5%. So the growth is happening. And if you look at segment wise, my EV book has degrown by 13% YOY.
Yes.
My non-EV book has grown by 24% YOY.
Yes.
So that is a very good green shot. So I can say, keeping all these things, we will definitely grow by, we are targeting a growth of 11-12% by the year end. And we are hopeful to achieve that. And definitely our deposits growth will be higher than, that was our guidance, that we have not kept any deposit. We said that our deposits growth should be higher than the credit growth, and what we are achieving.
Got that, sir. Got that. All the very best, and let's hope that second half is far better than the first half. Thank you very much for sparing time for us on CNBC-TV18. So that's the word coming in from Bandhan Bank. We wind down on Bazaar with a very, very flat Sensex and Nifty. Hardly any change. The Nifty Bank is showing a little more pressure, but that could also be because the Nifty Bank composition itself is likely to be changed, and we are going to perhaps likely see lower weightage for the likes of HDFC, ICICI, Kotak, the big weighty ones. So maybe that's putting pressure on the Nifty Bank. Wrap up on Bazaar on that note. Chartbusters coming up.
Shares of United Spirits rise following a solid set of September quarter earnings, tailwinds from Andhra Pradesh's new liquor policy and improved product mix as well as growth.
Bandhan Bank is down close to 5% after seeing a near 12% decline in its net interest income, while net interest margin also contracts sharply. The management tells CNBC-TV18 that the gross slippages from the emerging entrepreneurs book itself were around 1,100 crore rupees.
Navin Fluorine zooms after a strong set of second quarter numbers. The revenue rises 46%. Profits see a multi-fold jump. The management also ups its margin guidance to 28 to 30%.
Shares of TD Power jumped close to around 6% on the back of a strong showing in quarter two, where revenue and profit growth of over 40% and order inflow rises by 45%. The management has also upped the revenue guidance to around 1,800 crore rupees from around 1,500 crore rupees earlier.
V2 Retail rallies as it launches a 300 crore rupee QIP at an indicative price of 2134 rupees per share, say sources. The issue can be upsized up to 400 crore rupees depending on the investor's response.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as we speak, the market's trading with a bit of a cut, though we have seen the broader markets actually doing a relative outperformance today. Hey Mangalam.
Hi Nigel, another day where we're facing some bit of itchiness around that 26,000 mark, but let's see where we go from here. There is enough support around 25,750 to 25,800 as well. But let's get you some ideas for profit. Mid caps are doing well. What is the idea for profit today from our colleagues at Money Control Pro? Kanchi Shah joins in to tell you.
So today's stock idea is Bajaj Auto. So this company is in a sweet spot right now, especially with the recent GST cut on two-wheelers which has reduced from 28% to 18%. Also, the festive demand is already strong and this move should give an extra boost to the sales in the coming months. Bajaj Auto, which has made significant strides in the electric vehicles, so it has regained its momentum in September also by climbing back to the number 2 position in electric two-wheelers with 19% of market share. It has also secured the second rank in electric three-wheelers. So this shows that its EV products are being well accepted and the company is steadily expanding its presence in the fast-growing electric vehicle segment. Bajaj is not just dependent on the domestic market but also in exports, where around 40% of its total volume comes from exports. With the Indian rupee staying relatively weak, the company stands to gain more from its foreign currency earnings, which could support profitability in the coming quarters. Overall, the rural demand looks better. Domestic sales are also recovering, along with exports supporting the performance. So at around 24.7 times PE at FY27 earnings, the stock offers decent growth from potential for investors. So I thus recommend Bajaj as a buy.
All right, thanks a lot for that. By the way, the markets actually have gone a sniff lower. We had moved to around 25,950, but from there actually we've seen a bit of a dip from the day's high. And by the way, a few stocks though continue to buck the trend. Tilaknagar Industries, last few days the volumes have been massive. We'll have to see who are the parties to those large trades, but otherwise the stock has moved very, very well. Last 1 month up close to 18%, making a 52-week high today. Allied Blenders is the other one over there. That's up close to around 4%. So these liquor stocks clearly are in a world of their own.
Liquor stocks are in a world of their own. I'm just looking at two stocks, Nigel, and if the director can quickly pull both of them together, that'll tell you the story of the day. Swiggy raising 10,000 crore rupees, taking their cash balance to close to 17,000 crore rupees. What does that impact? It impacts its biggest competitor, which is Zomato. So Eternal comes up for you. Eternal has actually taken a sharp leg down currently at the low point of trade as well, because with 17,000 crores in Swiggy's books, it'll have similar amounts of cash as Zomato right now, or Eternal comes up for you on the screen as well. That is down almost 1.6%. Let's move on. Let's talk about another earnings that came in. Mohit Malhotra, the CEO of Dabur, now joins us on the phone line on those numbers, the overall results. Mohit, as you directed in the second quarter update, were largely in line, 6% sort of revenue growth, EBITDA growth as well. However, there was a miss on volumes, and that's something that the street is taking note of right now. 2% versus expected 4 to 6%. What's the outlook here on the volume growth from here on?
Yeah, so Mangala, what's happening is that GST was a big disruption which happened, although in long term it's definitely a transformative reform. I think long term it will really benefit the business in terms of boosting consumption and putting more money in the hands of the consumer. But short term, and there was a pushback from the distributors and the wholesalers and the consumers themselves who were wanting to buy a low price stock. So therefore the inventory push which happened previous to the season, especially for us in terms of Chyawanprash, that could not happen. So therefore volume got impacted a bit, especially after the GST announcement which was made. That was the reason for maybe a low volume growth. But I think it's come much better than our peers, and 5% growth in the overall business is what we are really satisfied with. And we've gained market shares across our 95% of the portfolio. So I think relative to any other company, I think we've done reasonably well in the current quarter, and I'm confident. But some transition is going to lap over to October also, and first 15 days we will see inventory liquidation happening at different intermediaries, and only once the inventory is liquidated and the new rate and the price talk reaches the market will the situation normalize. But I think these are just temporary hiccups that we are facing, and post which things should normalize, and this GST reform should definitely usher in a good volume consumption boost and push the overall volume growth both in urban as also rural markets. Yeah.
So net of this disruption that you saw in the GST transition, and at the same time the first 15-16 days of October as well, you believe that there was some overlap out here. All things considered, what kind of revenue growth and volume growth can we expect in the second half? Can you quantify that, Mohit?
The top line, we expect mid to high single-digit top line growth, which will be backed by low to mid volume growth in the second half, and this is the projection that we've given to the street. First half got impacted because of the GST and the inclement weather that we faced, and the beverage business got impacted because of that. But I think second half projection remains what it was. There could be a little upside to it due to the GST transition, GST reforms which have actually come in. So we expect overall for the full year mid-single digit kind of a growth for the full year going forward. Yeah.
Hi Mohit, good to see you in as always. What about margins? What's your target in the next year?
See, operating margin for us has actually grown by 20 bips as compared to last year. So, and it's driven by gross margin increases of around 20 bips, which has happened in the India business also and in our overseas business also, despite inflation of around 8%, which hit us in the quarter two, which is very high inflation. Last full year inflation amount was the amount in the second quarter that we guys had, but we could easily push that entire inflation, and it was passed on in terms of price increases to the consumer, and therefore we got a gross margin upside which flew into the operating margin due to the other leverage that we got from indirect overheads and S&M costs, etc. So we expect our operating margins for the full year also to be better than last year. Overall, our operating margin is in the range of around 19% for the first half, and third quarter is generally better in terms of operating margin. Overall, operating margin should be better than last year in the current year.
All right, so the next quarter looks better when it comes to margins seasonally as well. But, you know, we have to call out what outperformed. The oral care business, Colgate saw a decline, Unilever saw a decline. You did 14% growth. Is that sustainable? And how much market share have you added?
Yeah, so oral care business has been a star performer for us. And not just in the current quarter, I think consistently and sustainably, we've been doing very well in oral care. Dabur Red being our flagship brand, I think that's almost contagious. Anybody using Dabur Red continues to use it because it's a panacea for all oral care problems that you may have. It's doing very well. And so has Miswak, also grown by around 23-24%. Our Swadeshi campaign, which is also resonating, PM Modi's wave of Swadeshi, has done exceedingly well. And because of that, the entire herbal and natural segment is kind of doing very well. And it's 770 basis points ahead in volume terms than the non-herbal segment. So the non-herbal segment is growing at 2% and the herbal segment is growing at 10%. So there's a 4.5 to 5x delta from a herbal to a non-herbal. So there is a tailwind. Plus, we've gained market shares also by 60 BPS in overall toothpaste segment, which takes our market share up to around 16.5, the highest ever exit shares that we guys have got. So two brands not doing so well for us. I think where we need to focus is Babool and Lal Dant Manjan, which is also what we are trying to correct. And I think overall, oral care is doing exceedingly well, and we are very optimistic going forward also on oral care. And there's a huge headroom, the total portfolio being around, give or take, around 18 to 2,000 crores. And there's a huge headroom, the total category being in the range of around 10,000 plus crores. Yeah. So huge headroom of growth also here.
All right, Mohit, I want to focus on the food and beverage segment. Out there, if you just pull up the chart, the growth is less than 2%. And that's because food has grown, but beverage has been weak. And it's been the case for the last few quarters. What is your strategy to revive growth on the beverage segment?
See, the beverage business has always been a growth pillar for the company. It has always grown at a double-digit kind of growth. Past a couple of quarters, we've seen inclement weather, which is impinging the sales of our beverage business. To de-seasonalize the business, first pivot is that we are trying to increase or boost our food vertical. Our food vertical, we've taken a target of around 20% growth. We've grown this quarter by around 14%, driven by ghee, edible oil, etc., which have all grown by 20-30% growth. Even a homemade brand is under-leveraged. So that also we want to scale up, although it's a small business. Then the drinks part of the portfolio, we are really trying to push. And in the nectar portfolio, we are giving value for money. We're also plugging white caps in our pack price architecture, and 50 rupee and 100 rupee price points is what we are trying to plug. And the entire Real brand is being revamped with a new facelift in the whole category. So that's what one is trying to do. So, but the season is something that we can't predict. And I think it's a toll of the season. Despite season not favoring us in the quarter two also, our beverage business has been flat. And food and beverage category, despite GST, because GST rates have also gone down from 12% to 5% in the majority of the category, that is kind of grown by around 2%. A lot of inventory correction also happened because of GST pushback by the retail because the season did not favor us. So that's how. In terms of season, the festive season has been okay for us. So we expect as the season favors us to normalize the beverage business.
All right, we take that point entirely. But, beyond the numbers, the announcement of you, making a commitment of almost 500 crores through Dabur Ventures. What kind of acquisitions and investments can we hear about, and by when?
So to provide a very focused approach to this M&A, Dabur Ventures has been launched, which is the investment platform established for investing into high potential, new age digital brands that demonstrate a strong potential and is closely aligned to our strategic vision. So there's a capital allocation of 500 crores. We want to look at companies which are in home and personal care, in wellness foods, and also in healthcare, and all digital first brands, which will give us a growth boost to this vertical, and it should be focused. So that is why, and that is the rationale for putting this whole Dabur Ventures in place, etc. But this does not preclude the main M&As like Badshah, like Sessa, like Valsara, etc. that we've done in the past. That will be over and above the Dabur Ventures capital allocation of 500 crores. We've got 7,000 crores in our balance sheet. So the money will be used for that. And this is going to provide a boost to this whole investment. If you ask me if there's anything on the table is yet, we are evaluating a couple of targets as we speak. I can't tell you the names of those targets, but definitely you'll very soon hear good news from us. We are evaluating a couple of targets. Definitely, Mangalam.
Okay, all right. Mohit, thanks a lot for joining in, and we look forward to chatting up with you in the time to come. Well, that's it. Let's move on then. It's time to highlight our Super Pro chart of the day, powered by Money Control Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story driving the markets and help you understand why behind the what. Now, here's today's chart and what it means for your next market move. Hutco, that's a stock on the screen showing an inverted head and shoulders pattern and a bullish reversal. As you can see, an inverted head and shoulders pattern is a formation as the stock approaches the neckline breakout, signaling a potentially powerful bullish reversal from a sustained downtrend to a new uptrend. And if you'd like to access more expert-driven insights and actionable chart patterns like this one, simply scan a QR code that's coming up for you on the screen and subscribe to Money Control Super Pro. Plus, the festive season, there's a reason to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait. Scan, subscribe, and make your portfolio shine brighter with Super Pro. Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Keep an eye on the bottom of your screen, and Zydus as well as Lupin are in focus because Astellas in its call has mentioned that in fact they've gone ahead. That's Astellas, by the way, is the innovator of Mirabegron. They have gone ahead and raised the guidance for the drug by close to around 80%, which explains why you have Zydus Life that's moved to the high point of the day. And I think we should get a chart of Lupin as well. That's spiked up as well. Astellas in the call mentions that it will not be hard on patent case to extend exclusivity, and the read-through is positive for both these two names. So that's why you're seeing a bit of a volume spike, and both those two stocks have now moved to the high point of the day. Well, that said, let's get to the management of Coromandel International. They have joined in, and it's been a very, very good quarter, actually, for the company. Hi, sir. Welcome to the show, and congratulations on a good showing. Well, the first half of the year has been good. Revenues, EBITDA, profitability as well. For the year, what kind of guidance can you give us with regard to revenue growth, as well as give us a brief number in terms of margin band?
Good morning. Thank you for talking to us. As you mentioned, Coromandel reported a very resilient performance for this quarter, as well as for the half year. For this quarter, Coromandel revenue report shown an increase of 27% and profitability of 17%. So as you know, the monsoon in the Kharif has been very good, and the offtake of agri inputs have significantly improved. Aided by the good monsoon and improved operational efficiencies across all our plants, we could report improved EBITDA margin as well. For the half year, revenue growth has been 30% with corresponding improvement in the profitability. All the fertilizer plants operated 100% capacity. And if we look at our procurement efficiencies as well as the improvement in the intermediate manufacturing production of phosphoric acid, all aided in improving the EBITDA margin for fertilizers. On the crop protection segment also, we have shown good volume in the export market, especially for our key molecules, Mancozeb, for which we have expanded our capacity at Sarigam. The plant has been put into use, and that has driven the profitability of crop protection business, where the margin has moved up from 15% to 20%. Overall, if you look at our fertilizer volumes, coupled with our DAP imports, we have reached the market leadership position in the phosphatic fertilizers with a market share of 17%, which is a very creditable performance. And also, as you know, the retail footprint, we have been increasing store a day.
Right.
At this we have 1,040 stores. There also we have seen all segments have been growing well. So overall, we are quite satisfied with the performance, and with good monsoon and a very good reservoir levels, which is more than 108% of the long-term average. We do expect a very good Rabi season and improved uptake for agri imports, whether it's fertilizers or crop protection or specialty fertilizers. We expect.
Sir, just to come in here, sir, as you said, the revenue growth has been very strong. For the year, we should work with what, a 35% revenue growth? Will that be fair? And margins in the vicinity of 12 to 13%?
Absolutely, and the revenue growth, definitely we can look at 25 to 30%.
25 to 30% with margins at around 12 to 13%. We got that correct?
Margin bit varies. In fact, being a commodity business and fertilizer, we look at EBITDA margin per metric ton, which we have been guiding always 5,000 rupees per metric ton. That will continue to remain as such. In the crop protection,
can you repeat that again, sir?
On the fertilizer side, we always look at EBITDA per metric ton of fertilizer, which is always around rupees per metric ton, which we are confident of realizing it for the year as well.
What proportion? Can you give the absolute number again? How much is per metric ton? Because I think we're on a scratchy line.
EBITDA per metric ton of 5,000 rupees per metric ton.
5,000 rupees per metric ton is what you target in the fertilizer business. But, you have entered some of the strategic supply contracts with some leading global partners. We understand that. And at the same time, for you as well, your brownfield capacity on sulfuric acid and phosphoric acid comes on stream by the end of this year. How much that would be margin accretive for you?
In fact, we'll be commissioning this phosphoric acid, sulfuric acid in the last quarter of this current financial year. Its annual capacity is around 200,000 tons of phosphoric acid and 600,000 tons of sulfuric acid. In fact, our absolute EBITDA from this phosphoric acid will accrue full year from next year onwards. And that should also sustain this EBITDA and also helps in our raw material security as well.
And by how much?
We need to look at the math in terms of overall composition and the next year volumes. So it'll be too early to predict, but it is going to be a bit accretive for us as we move.
Let's look at it this way. So currently, I suppose you are buying these products from suppliers, and versus that to now, how much cheaper will the production be?
As you know, these investments take time, and it has got security for raw material as well. We have into mining operation at Senegal, which secures rock for this investment. Factoring this capital investment on the capex what we invest at Kakinada, we can definitely say that at least 20% value addition should be there on per ton of phosphoric acid. So that's advantage we have, over and above ensuring that we have access to phosphoric acid for our fertilizer production.
Okay, got it. All right, sir. Thanks a lot for joining in and giving us those details. A short but crisp chat. We look forward to chatting up with you as the quarter does progress. For the time being, we slip into a short break. Come back. We continue to focus on markets. Stay tuned.
investing.
Welcome back. Well, one stock from the broader markets is really catching our attention is CPCL, Chennai Petro. We are at CNBC-TV18. A couple of months or so ago, we had highlighted that possibly could be a refining capacity that could be in short supply globally. That's what's caused the GRMs to move up. And for Chennai Petro in particular, we had highlighted that the interest cost is coming down because they're going on repaying their debt. If I remember the number correctly, the debt was more than 10,000 crores around 4-5 years ago, which has come down substantially. So that's a stock that's gaining 4.5% today. There was big fund-based buying yesterday. And the last few trading sessions, in fact, it's seen a big move. The stock is up, I think, 15% just in the last 1 month or so. We'll wrap up on this edition of Chartbuster. Stay with us. We have the team of Trading Hour that's waiting for you on the other side. And me and Rima will be joining in to get you an exclusive interview as well.
Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Rima Tendulkar and Nigel stays on for the first half of the show. Hi, Nigel. It's a subdued morning of trade, but we made it to Friday.
Well, that's right, Rima. And, as we speak, we're actually down close to around 100 points or thereabouts. And earlier this morning, it appeared like, the markets wanted to dance away towards the 26,000 odd mark. The Nifty bank is moving to a very crucial juncture, which is the 57,500 odd mark. So that level needs to hold out. And for the Nifty, we're 300 points away from the 20-day MA. You'll have to say, till these levels hold out, I think the bulls will still believe they're very much in the game. The problem, Rima, is, in the last 20 minutes, the broader markets actually were outperforming. But those crisscross lines, if they come up for you on the screen, you'll see now there are more number of stocks that are declining than advancing. So that crisscross, in fact, will not be making portfolios feel too good. As at around 10:30 a.m. that happened earlier today.
Well, but the good part is, for the week at least, the mid-cap index is still up about 1.3%. Yeah. So today, of course, you are seeing that little bit of profit booking, 100 points lower on the mid-cap index. But week to date, the Nifty is absolutely flat. The mid-cap index is up close to about 1.3%. And if you look at the other sectoral gainers, it's PSU banks right on top. That's up nearly 4%. Oil and gas has had a fantastic week, and that's gained close to about 3%. But let's straight away get to the latest news that SEBI has proposed new norms for the number of constituents in the non-benchmark indices. Vivek now joins in with the details.
Well, that's right. This is an incremental update to the earlier proposed paper where, there were changes going to be made both to the number of constituents, the weightage as far as both Bank Nifty as well as Fin Nifty is concerned. So, what is the criteria that SEBI has come up with as far as these indices are concerned? And the implementation will be done starting December 2025 onwards. So the eligibility criteria, number one, the indices need to have a minimum of 14 constituents. The top constituents weight has to be less than 20%. Combined weight of the top 3 constituents will be less than 45%, and all other constituents' individual weights has to be in a cascading downward order. So basically, especially if you're looking at the Nifty Bank, 12 constituents, so the number of constituents will increase. Along with that, ICICI Bank, HDFC Bank, largest weight, currently they are above the threshold, so weight has to reduce. So now, the additional constituents that can come in, analysts estimate that Indian Bank and Yes Bank are key candidates. Union Bank too stands an outside chance. Sorry. On the other hand, HDFC Bank and ICICI Bank could see some weight reduction on the back of this development.
Okay, thank you very much for that. And joining us in the CNBC-TV18 Motilal Oswal studio is Mr. Ramdev Agarwal. They just came out with their Q2 numbers. The stock today is down close to about 4 to 5%. And that's because at the bottom line, you are seeing a drop of 70%. But that is courtesy a big swing that you're seeing in the treasury, the investment segment, where there is a loss of 200 crore versus a profit of 700 crore. But this is the notional mark-to-market loss that the company has seen on account of the swing in the equity markets in Q2. But this is notional. What actually stands out is the performance that the company has done in the asset and private wealth management, where the growth is very strong, 12% up on a quarter-on-quarter basis, and I think about 23% higher. Sorry, 12%, yeah, and about 13% high, 23% higher in the PBT level. Ramdev ji, thank you very much for joining us in the studio. So I'm not focusing on the PAT because that is a notional loss, right? That is swinging it?
Yeah.
Okay,
so actually, one has to focus on the operating profit. Yeah. Operating profit is very resilient. It is, last year was 540 crores or odd, and this year is 555 or 5, something like that, 2-3% up. Despite the fact that we are broking business, which is 50% of the company till last year, has gone through this expiry challenge, So last year was the best quarter in September. Against that, that business made about 225 crores last year or 240 crores. This year it has made just about 175 crores. So there is a 50 crore loss out of that. And despite that, we have 2% growth. So what has happened is that business has clearly given 24% lower profit, but other businesses have more than made up. So the other businesses have grown at 30%. So the boom conditions in capital market is on, whether it is AMC, whether it is private equity, whether it is iBanking. iBanking is just about kind of really doing record numbers. And so all of them are doing well. And your HFC, Housing Finance, which used to be kind of a very stuck kind of situation, has also grown at 25-27. So all the businesses, ex-broking, has grown at about 30%. Broking obviously has gone down by 24%, which I think this is the worst quarter. Starting next quarter, I think it will be much more manageable year-on-year comparison. But after that, of course, the growth again of 25-30% in broking also will start. So that's how the operating side look. As far as mark-to-market is concerned, it's linked to the market conditions. Yeah. So we have about $1 billion, about 9,000 crores treasury. I think September quarter is about 4% decline in the index. So there you saw this mark-to-market down. First quarter was very good, 600-700 crores up plus. Now this quarter is starting a little more positive. So let's see. I mean, nobody has any call what happens to the mark to market. But when you look at it on a year basis, you'll start getting about 15% on your 9,000 crores, which will be about 1,400 crores. But that's for the people like us who believe in the long run. You know, but quarter on quarter, these challenges will be there.
All right, and that mark to market will reverse some part of it in the coming quarter as well, in all probability.
So far, yes, but
hopefully
still there are 2 more months to go.
Indeed. Mr. Agarwal, good to have you in the studio as always. Now, a couple of days ago, we got this news of the proposed norms lowering the cap on brokerage as well as on expense fees, for AMCs. As well as for wealth firms. I wanted your take on it. The industry has been a little bit soft. So what kind of impact can it have on business? Obviously, it gives a bit of a dent. And how is the industry approaching this? Have you all approached regulators? What's the logical way out of this?
Yeah, so I think it is extremely damaging. One is the business side of it. That's one part which this thing. But in this kind of a resurgence of capital market, which has become a huge, economic strength for the country, I don't think this kind of measures are required at this juncture. Because sell-side research has a very dominant, there's a power of sell-side research. I mean, you come to hear purely, even CNBC and all the channels are fed by sell-side research. And you don't pay anything to the sell-side research. So the public at large are educated by the company's stories, by various minds. I mean, I may say buy, somebody might say sell. So this 1,000 analysts, sell-side analysts, they are the backbone of capital market. Now they are being paid by brokers, whosoever, say we have 50 analysts. So we pay them, we spend about 70, 80 crores on just the research. So there must be Kotak, there must be Pablo, there must be, all these guys, all the foreign brokers, they all spend money on research. And that is being charged with the brokerage. It's not separate, it is charged with the brokerage. Now, the whole thing is going on very well. There are hundreds of companies, new companies which are coming up, which we don't know the name also. Who is going to cover them? Buy-side research is no substitute. In fact, sell-side research is extremely good complement to the buy-side research. So sell-side research must happen. And somebody has to pay for it. You cannot be at the mercy of asset manager to give you revenue.
So in the current form, it's extremely damaging, as you said.
Current proposed thing is very dramatic.
Yes.
I think regulator must...
Some kind of rationalization
they must listen to the voices of broking industry and even the users. Who will benefit out of this? Nobody is for it. And yet, these kind of proposals are coming. So I think we'll make a representation. Probably we'll try to make them understand our viewpoint. And then, of course, the regulator knows the best. What to do. They have brought the market, they have brought the system so well. So far, SEBI has been one of the architect of this capital market to make it safe and liquid and dematted and one of the most aspirational market in the world. So I'm sure they will look at the merits of this particular thing. But 12 to 2 is like closure of the system. I mean, basically, we don't want sell-side research types, which is not right. I think sell-side research has a very distinct role, which is not understood properly. Because this 1,000 analysts cannot be replicated by side. Howsoever money you pay, you cannot get conflicting views. And the entire media, social media, retail, everybody is fed by the sell-side research. So I think they must actually provide more dollars for the sell-side research because the markets are expanding horizontally. And research dollars are not there. And now you're pulling out whatever little is there. I think it will destroy the market.
Ramdevji, well put. Always count on you to present the other side of the argument from an industry point of view. But just getting back to your business and the numbers. Now your ARR revenue, which is basically your, the AMC wealth distribution, 61% of the overall revenue, and this number was 52% in Q1. I mean, that's a big 900 basis points kind of an increase. I mean, at this rate, you will pretty much move to a fully fee-based model, sir.
Yeah, so there was also an effort to build non-broking based, fee-based business model like distribution we want to build. So, but we didn't want to come down this fast. I mean, from 50% to now we have come to 24, 25% in broking. So that was not the intention to go down that fast. And so it will come back. As the situation normalizes, Q3 would be still kind of same. Q4 recovery will start. And I think 26, 27 will be full recovery on a lower base of 24, 25. So I think it will recover back, but it will not get back because other businesses are growing at 30%. Like my AMC has gone from 110,000 to 160,000. So it's almost 50% growth without mark to market. Because year on year, it has grown from 110,000 to 160,000 crores AUM.
Right.
And that has happened without market doing much. So everything is a net flow. So we get about 15% mark to market as we go along. So I think there is a clear, what you call, tailwind in all the capital market businesses, starting with the broking, AMC, private equity, iBanking, you name it, wealth management. Everywhere there is a this thing, and that continues in my mind. In fact, it is going to gather pace as the credit flow, the economy picks up. All these uncertainties of trade agreements, all those things get behind, and GST cuts and all those things. My sense is that next 12 months is going to be much better for the market than last 12 months.
You want to put in some AUM targets, sir?
I can't do it. Don't get into that. Because I don't know. I mean, we are doing well till yesterday. So now, what else can I say? I mean, we have done about 50,000 crores net flow last year. I mean, everybody tries to do a little better than that.
Okay, let's talk about a smaller part of your business, the home finance business. That's as well growing very, very well.
Very well now.
You know, it's done well even on a sequential basis, profitability as well as improving. What are the targets on this particular vertical? Because it's small, but it's gradually expanding and at a decent pace. And there's an industry tailwind as well.
Yes.
Post GST 2.0.
Yeah. So I think here the new team is stabilized and the operating leverage is now building up. See, till last year, the AUM growth was happening, but because the feet on the street was more, the profit was stuck at about 120 crores. Now it is looking that we have got over it, and the operating leverage is working, and on a 30% kind of AUM growth, we'll start getting 25 to 30% net profit growth.
Right.
So our intention is a very secular business, very predictable, and very large opportunity. So initially we had a little teething trouble, but now this new team is fully stabilized, and I think from 25, at least it will contribute as much as the rest of the business are growing. So about 25 to 30% kind of a bottom line growth should be happening for the next 2 to 3 years.
Sir, just one question.
Yeah.
As you said, right, conflicting opinions make a market. You need buy side, you need sell side. Even when it comes to stocks and IPOs. On social media, there is a lot of outrage about expensive valuations about one particular, IPO which is open right now, Lenskart. But yesterday, when you see the kind of anchor investment and the demand, 147 anchor investors, and including Motilal Oswal and every blue-blooded anchor investors. So present the other side of the argument, which makes sense of this 200 times valuation.
So let me put it, because we are interested party, this thing. So stock specific discussion, and my knowledge is very little, let me tell you. And you have to speak to the fund manager who have allocated and how they think. But broad picture, I can tell you, now we are seeing for the first time birth of multinational companies, multinational consumer companies from India. See, it has not happened in first 10 years of operations. Somebody is operating in 50 countries, 100 countries, and that too touching the consumer B2C businesses. So this is happening for the first time thanks to availability of private capital, the risk capital, and second is thanks to internet. And these guys, they are very global minds. So I think these are the different companies than the old companies like, say, MyHFC. I mean, they are going to operate maybe in 3 states, 5 states, 7 states, or 20 states, but within the boundaries of India. So we are basically attacking $5 trillion of GDP. These guys, they have ambition and plans and execution of attacking $125 trillion of GDP, the way American corporations do it. So the outlook is different. Whether they are successful, unsuccessful, how successful, that is for fund managers. But it's very exciting time to see birth of young global companies out of India.
Well, I want to put you on the spot, but thank you for sharing your.
So that's a thought process, but I have no strong view one way or the other.
Well, I know the debate continues with regard to valuations, but as you said, you need to appreciate the business. Founders have a vision in there, so hopefully they get to that. But the debate on valuations does continue. Always a pleasure, sir, having you in the studio. Thanks a lot for coming down. Wishing you a good day ahead, and all the best for the coming quarter as well. With regard to your results.
Thank you.
Thanks.
Well, time to slip into a short break. You come back, we'll continue. All right, I think we have some flashes at the bottom of your screen. The SEBI chairman, they're saying that they've taken a series of measures to improve the derivatives market. So that's some fresh statement that's coming in there. Cannot just shut down weekly expiries. Many market participants are using this. I think the stock to track is BSE. Initially, as we got, some information that was coming in there, the street read it a little bit negatively, but now it appears, that fear with regard to, knocking out weekly expiries is gradually receding. That's why BSE as well, from being down close to around 2.5% or thereabouts, so close to 3%, I think, it's pulled back considerably from the low point of the day. That's on the back of the comments that are coming in there that should flash for you at the bottom of your screen. The SEBI chairman has not said the decision will be taken in a phased manner as well. That's the additional lines that are coming in there. And big recovery, as I said, BSE, from being down 3%, now the stock is down just around 1%. The street believes now maybe that fear with regard to shutting down of weekly expiries is gradually receding. I'll tell you what, we'll slip into a short break, come back, continue our focus on markets. We'll also focus on this big story that's flashing for you on the screen.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Let's quickly take a look at the markets. Nifty down 90 points currently. There's some recovery that is underway, so watch out for that one. The mid-cap index absolutely flat with some negative bias, but the recovery is not major to talk about it in greater detail. The mid-cap recovery is something that we should be talking about because that has recovered sharply from the day's low. We'll keep tracking that for you, but let's talk about individual names which are buzzing in trade. Hormuz is here with us and he's putting spotlight on the top movers in the market now. Hormuz, tell us more.
On a week that has dominated by almost 150 companies reporting results, it's only fair that most of the stocks are earnings reactions. And start off with Bandhan Bank. Today we heard from the management a few minutes ago, and the stock now at the lowest point of the day, almost 7% lower. It's the third straight day of losses for the stock. It's the biggest single day fall that the stock has seen in over a year. And on the volumes front, we have had close to 3 crore shares that have been traded for Bandhan Bank. That is almost a 10x of its 20-day average, which is is close to around about 28 to 30 lakh shares. Now, the stock has also broken below a very important level, which is the 200 DMA of 162. And the stock has been an underperformer this year, has been quiet in 2025. It was down almost by a third in 2024. On the flip side, though, the top gainer on the Nifty 500 today is Navin Fluorine, and the stock is only going from strength to strength, 15.5% higher now on the stock. The biggest single day gain since March of 2020. Trading at record highs is Navin Fluorine. 21 lakh shares have already been traded on the stock, and that is way above its 20-day average, which is only 23,000 shares. And it has had a very, very good year of 2025. It's up 75% after 3 years of negative returns, and this is also the best calendar year since 2020 that the stock has had. Finiotex Chemicals, the stock trading ex bonus and ex stock split today in a 20% upper circuit now. Friday's volumes, at least today's volumes, have already crossed that of yesterday. We have had 1 crore shares that have been traded in this 20% upper circuit. The 20-day average is only 2.2 lakh shares, and the stock above all key moving averages. This has been the best month that the stock has had this year, but still down 11% on a year-to-date basis. The last one on the list is TD Power, another one earnings reaction at record highs as well. The stock has gained all 5 days this week. The 15% up move that we have seen this week, and the best week since May that the stock has had. We had over 70 lakh shares that have changed hands, 20-day average of around 3.5 lakh shares, and it's up 65% already in the year of 2025 and has been delivering positive annual returns every single year starting 2018.
Thank you very much for that. Sonal, Navin Fluorine is a stock that you're looking at?
Oh, yes, I am. What stellar numbers this time around. And, you know, this was one stock which was under pressure last year because of a lot of things that happened. Before that, there was a CEO resignation as well, and had been underperforming for a while. This year, it's up around 78%. But if you look at the numbers, stellar numbers overall, revenue growth has been strong, coming in at around 46%. EBITDA is up at 246 crore rupees. Margins have expanded by 1,200 basis points, and profit after tax at 148 crore rupees. Across all the segments, there has been a strong growth. HPP up 38%, specialty up 35%. CDMO also is higher by 98% on a YOY basis. If we talk about the conference call, the management sounded very bullish. EBITDA margin guidance has been upped to 28 to 30% with a possibility of an upside from those levels for the next fiscal. This fiscal, they expect around 30% margins. They expect second half to be better across segments, and CDMO revenue should touch $100 million in FY27 itself. Brokerages, very positive. UBS has a target price of 5,900 rupees, which is an upside that they're seeing now. They've announced new R32 capacity, which should be positive for the stock. Jefferies has a target price of 66.35. They have upgraded EBITDA estimates by 13 and 14% for the next 2 fiscals and forecast 44% EPS CAGR for the next 3 years. Citi, however, has a sell call with a target of 4,900 rupees a share, but doesn't take away from the fact that the numbers were strong, much better than what the street was working with.
Indeed, and Navin Fluorine, you just spoke about that, right? Is that after 3 years of negative annual returns, the stock is up almost 80%, a 16% higher now is Navin Fluorine, the top gainer on the Nifty 500 today. Take a short break on the crypto markets. On the other side, Manisha Gupta joins in. Stay tuned.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
And as promised, shifting focus to the crypto space, Manisha Gupta joins in.
Crypto Corner, we are going to be talking about the layers within blockchain, and there are three of them, by the way: layer 1, layer 2 and layer 3. Now layer 1 is the most basic, it is the foundation based blockchain. For example, you have Bitcoin, Ethereum and Solana coming in within this category. Now this handles its own consensus and security as well. It manages and finalizes everything on chain, and transactions, it does all transaction and acts like the source of truth for the ledger. It also provides security and also decentralization for overall ecosystem. There are some challenges within this as well, because when it comes to scalability, there isn't much to that. And then it also leads to slower transactions, especially at times when there is congestion and too many people trying to do a transaction at the same time. It also takes the cost on the higher side. That is where the layer 2 crypto comes in. Now this is a separate protocol that is built on top of layer 1 blockchain. This is done to provide fundamental security. The layer 2 is built up without compromising or without modifying anything that layer 1 has to offer to that. It also improves on the scalability, transaction, speed, cost, all the challenges that layer 1 had. Layer 2 basically works on top of that. Example for layer 2 are Arbitrum, Polygon, Lightning Network, you have Optimism and Starknet as well. These are some of the layer 2 blockchain that have done quite well for themselves. Now this relies on security of the underlying layer 1 network. So most important is layer 1, and that on top of that you build layer 2 for more scalability. And then there is layer 3 crypto. This relies on application layer, which is also built on layer 1 and layer 2 as well. This is designed for specific decentralization, also applications like gaming, decentralized finance, dApp, everything is layer 3, which is on top of layer 1 and layer 2. Now, this is hyper scalable. This can be customized as well. It also does meet diverse need for users here, developers as well. And the overwhelming base layers that can be created on top of that does lead to a lot of work that can be done here. Example for layer 3 are Degen Chain, OBS Network, Zygames, etc., which have been doing tremendous work.
Thank you so much for joining us with all those details, Manisha. With that, we'll slip into a short break. More on the markets on the other side of that break.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Aditya Agarwala, Head of Research and Investments from Invest4Edu, joins in now for a quick technical check on the market. Aditya, thanks for joining in. Happy Friday. What's the call now? The Nifty is struggling a bit below 25,800. We've got the Nifty Bank, which is under pressure. And what would be the individual stock calls?
Morning, Reena. Thanks for having me on the show. If we take a look at the index, it's more of a consolidation that we're witnessing both on the Nifty and the Bank Nifty. I won't read too much into this minor correction that we're witnessing in trade today and yesterday also. After a decent bit of an up move, it's just a consolidation trying to digest this up move that we witnessed on the Nifty and the Bank Nifty. Talking of levels on the Nifty on the downside, 25,700 should be a strong support zone, and I don't see index breaking that so easily. On the upside, 26,100 to 200 will act as a hurdle as well. So my sense is markets will consolidate and oscillate in this band between 26,100, 200 on the upside and 25,700 and 800 on the downside before it eventually breaks out into an all-time high territory. Same holds true for Bank Nifty as well. Today, we witnessed a sharp correction led by that news which has come out. But overall, I don't see any major correction in the Bank Nifty as well. So 57,300 on the downside is a decent support area for the Bank Nifty. And 58,400 is what I'm looking at as the hurdle for the Bank Nifty. Should consolidate between this zone. I don't see major downside or upside moves in both the indices. Having said that, yes, there are stock-specific activities, especially on the broader markets that we're witnessing. That is likely to continue going ahead. Talking some stock-specific ideas, the first one on my radar is Titan. Looks very interesting. After a decent bit of a consolidation, stock has finally broken out into a bullish uptrend. At current levels, I'll be a buyer in the stock for a target of 3,900. With a stop loss somewhere on the downside at 3,700. The second stock is IFL. This is also very interesting. After a correction, stock is finally showing higher lows backed by healthy volumes. So I'll be a buyer in IFL as well at current levels for a target of 580 with a stop loss at 520 on the downside.
Okay, all right. Thank you so much, Aditya, for joining us with those levels to watch out for and the important stocks in focus as well. By the way, the Nifty is still down 78 points. Is the mid-cap side of things which are doing well. So mid-cap index has turned into the green, 35 points higher on that one. And the advance decline ratio, that still remains in favor of advances as we speak. So watch out for the recovery on this name. But Lenskart, 7,278 crore rupee IPO opens for subscription today. And it's our big story for the day. Mangalam is joining us now to tell us more about the company and the outlook as well. Mangalam.
Well, the much spoken about, the much discussed and the much debated IPO finally opens today. It is Lenskart, a business that we know as, it has around 2,150 stores in every nook and cranny of the country, and increasingly 40% of their revenues coming in from outside of India in the Southeast Asian regions as well. But importantly, about the IPO, opens today up until November 4th, and it's a price band of 382 to 402 rupees per share, raising about 7,300 crores, of which fresh issue is 2,150. The rest is an offer for sale from promoters as well as investors in the company. Now, before the IPO opens for subscription, we had the anchor book update coming in as well. There was strong demand there, 3,300 crores allocated to nearly 150 anchor investors, which included a good mix of domestic mutual funds, domestic insurance companies, as well as global participants, which include the likes of New World, Capital Inc., Fidelity, T. Rowe, and BlackRock, etc. So a bunch of anchor investors have put their might behind Lenskart. What does the company do and what does it intend to do with the money that it gets? Remember, it runs about 2,150 stores, has the back-end supply chain for eyewear as well. So they want to basically use 273 crores to start new company-owned, company-operated stores. 590 crores will be used for lease, rent, license agreements, and they will be investing in technology as well as R&D for about 213 crores as well. It sells, designs a wide range of eyewear products. We know about that. They've made acquisitions as well. 40% of their revenue comes in from some of the acquisitions that they made outside of India. And if you look at their financials, last year they did numbers of close to around 6,500 crores, 6,600 crores on the revenue, had margins of 15% and a profit of nearly 300 crores, the first time that they turned profitable. And this quarter, the first quarter that is, they did about 1,900 crores in terms of revenue, 18% margins and about 61 crore. It's a strong business, 2.5 times, its nearest competitor in the country, and also has a fair amount of tailwinds for the sector when it comes to unorganized to organized shift. But all of that boils down to just one thing. how much is the price or how much is the IPO being offered at. If you look at the trailing numbers, 10.5 times sales and 234 times price to earnings. And this is precisely the question I asked Piyush Bansal, and this is what he had to say.
Firstly, as a company and as an entrepreneur, our job is to create value for the customer.
Yeah.
Right.
And now increasingly shareholder as well.
Yes. And the shareholder, as far as valuation is concerned, it is what the market decides. Even if we look at the valuation, there are investors who are selling shares, there are investors who are coming in, and they have done a lot of working to arrive at these numbers. All I can say is they'll be very close to comparables. They won't be off. Sometimes when you look at things without looking at the full perspective, they look different. But yeah, be rest assured that everything will be in line with what they should be. I don't expect anything abnormal. International continues to be a good focus for the company.
4,000 stores by 2030?
Again, I would say...
Possible?
Definitely. I mean, India has 80,000 eyewear stores, approximately, conservatively. And that Abhishek said, we have 60 stores for 1 million people. We have 20 times more jewelry stores in India. So one would say, can you add at least another 80,000 optical stores as a country? Yes, right? Out of that 80,000, let's see how many Lenskart has.
14% the overall subscription so far of Lenskart. We are into almost the first couple of hours of the bidding process opening. The portion reserved for retail investors has already subscribed 55%, but you need to keep that in mind that only 10% of the IPO was reserved for retail investors and the 75% was reserved for institutions. So we'll keep you updated on the subscription figures for Lenskart. Take a short break, more on the markets on the other side. Stay tuned.
Welcome back. The next management on our show today is Cognizant. They came out with their Q3 CY25 numbers. Ravi Kumar, the CEO of Cognizant, is now joining in. Ravi, very strong Q3. I mean, this is the strongest sequential organic growth that we've seen in the last 3 years. And you went ahead and upgraded your revenue guidance. You're now looking at a 6 to 6.3% revenue growth this year. I mean, what is driving it? Is it that the external demand has improved in the current quarter, or are there some company-specific factors? If you could elaborate.
You have to deal with deterministic logic, which was in SaaS layer. You have to migrate that to the probabilistic AI layer. You have to write new AI agentic layers. In fact, classical software didn't expand significantly into enterprises. I mean, the total annual revenue of all these SaaS companies put together is hundreds of billions of dollars. But the labor spend around it is trillions of dollars. So you can expand into many, many things which classical software did not do. So it's more expansive, more immersive, more elastic. And equally, it's more complex because you have to have the interplay between the deterministic and the probabilistic layer. You have to have an interplay between agentic and human capital. You have to, it's a contextual computing era, so you have to feed context into the computing life cycle. We call it context engineering. In fact, we wrote about it, which is primarily, if the technology is not just an insights tool or it's not just a decision support tool, but it's an action tool, it creates digital labor, it creates agentic capital, then you actually have to feed the tribal knowledge, the context, the workflows, the data flows, and the hustle of the company into an agent. So we think we have activated both the swim lanes, and that's why there is growth coming back. So remember, on the first one, if there is lower cost of software deployment, higher velocity, the savings can be underwritten to the second swim lane. And that savings is leading to more agentic capital. Therefore, we said our digital engineering business is growing at around 8%. Our infrastructure-led business is growing at around 10%. Our BPO business is growing at around 10% because you actually layer this agentic capital on operations of companies. So putting all this together, the summary is we are transitioning from a system integrator to an AI builder, as I call it. A system integrator to an AI builder. And that's the future of companies like Cognizant. And the way we are looking at our workforce is to increase throughput, increase innovation quotient and index by delivering significant productivity using the power of AI tooling for employees to benefit from.
Ravi, I think the big talking point now in your numbers is you have expressed interest in also listing in India. You've made it clear that this is a long-term project. There is a lot of complexity involved. But take us through the rationale. Is it because the valuations in India are higher than the valuations that you command in the US, being listed there on Wall Street? Because some of your peers in India, the large cap IT companies, are trading at higher valuation multiples of 20, 25 times. Is that the driving force behind considering a listing in India?
The Cognizant board and the management team have been regularly assessing opportunities to enhance shareholder value. It's a very interesting question. We have started to talk to our financial and legal advisors. Early days, Indian companies are listed in the US. We have significant constituent base in India. We have 250,000 employees. We're the second largest employer in India. So our employees want us to create wealth creation opportunities locally in India. We are committed to expansion in tier 2 cities in India. So overall, I would say it is a worthwhile option to explore. I do not know whether it's going to take, how much time it's going to take, because we are one of the first companies who's exploring this, the other way around. But we also get an opportunity to to be attracted by a different set of investors who are India-based, emerging markets-based, sovereign funds who are emerging market-based. So we kind of going to explore this for our employees, for our shareholders. Early days, so hard to say how much time it will take, hard to say what are the bottlenecks and the roadblocks which will come on the way. But it's in an exploratory stage.
Okay, just one final question then. Is it even legally allowed to be listed in both the places? I mean, have you had any early discussions with the lawyers?
We actually don't know. I mean, we are just exploring. We're exploring options. We just don't know. It's very preliminary, very early days. It's a long-term project for sure. And we have not taken a decision whether we would do it or not. We have to have all the information and the data before we evaluate it.
Okay, got that. Thank you very much for those clarification. It's a long-term project. It's complex, can't put a time. But the company is evaluating. They're not even sure if it is legally allowed. But numbers, the Q3 performance was actually very, very strong. And, they're the only company which has said how much code is being written by the machines now, AI. And 2 years back, it was 18%. Now it stands at about 30%. Time for a short break. On the other side, we'll put the spotlight on Unipart India in our special segment.
A brief recovery from the lows of the day, but in our special segment Under the Lens, Sonal tells us more about Uniparts India. Over to you, Sonal.
Thank you so much for that. Uniparts India, an interesting stock that's quietly making a comeback. The stock jumped 9% yesterday, is up 28% in the last 1 month and just up 7% over the past 1 year. But here's the catch. Even after all that, it's still trading below its IPO price of 577 rupees, which is back in December 2022. Uniparts is a manufacturer of engineered systems and components for the off-highway market, that's tractors, construction and agricultural equipment. On 13th of October, that's recently, the company approved a special interim dividend of 22.5 rupees per share. In fact, its dividend payout ratio, that will come up for you on the screen, has jumped sharply from 24% in FY22 to 73% in FY25. The company's cash flows are solid at 182 crore rupees from operations in FY25 and a cash balance of 241 crore rupees. This is as of June 2025. On the balance sheet side, working capital days, they have improved to 124 days, which is in FY25, down from around 134 last year, but the number was even lower earlier. Look at the working capital days that we saw in FY21, FY22, so it's been a sharp uptick from there. But profits, they have come off from their peak. The return on capital employed, it is down to 12% in FY25. This is from 32% that we saw in FY23. And that shows up in the numbers too. Revenue has slipped from 1366 crore in FY23 to 964 crores in FY25. Profits are down from 205 crores to 88 crores over the same period. However, management is sounding cautiously optimistic. They say lower interest rates and stabilized equipment pricing are driving deferred purchases. The European market is showing early recovery, and they are expecting mid-teens growth in both the agricultural and aftermarket segments in FY26. Plus, they've won over 200 crores of new business as well, and they say they can manufacture from different locations to manage exports tariffs for the US purposes. Now let's talk about valuations. Uniparts trades at about 17 times earnings, and compare that to Endurance Technologies at 45 times and Minda at 65 times. So it's clearly the cheaper play in the OEM space. Promoters hold about 66% stake, with institutions like Aditya Birla Sun Life Insurance and HDFC Value Fund also on board. Uniparts looks cash-rich and shareholder-friendly with the amount of dividend it has been paying out, but it needs to get its growth and margins back to regain its pre-listing shine.
Indeed, still below its IPO price. Recently announced a dividend as well, right? 22 rupees. Sonal, thank you for that update. Now, the SEBI chairman, speaking at a Business Standard BFSI Summit 2025, spoke about the regulator's view on the derivatives market. Let's go across to Yash for more on this. Yash.
Well, Hormaz, it was on October 13 that we at CNBC-TV18 had reported that there is no expectation of any changes being made to the weekly expiry until and unless the data does not show heightened activity from retail investors. Even in a situation where the data shows heightened activity from retail investors, there are other measures which SEBI is first likely to take and let retail participation cool off on its own before, making any changes to weekly expiries. SEBI chairman today at the Business Standard Summit has made a very important statement, supporting exactly the story that we had put out on CNBC TV18 on October 13th. SEBI chairman at the BS Summit has said that they need to find the right approach towards the derivatives market. There are many market participants which use weekly expiries, and hence, how can you shut down weekly expiries just like that? SEBI chairman also said that there are various measures which have already been taken. Some have kicked in, some are yet to kick in October and in the month of December, and only then any call would be taken, and currently data is being accumulated by market regulator SEBI. But important is that question from SEBI chairman that since so many market participants use weekly expiry as an instrument, how can the market regulator just shut down or remove weekly expiries?
Thank you. I think that is the key line. There is so much debate happening. Is it, the end of this question now on whether it's going to be phased out, or will it continue to resurface? But for now, the SEBI chairperson seems to have spoken. Well, that brings us to a close in trading hour. Thank you for watching. Don't go anywhere. Halftime report is up next.
Stocks oscillate between gains and losses as an eventful week draws to a close. Metals and financials are the big drags, while auto and PSU banks eke out gains.
Lenskart Solutions attracts 147 marquee anchor investors ahead of its opening of the issue of over 7,300 crore rupees. Expectation of strong market expansion in India and potential to grow overseas are key drivers for the eyewear brand.
The board of Swiggy will meet on November 7th to consider raising rupees 10,000 crores via QIP, even as revenues jump and losses spike. The CFO tells CNBC-TV18 that the fundraise is to build a strategic reserve and for growth optionalities.
And in a move to accelerate the adoption of AI in the country, Google will now offer Gemini AI Pro free for 18 months to Jio's over 500 million users. The service, otherwise costing around 35,000, comes with 2 terabytes of cloud storage.
Hello, good afternoon. You've tuned into Halftime Report coming live from the CNBC TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Mangalam Malu as well as Ekta Batra. Good afternoon, Mangalam as well as Ekta. But not that great an afternoon coming in, though a bit mild of a decline is what you're seeing. Not that bad, but 25,800, that's where the Nifty is at as of now. And that important level that yesterday Mangalam was also highlighting, 25,900, now it's below that. So a bit of a worry comes in that are we going to come back to that level? And 26,000 is what everyone keeps an eye out on. But yes, advanced decline ratio also more in the favor of declines as of now.
Every time we cross past the 26,000 mark, we feel a little itchy, and then, the market moves towards the 25,850 to 25,900, and now at the lower end of that range. Though the good part is it has seen some recovery from the lows, and the mid caps aren't falling as much. So let's see where that goes. And a lot of these stock result reactions have been incredible. The kind of moves that we've seen, the numbers that have come so far, not particularly disappointing. So mid-caps doing well, market at the lower end of the range. Let's see where we go next week.
Well, yes, guys, for today, at least, yes, we are, a little topsy-turvy in terms of the markets. But if you look at it on a week-to-date basis, the Nifty is absolutely flat. It's not done much on a week-to-date basis. And the broader markets have done better. So the mid-cap index, for example, is up around 1.5% at current reckoning. We do have the small-cap index, which has gained around 1% for the week. And the Nifty Bank, while that's up around 0.4% in terms of a segment, we have the Nifty PSU Bank index, which is really flown away this week. So up around 5.7% currently for the Nifty PSU Bank index. If you look at any of the PSU banks, say from the broader markets, IDBI Bank, Union, Canara, UCO, PNB, all of these stocks are flying away in today's trading session. IDBI at the head of it, up around 7.5%. SBI just about holding with a gain of around 1%. So extremely active side of that market. But let's get to our movers and shakers segment, where we track a whole host of stocks which are buzzing in trade. And first up is TD Power. Vinny, you're looking at that.
Absolutely. TD Power Systems, that's the one that we're keeping an eye out on. The stock is buzzing after its Q2 FY26 numbers, good numbers, but the company has revised its FY26 revenue guidance. Now, previously, they had said that they would get a total revenue of around 1,500 crores in FY26. They've upped it to 1,800 crores because 1,800 crores was a revenue that they were expecting in FY27. So as of now, they could and they will achieve that in FY26. At least that's what the guidance is coming in. They've seen steady inflows in terms of orders coming in for the company, both domestic as well as on the international front. Order book for at the end of September 2025 stood at around 1,587 crores. Order inflows are also up by around 45% on a year-on-year basis. Even for the first half of the full year, we've seen a good increase in terms of order inflows. Revenues, good performance there. Margin seeing a bit of a blip, but 19% is what they're managing to hold on to. So not a concern in terms of the margins over there as well. Good order book, execution, something is that one is keeping an eye out on. That is why the stock is buzzing in trade, and revenue guidance upped is also a positive one there.
Right, with that, let's go across to Sonal. She is joining us for Naveen Florence. Sonal, incredible numbers. Stock is up 15%.
Oh, yes. It's a big surge that we are seeing, and rightly so, because the numbers are very strong. It beat estimates on all fronts. Revenues are 46%, EBITDA at 250 crore rupees. We had margins which expanded 1,200 basis points. Profits also, but up 3 times on a YOY basis at 148 crore rupees. All the segments did well. HPP up 38%. We had specialty, which was up 35% this quarter. CDMO up 98% on a YOY basis. And just now the numbers, even the commentary was very strong. In fact, the company went ahead, upped their EBITDA margin guidance to 28 to 30%. And they say there is a possibility of an upward bias on this as well. In FY26, margins are expected at around 30%. They expect better second half across all the segments. And additionally, CDMO will see revenues of $100 million in FY27. Brokerages, they are very positive. UBS has gone ahead, raised the target price to 5,900 rupees a share. They have a buy call. They say the company has announced new R32 capacity, which will be the next key driver in terms of growth for the company. Jefferies has a buy call with a target at 66.35. They've upgraded the FY26-27 EBITDA by 13 and 14%, also forecasting 44% EPS CAGR over the next 3 fiscal years. Citi, however, is not so bullish. It has a sell call with a target price of 4,900 rupees a share. But yes, good numbers from Naveen this time around.
Yes, absolutely. Stock has absolutely flown away with a gain of around 15% Thanks very much for that, Sonal. But Mangalam, well, United Spirits, you're looking at that one.
I am looking at that one. You know, United Spirits has actually been the third alcohol bev company, which is a non-beer company, which has actually done a lot better than what the street was anticipating this time around. That's largely because of the tailwinds that continue to come in from Andhra. Remember, for United Spirits, the expectations were slightly muted because of its high exposure to Maharashtra, where the policy changes could have been, you know, a sentiment dampeners, but a favorable base offset that. So all you were left with were tailwinds. But more importantly, not only are people, you know, drinking better, the benign raw material prices also have boosted their margins. So it's near record high margins coming in for them, 21.2% as against 17.8%, which the street was anticipating. So put those numbers into perspective, 11.5% revenue growth year on year, 32% net profit EBITDA growth, and net profit growth of 41%. On all parameters versus our expectations, the company has outperformed and outperformed street's expectations as well. Prestige and above, the premium part of the portfolio, that has seen volume growth of 8% as against street expectations of 6 to 7%. So that's a positive. Popular volumes also came in at 6%, pretty much in line with street anticipation. But importantly, what drove their business, 7.5% overall volume growth, but we had 4% realization growth coming in and gross margins up nearly 200 basis points. So all these factors doing well for United Spirits. But from Daru, we move to Dawa. Ekta, tell us about Lupin and Zydus.
Well, this is a drug for an overactive bladder that we're talking about, Mybetriq, which is actually a huge blockbuster drug in the US. But nonetheless, Lupin and Zydus are selling this particular drug in the US, and what they have, or what the indication is that the innovator of the drug, which is Astellas, has said that they are quite bullish on this particular drug. So they've raised the guidance for this drug. They've raised it by around 80%. And they say that they will not be hard on the patent case. Now, the patent for this particular drug expires in March of 2030. Now, the read-through for Lupin and Zydus is expected to be positive because they are selling this particular drug in the US. I'll come to the background in just a bit. So the read-through is positive, as the commentary indicates increased offtake for the molecule in the US market. Now, the drug, like I mentioned, is used for overactive bladders. It was launched at risk in April of 2025. The combined market size for the drug is around $2.4 billion as of Feb 2024. In April of 25, the US court had ruled in favor of Astellas, blocking the companies from selling the generic version. But Zydus and Lupin continue to sell this version of the drug as the litigation is in appeal. So that's the reason why these stocks are in focus. But let's now go across to Vivek, who's here to tell us about all the buzzing stocks that are moving in trade this Friday afternoon. Vivek.
Well, thank you so much for that. At least in the broader end of the markets, you know, earnings reaction, like you mentioned, has been quite significant, very strong volumes across most of the companies that declared earnings post-market hours yesterday. Well, you spoke about some chemical names, you spoke about alcohol companies doing very well, but have a look at one pack from the OM or the oil space. So, Chennai Petro, one of the top movers as far as NSE 500 index is concerned, where good volumes over 6% higher, very strong GRMs, remember, in Q2. PSU banks, the entire basket, have a look at Union Bank, Canara Bank, UCO, PNB, IOC, multiple factors here, an FDI, likely FDI. Apart from that, few of these names may also make it to the Nifty Bank Index post SEBI's consultation paper last evening. So on the back of that, the entire pack doing very well. On the other hand, quite a few laggards as well. Bandhan Bank, very weak set. Wall Street, rightly punishing this particular name. Have a look at Cipla. Cipla went ahead and moderated its EBITDA margin guidance for FY26. That stock lower by over 2%. Apar Industries held a conference call last evening. They've highlighted certain near-term challenges as far as Q3 is concerned, especially in the export market. That stock down by almost 5%. And Emphasis, earlier today came out with its numbers. While the numbers were largely in line with what the street was anticipating, there's been a bit of a profit correction, down almost 4% for Emphasis today.
Okay, Vivek, thank you so much for that. But on that note, we're going to actually slip into a very short break. And don't go anywhere, because after the break, we have interesting conversations lined up for you all. So stay tuned for that.
Welcome back. You're watching us here on Halftime Report. The Nifty is still down about 80 points, but let's talk about Pidilite Industries. It reported a good set of earnings. I spoke with Sudhanshu Watts earlier. The consumer business volume growth has risen to about 10.5%. Gross margins improved as well. This is what the management had to say about the way forward.
In particularly our growth categories in the construction sector, we've delivered very high, very strong growths. I think on the second piece which I wanted to talk about is the strength of our portfolio, because our portfolio straddles now up and down and across different categories. And I think therefore our portfolio allows us to consistently deliver this double-digit growth. And lastly, I wanted to also tell you, and I think it's a milestone quarter in that sense, that we've begun a very strong move on consumerizing our tile adhesive brand, which is a very fast-growing brand, Roff. And I think if you are a cricket fan or even otherwise, I think between different impact properties, I think Roff is now finally coming alive. So tile adhesives will continue to sort of, grow and be a big growth engine as we go forward. I think this quarter also saw action on Dr. Fix-It and even on Fevikwik, where what we've done is we've introduced a professional range of Fevikwik for different applications and different segments. And this range is under what we call Fevikwik 102, 203, 243, 463. These numbers stand for speed, viscosity, and strength. This range has been received very well. And I think the kind of growth which we are getting and being able to address adjacencies, that's really heartening.
Right. So, I read your statement and you said that the consumer environment looks a lot more optimistic right now. So when it's not as optimistic, you did about 10.5%. When it's optimistic, how much higher can you do?
We will continue to deliver double-digit underlying volume growth.
Double-digit is a wide range, right? I mean, how much higher does... what's the difference between double-digit and an optimistic double-digit, according to you, if you had to quantify that, roughly?
No, so Mangalam, if you look at our trajectory over the last, let me first take about what the last 3-4 quarters trajectory's been. We've added about 100 to 150 bips to our growth. As a matter of fact, sequentially, we've been doing better. I think so that's interesting. I think if the environment is more conducive, we should be able to add a similar number as we go forward.
All right, 150 to 120 bips out there. You spoke about ROF briefly. How big has ROF become right now and what rate it is growing at?
So ROF is growing very rapidly. Unfortunately, Mangalam, I can't share a number because we don't share numbers for specific brands. But I can share with you that our brand ROF is delivering, well ahead of our and well within that range, but in a very strong 2 to 4x of real GDP number. So I think it is more on the outer side of that band. So that gives you a very good sense of the growth which the brand is.
What's the shift, mix shift been between your growth, core and performance categories, pioneer categories been right now?
So I think we continue to deliver. Now we are at about 48% of growth and 52% core. So I think that mix continues to strengthen as we go forward.
All right. Margins, let's talk about that because you have this guided band of 20 to 24% margins. You're at 23.9% in this quarter. Do you believe it at the higher end of the range because raw material prices are benign? So any more margin savings that come in would be passed on to the consumers to perhaps pump prime volumes from here on?
You're absolutely right, Mangalam. I think you've partly seen this in this quarter as well. I think the benefits which we derive on gross margin, and even in this quarter, we had an expansion of gross margin of about 70 bips. But a lot of this has got deployed in advertising and sales promotion. Some of it is building new GTM capabilities, particularly when it comes to architects, some of the newer areas that we are opening up. And lastly, in capability building. And sometimes in case of B2B, it is also passing on some of this to the customers directly.
And B2B business, you said that there were some challenges, but it still grew about 9.9%. So I was just trying to understand, from the mid-teens levels, it came down lower. From here on, have those challenges, seen the end, or are we closer to the end here? Are there any solutions?
Yes, Mangalam, you're absolutely right. Your observation is sharp. I think, what has happened is in our B2B business, that the projects end of our B2B business continues to show robust growth. I think when it comes to our B2B business, which has export intensity, some of the B2B business, particularly our pigments business, as you are aware, we also do considerable exports to the Western world. I think that has got impacted by all the uncertainties around tariff. I think with some of it settling, at least partly, and as we are seeing all of us, I think we are very optimistic that as we go forward, we should be able to deliver better growth on that end itself, which got quite affected. So overall, B2B growth will get lifted once again into mid-teens, underlying volume growth.
How long before that happens? That's point number one. And secondly, on margins, do they stay at the higher end of the range for the near future? Because raw material environment is still benign.
Yeah, if the raw material environment is benign, which I think it should be, our understanding for the next 3 to 6 months at least is that it's benign. So we should deliver within our corridor, but more importantly on the higher end of the corridor, Mangalam. You're absolutely right. And I think as far as B2B growth uplift is concerned, a little bit this one will be, Mangalam, dependent partly on what happens externally and on some of these trade settlements. So I'm saying if tariffs settle down, and if that happens in this quarter, then you'll start seeing results towards this end of this quarter itself. So the timing is dependent on when this gets settled, in my opinion. But our growth in other parts of B2B, domestic B2B, by the way, if I was to break up our B2B, Mangalam, just very quickly, into domestic B2B and export-led B2B, domestic B2B is still mid-teens. I can share with you. So I'm very happy. So therefore, that momentum is continuing in domestic B2B. I think it's the export B2B which got quite sharply hit, like you would have seen for some other companies. And that because of this piece,
Right.
If this corrects, then automatically you will go there.
Got that. That's good explanation out here. And just a final question before I let you go. The paints business. You keep saying that you will come up with a plan, you will tell us a little more, We've been waiting for so long. Come on, tell us something.
Mangalam, I think we are making steady progress. I think the only thing which I can tell is that we were there earlier in 5 states in down south. We've expanded to a couple of states in east as well. And we are looking at some of the slightly urban centers, particularly in the state of Odisha. We're trying to figure some of these things out. But I think we are still working on the business model to be sure that where we are, we deliver our expected milestones, particularly on market share.
What is that milestone?
We've always stated that when we go in the urban areas and small towns where we are there, we would like to be in the top 3 bracket, and we would like to have a high single digit to a double digit market share in these places.
All right, and you've seen that in the 5 towns that you were there, and now
we are seeing considerable sales growth. We are still not satisfied with the share ambition which we had. So I think we need to keep working on our business model and how do we get that sharper and better to be able to deliver that.
And is share the initial target that you have, or will you look at profitable share as well? Because in the paint industry, revenue is very easy to get, not so much when it comes to EBITDA.
So, Mangalam, Pidilite, we always want to deliver everything profitably. So profitable growth is almost like a given. So I think your point is very valid. I think we will. So therefore, to that extent, that's important for us. I think if we were to, overlook profitability, it is easy to deliver share. But I think whenever we talk of any number, we always talk of profitable growth. And therefore, you're right. We have to keep an eye on that and then deliver those revenue and share numbers. The good news is that the uplift quarter on quarter is there, which is very heartening. But we are still not close to the threshold we set for ourselves. So we need to do more work on that.
Okay, that was an interesting chat there. Updates coming in from the management of Pidilite. But a quick note for our viewers. As you can see on the screen, there is a money control stock score just above the line graph. And this is the score assigned to each stock based on money control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions.
Right, with that, we'll take a short break. On the other side, Ajit Mishra from Religare Broking will join with some trading strategies. Stay with us.
Welcome back. Well, for the markets, it's a quiet day, you'd have to say. So the Nifty is just about lower by around 100 odd points. But just want to point out a couple of stocks that stand out. Cipla, for example, is seeing profit booking for the second straight day. And while Umang Vohra now leaving the company and leaving the company on March 31st, 2026 is definitely a sentiment negative. They have in fact revised their margin guidance lower, and that's what is really deterring the street a little bit at this point in time as well. So they're expecting margins of anywhere between 22.75% to around 24% versus 23 to 24% earlier. So that's one of the reasons you're seeing Cipla lower. Sagility is the other one which saw a strong run yesterday, but now coming for some profit booking today, so that stock down around 2.8%. Ajit Mishra from Religare Broking now joins in to discuss the technicals of the market with us. Ajit, hi, welcome to the show. Well, the broader markets have done better this week. Do you have more stocks that you're probably picking out or more of a strategy within that space now?
Yeah, good afternoon, Nikita. So yes, we are seeing some stability, and the good part is that market-wise also we are not seeing any major price-wise corrections. It's the second week that we are ending almost on the flat note, and off late we've started seeing improvement in the broader indices also. Means mid-cap, small-cap, they have also started participating, and the market breadth is also like slightly on the positive side, especially after seeing this noticeable improvement in the FI sentiments as well. So keeping that in mind, the right approach is to stick with the sectors, the themes which are aligned to the market trend, and some of these stocks which are offering fresh buying opportunities. So from the pharma space is something that we like, where we are seeing fresh up move, that is Oro Pharma. It's been almost a year now that the stock has already spent in a corrective phase, and after spending in a very tight range of late, we have seen a fresh breakout in today's session. So we expect improvement in the momentum from the current levels, and 1200 is what we are eyeing as the immediate target. So with stop at 1120, one can accumulate Oro Pharma at current levels. Then we have PSU Banking, which is buzzing. The index is at the record highs. Most of these stocks are also aligned to that move. Bank of Baroda is something that we like from this space for fresh buying, almost on the verge of multi-year breakout here also. And 292 is what we are eyeing as the immediate target. So with stop at 272, one can buy Bank of Baroda also, along with Oro Pharma.
Okay, thank you so much for joining us this afternoon, Ajit, and giving us your views in terms of individual stocks as well as the market. But on that note, we're going to slip into a very short break. After the break, we'll get chatting with the management of IKS Health for the Q2 numbers. Stay tuned in. Welcome back to Halftime Report on CNBC-TV18. Let's put the spotlight on IKS Health. They reported their Q2 numbers. Strong set of numbers that came in Q2 FY26. Revenue growth of 21%. We're seeing EBITDA margin see an improvement as well. What is the outlook of the company? What is doing well for the company? Let's bring on board Sachin K. Gupta, founder and global CEO of the company. Sachin, good afternoon. Thank you so much, as always, for joining us on the show. Let's start by talking about the growth that we're seeing coming in, right? Because in the last few quarters, you were managing in that 15 to 16% growth in terms of revenues. This time, 21, 22% in that range where the revenue growth has come in at. So one, what has driven the growth this time? Was it mainly because of the recent acquisitions? And also, is this 21% growth is what is going to be the new normal now?
All right, thank you for having me on the show. It's a pleasure always. So on the growth, we've been always guiding that our TAM, which is a very large $260 billion TAM, of which $34 billion has been outsourced so far, is actually growing at 12%. And our thinking has been that as long as we grow faster than 12%, we are capturing market share versus losing market share. And our thinking is this is a multi-decadal unlock of the balance of the big TAM that exists. And so, you obviously saw there was constant currency growth in the 13, 14% range in the first 3 quarters after we went public. This time in the constant currency US dollar terms, the growth is 17%. In INR terms, it's 22%. So it's right in line with sort of what we had thought. And the drivers are purely organic, by the way. There's no inorganic growth whatsoever. And really, this is in spite of the fact that we are continuing to cut a set of customers that are relatively smaller in size from an acquisition that we had done about 2 years ago. So in spite of that headwind of intentionally cutting small customers, we've been able to deliver this growth. And again, a quarterly growth number is something that I don't want to react too much to it. We're still focused on this very large macro opportunity of the unlocking of the TAM from 34 billion to 260 billion that we think we're going to be a part of here over the next couple of decades.
Okay. Hi, Sachin. Welcome to the show. This is Ekta. Just wanted to get a sense, because your press release indicates that you've significantly accelerated the execution of your AI strategy. You've also appointed a new chief AI officer as well. Just give us a sense in terms of what kind of investments you're making. How are you exactly integrating this AI strategy, and when will it probably show in your P&L?
Yeah, no, hi. I think AI actually is taking our platform from that human-led tech in the loop that we had to do all these 16 tasks to an AI native agentic platform is one of the 5 core vectors of our strategy. And we're very happy to report that we've got some real momentum going. You might have also seen a press release recently that was endorsed by Google Cloud, where we've created the first of its kind in the industry, an encounter to reimbursement, interconnected, agentic, largely autonomous workflow platform, which takes 4 of the most strenuous tasks in the physician's workflow and totally eliminates them for the physicians, driving both clinical and financial benefits. And so that's a big testament to our AI strategy. And like you mentioned, our chief AI officer, Ajay Sehgal, who just joined us recently, ex-Microsoft, is really bringing a lot of that acceleration. And the reality is, because our pricing model, Ekta, is outcome-based, as we drive more and more AI penetration in our platform, all of that reduction of human task results in bottom line benefits, which is why you've seen, the sharp increase in our margins to the 35% odd EBITDA levels that we've witnessed this quarter. So right in line with our strategy, AI is a core vector of our business execution strategy, and we're happy to note some significant progress on that front.
All right. So, AI is a core growth vector for you. What about Western Washington Medical Group? My colleague did ask you about that, but I believe you skipped that. If you could tell us what the incremental revenues from that deal have been so far. Have you started to realize synergies?
Yeah, so Mangala, thank you for asking about that. I missed that. So yeah, Western Washington is moving exactly as per plan. And, the full platform is being implemented there. It's on schedule. And, I think we'll be able to track performance over a period of time. We don't want to go into deal-specific numbers, Mangalam, we never really do that. But the strategic importance of Western Washington is that we are implementing our full manifest of the platform there, just like we've done on 2 or 3 other deals we've announced recently. But equally importantly, we are actually on the Western Washington MSO cap table, which creates an additional pool of economics for us as we drive profitability in that MSO. So the strong profit performance that we delivered this quarter actually is in spite of a small minority loss that has come from that MSO's P&L to us, about 1 crore odd. But that is right in line with our strategy, and our current economics do not include any benefits of that second pool of economics. So as those start to show up as per our plan over the next few quarters, that will be a further accelerant to our profit.
The street is loving what you're saying because the stock was higher, but now as you're talking about all these opportunities and growth here, it's moved to the high point of trade, and this in an otherwise wobbly market. There you have it, 6.5%. So what about new clients? How many have you added this quarter? What's your plan here over the next couple of quarters?
Yeah, so we've announced 4 new clients this quarter that we've publicly released. Very exciting clients. One is one of the largest health systems in the US called Advent Health, where they were a client of the company we acquired 2 years ago. Now, one of our biggest growth pieces is being able to cross-sell our platform into the legacy Acuity customer base. So Advent is a fine example of that. We've done a platform deal with Revere Health, one of the largest multi-specialty groups in the state of Utah. Another very interesting customer addition. And then Jackson Clinic, which is also one of the largest multi-specialty groups in the state of Tennessee, is a large acquisition. And then last but not the least, a very exciting leading cardiology group in the country that has embraced our platform as their entire core operating chassis in a 10-year commitment is the 4th one. So strong customer acquisition momentum across the board.
Sachin, just a quick one. Given that United Health is your client, I believe recently one of their companies had launched something more related to AI and new digital side. Does that in any way impact the company, or how does it work now with your deal as well then?
Thank you for the question. Somebody asked that on the earnings call as well. So essentially, when you think of United Group, one of their subsidiaries is a company called Optum Insight. That has another subsidiary called Optum 360, and they bring all these technologies for the hospital market. Now, as you remember, we are very focused on the physician market. And they have a $100 billion business called Optum Health, which is the largest employer of physicians in America. That $100 billion business is actually our client. And that's where we provide our physician platform to Optum Health, which is very different from the platform that they've launched for the hospital business in Optum 360, where they are a provider to hospital services, to hospital enterprises. So really no direct conflict there. And, obviously, as you've seen, United Healthcare is under a lot of pressure to continue to drive more efficiency in their business. And that Optum Health subsidiary is our large client that we work with. So we continue to see robust momentum there as we continue to enhance various features of our physician plan.
All right, Sachin, run out of time, but not out of questions. So I'm sure we'll revisit this conversation later. Thanks very much for joining in and speaking with us. So that's IKS Health. As you can see, the stock has moved up during the conversation, actually, and the stock is, in fact, at the high point of the day, up around 6.6%. We'll take a short break, move away from equities for a bit. We have Manisha Gupta, who will be joining in to take us through a conversation with Jeffrey Christian of CPM Group.
All right, let's enter focus on the precious metal space now with both gold and silver off their respective life highs, trying to understand whether these metals can resume their bull run going forward. Earlier, Manisha Gupta caught up with CPM Group's Jeffrey Christian to make sense of these prices and the triggers behind them. Take a look.
The U.S. shutdown, government shutdown, is extremely problematic for the overall economy, both within the United States and on a global basis. Every week reduces U.S. economic output by 0.1 to 0.2%. So we have already shaved up to 0.8% off of our GDP, and our GDP was already suffering from reductions in employment, reductions in business investment, reductions in the housing market, and reductions in a host of other applications. So we already had a tenuous economic outlook, and we were tilting toward a recession. The lockdown doesn't help on a short-term basis and sort of helps push us toward that recession. But in addition to that, on a long-term basis, it severely reduces the credibility of the U.S. government and increases the uncertainties and anxieties that investors and corporations and consumers have around the world. And that will reduce economic activity, not just in the United States, but globally as well, because people are very much concerned about the stability and the direction of the U.S. government.
There are just so many factors, Jeffrey, that are at play right now. So looking at all of these, what is your sense on where is the gold price is going to end this year and a potential price range then for next year?
We wouldn't be surprised to see $4,500 by the end of this year, possibly somewhat higher. At some point in 2026, we're expecting that the quarterly average price may average $5,000. When we think about when we make our price projections, we have short-term price projections, which are intraday, or this is where we think the price will be this month. But then when we start going longer term, we look at quarterly price projections out over the next 2 years. And then once we go beyond 2 years, we look at annual price projections. And so from a perspective of where we think the price of gold will be in 2026, we wouldn't be surprised to see the price approaching $5,000 on average. And you have to understand that average, and right now the price, we've gone through 10 months of 2025, and the average price is something like $3,600. So people will say, well, the gold price was $4,400 this year. Yeah, for a day or 2 days actually, but the average is much lower. So if we're saying that we think that the price could approach $5,000 on average next year, that suggests a range that has the gold price going significantly higher than $5,000 on an intraday basis.
Yeah, okay. Jeffrey, a lot of people have bought into gold this year, and that's because they have seen higher returns. But going forward, what's your sense on ETFs, central bank buying, even retail for that matter?
Well, first off, central banks have been buying less gold this year. I know there are marketing groups that say that the central banks have been buying like 31, 32, 33 million ounces a year over the last 3 years. That's inaccurate. Central banks have been buying between, say, 8 and 15 million ounces a year over the last 3 years. And this year they're running at a rate of about 6 million ounces because of the higher price for gold. So they tend to be scaled down. In the first 9 months of this year, we saw very strong demand for gold, physical gold from investors worldwide, but physical gold, ETFs, futures, forwards, and options. In the last 2 weeks, when you saw the price go from 3,800 to 4,400 and then back down to 3,900 yesterday, what we saw was much lower physical demand for gold. And most of what we saw were ETFs, futures, and forwards and options, pushing the price up and then coming down last week. Those are short-term momentum traders. They were watching the price of gold go from $2,600 at the beginning of the year to $3,600 at the end of September. And they said, okay, this thing is rising more sharply than the stock market, so let's get in there. And they don't want physical gold. They don't want long-term investments. They're looking to get in and be able to get out very quickly. And that means futures, forwards, and ETFs. And that's what we've seen over the last 2 weeks when the price spiked sharply higher and sharply lower.
Jeffrey, before I let you go, I have to get in the silver price estimate going forward as well. That has been quite volatile. Do you see 50 come back in the next year?
We think that the silver price is going to stay high for the rest of this year, the last 2 months of this year, and probably move higher next year. I'm not quite sure what our average price is that we're projecting for 2026 in our various reports. But, we've seen the silver price move as high as almost to $54. It's come back off. It was trading around 48 something before we got onto this call. And our expectation is that while the silver price will continue to be volatile, and we wouldn't be surprised to see a spike sharply lower at some point on a short-term basis, on a long-term basis, we do see fabrication demand relatively high. Refineries are backed up with scrap, old silver investment products that have been sold to take advantage of these high prices. That's going to work through the market, and that will increase the supply over the next 2 months, 4 months, and that could weigh a little bit on silver prices. But again, the major factor determining silver prices, like gold, as with gold, is investment demand. And investment demand is driven partly by expectations of tight silver supplies, but it's more importantly influenced by investors looking at the state of the world, the state of their own local financial banking system stability, the state of their own economy, the state of political security. And all of those factors are unsettling investors right now. We've seen a very sharp increase in investment demand for silver this year, last year, this year, and we expect a further sharp increase next year. So we're expecting silver prices to rise. I assume that as I said, I'd have to look at my reports to see what our most recent projection for the average prices next year, but I assume it's well over $50 an ounce.
Welcome back. Well, still below 26,000 currently for the Nifty. So 25,792 is currently where we're at, down around 85 odd points. The mid-cap index is faring a tad better. So just about flattened out for the mid-cap index. Let's see, just about moved into the green. So a little more resilient at this point in time. Bank Nifty also has recovered a bit from the day's low. So 68 points lower at this point. Let's see whether that also makes a dash to the green mark in today's trading session. Well, on that note, we need to wrap up on the show. Thanks very much for watching. Business Lunch up next.
Stocks oscillate between gains and losses as an eventful week draws to a close. Metals and financials are the big drags, while auto and PSU banks eke out gains. Lenskart attracts 147 marquee anchor investors ahead of the opening of its 7,000 crore rupee IPO. Expectations of a strong market expansion in India and the potential to grow overseas are the key drivers for the eyewear brand. The board of Swiggy will meet on the 7th of November to consider raising 10,000 crore rupees through a QIP. Even as revenues jump and the losses spike, the CFO tells CNBC TV18 that the fundraise is to build a strategic reserve and for growth optionalities. In a move to accelerate the adoption of AI in the country, Google will now offer Gemini AI Pro free for 18 months to Geo's over 500 million users. The service, otherwise costing 35,000 rupees, comes with 2 terabytes of cloud storage. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormuz Fatakia. Numbers coming in thick and fast in what is turning out to be a very eventful week for our own markets, and the culmination of that is an very equally earnings heavy week as well. Numbers of BEL on your screens. A net profit of 1284 crores, higher than expectations. EBITDA too higher than expectations of 1480 crores at 1695, and margins too at 29.4%. So it's an operationally strong quarter for Bharat Electronics. So good numbers coming in. The order inflow for the quarter is something that will be awaited, and of course the guidance in terms of the order inflow that the company is expecting will also be awaited from the management. But for now, numbers prima facie look a beat on expectations. The stock currently not doing much, but has run up significantly as well in the last few days. So a strong performance from BEL, and just a few minutes earlier we were seeing numbers from ACC as well on your screens, and those numbers too were reported a few minutes back, and ACC as a stock reacting to those numbers, 2.5% higher on that stock as well. So good going for the two earnings reactions that have come in so far. BEL has also moved higher now into positive territory, and ACC currently trading with gains of around 2.5%. But for the markets, well, the Nifty still fighting to hold that mark of 25,800 as of now, and that will be the important level. Of course, we did break below the weekly low that we saw. So the index as of now is relatively flat for the week, if you could call it that. The banking stocks are the ones that are in focus after the new SEBI circular that came in on the regulations for the Nifty Bank, and specific names, of course, Yes Bank, Union Bank, Bank of India. Some of these names are in focus. Yes, Union Bank now almost 6% higher. Yes Bank too trading with gains of around 3.5% as well. So smaller banking names are the ones that are outperforming in today's session. The other big story of the day, though, is the Lenskart IPO. The 7 to 7.8 crore issue opens for subscription today. Mangalam is here to tell us more on that.
Well, the much spoken about, the much discussed and the much debated IPO finally opens today. It is Lenskart, a business that we know as, it has around 2,150 stores in every nook and cranny of the country, and increasingly 40% of their revenues coming in from outside of India in the Southeast Asian regions as well. But importantly, about the IPO, opens today up until November 4th, and it's a price band of 382 to 402 rupees per share, raising about 7,300 crores, of which fresh issue is 2,150. The rest is an offer for sale from promoters as well as investors in the company. Well, now, before the IPO opens for subscription, we had the anchor book update coming in as well. There was strong demand there, 3,300 crores allocated to nearly 150 anchor investors, which included a good mix of domestic mutual funds, domestic insurance companies, as well as global participants, which include the likes of New World, Capital Link, Fidelity, T. Rowe, and BlackRock, etc. So a bunch of anchor investors have put their might behind Lenskart. What does the company do, and what does it intend to do with the money that it gets? Remember, it runs about 2,150 stores, has the back-end supply chain for eyewear as well. So they want to basically use 273 crores to start new company-owned, company-operated stores. 590 crores will be used for lease, rent, license agreements, and they will be investing in technology as well as R&D for about 213 crores as well. It sells, designs a wide range of eyewear products. We know about that. They've made acquisitions as well. 40% of their revenue comes in from some of the acquisitions that they made outside of India. And if you look at their financials, last year they did numbers of close to around 6,500 crores, 6,600 crores on the revenue, had margins of 15% and a profit of nearly 300 crores, the first time that they turned profitable. And this quarter, the first quarter that is, they did about 1,900 crores in terms of revenue, 18% margins and about 61 crore. It's a strong business, 2.5 times, its nearest competitor in the country, and also has a fair amount of tailwinds for the sector when it comes to unorganized to organized shift. But all of that boils down to just one thing. How much is the price, or how much is the IPO being offered at? If you look at the trailing numbers, 10.5 times sales and 234 times price to earnings. And this is precisely the question I asked Piyush Bansal, and this is what he had to say. In the secondary market is the valuation that matters the most. And I'm looking at your numbers. You're seeking a post-money valuation for almost 70,000 crores in terms of market cap. Just basis trailing numbers, you are offered at a little over 230 times price to earnings, nearly 10.5 times sales. Even if you triple your profits from current levels over the next few years, you would be at around 70 times, right? So what I'm trying to understand is, how much value do you think personally you've left on the table for people who are entering right now?
I would say that firstly, as a company and as an entrepreneur, our job is to create value for the customer.
Yeah.
Right?
And now increasingly shareholder as well.
Yes, and the shareholder, as far as valuation is concerned, it is what the market decides. Even if we look at the valuation, there are investors who are selling shares, there are investors who are coming in, and they have done a lot of working to arrive at these numbers. All I can say is they'll be very close to comparables. They won't be off. Sometimes when you look at things without looking at the full perspective, they look different. But yeah, be rest assured that everything will be in line with what they should be. I don't expect anything abnormal. International continues to be a good focus for the company.
4,000 stores by 2030?
Again, I would say...
Possible?
Definitely. I mean, India has 80,000 eyewear stores, approximately, conservatively. And that Abhishek said, we have 60 stores for 1 million people. We have 20 times more jewelry stores in India. So one would say, can you add at least another 80,000 optical stores as a country? Yes. Right? Out of that 80,000, let's see how many Lenskart adds.
We just spoke about the Nifty bank norms as well. And, well, of course, some more flashes on your screen, by the way. BEL's order book now, as of the 1st of October, 74,453 crore rupees. The stock has also now moved to the highest point of the day, 2.5% higher on that stock. And numbers also coming in from Jubilant Pharmova. So it's going to be a whole line of earnings that will be reported through the course of the day. But we were speaking about the smaller banks and SEBI's proposal for the new norms for the number of constituents in non-benchmark indices. Vivek is here to break us down for us. Vivek.
Well, that's right. So last evening, this is an incremental development as far as non-bank or non-derivative market concerned. And you're looking at two indices. Number one is the Nifty Bank and the other one is the Fin Nifty. So the non-benchmark indices, SEBI's eligibility criteria is as follows. The first one, the indices have to have a minimum of 14 constituents. The top constituents weight cannot exceed 20%. So it has to be less than or equal to 20%. The combined weight of the top three constituents has to be less than or equal to 45%. And lastly, all other constituents' individual weights must be lower than those of the higher weighted constituents. So now analysts have gone and done number crunching as well as price crunching as to what exactly this would mean as far as the Nifty Bank Index is concerned. So number one, right now there are 12 constituents, so that will increase. So which are the likely candidates that could get included? Union Bank of India, Yes Bank, as well as Indian Bank are the three companies or the three banks that could get added to the Nifty Bank Index. On the other hand, in order to make way, and in fact not make way, but in order to give enough headroom for these stocks to be added, there has to be weight reduction in the top two weighted stocks of the Nifty Bank. So HDFC Bank as well as ICICI Bank could see some weight reduction on the back of that. The SEBI's consultation paper actually has given some leeway. In fact, they're saying that this can be done in 4 monthly tranches up to 31st of March 2026.
Vivek, thank you for that update there. And also smaller banks doing well for themselves in today's session. Now, Reliance has tied up with Google to offer free Gemini AI access to 505 million Reliance Jio users. Reema is here with more details on this. Reema.
Very exciting news for all Reliance Jio users. As you rightly pointed out, Gemini AI access will be available to all Jio users. That's more than 500 million plus as things stand today. Early access will be provided to the youth, 18 to 25 years of age. And this value, I mean, if you go to purchase it for 18 months, it would cost close to about 35,000 rupees. That's $400 million. With this access to Gemini AI, you can create videos, you can make your own pictures, plus you get access to 2 TB of cloud storage. But there has been this race by global tech companies to tap and hook India's internet population. So previously it was Perplexity which tied up with Bharati Airtel. Then OpenAI said the ChatGPT Go, which is their, the lightly paid version, will be available for free for all Indians starting November. So there is this rush to hook in the Indians, get perhaps their data, and tying up with telcos like Bharati Airtel and Jio is just easy marketing access. But this partnership of Reliance Industries and Google extends beyond providing, Gemini. They're also working together to provide Indian companies better access to Google's special AI chips called Tensor Processing Units. And Reliance Intelligence will also help businesses use Google's AI new platform called Gemini Enterprise. Back to you.
Rima, thank you for that update. Now, Swiggy reported numbers yesterday. The losses widened compared to last year. But the other big news was the fact that they are planning to raise up to 10,000 crore rupees via QIP. Now, earlier today, we spoke to its CFO, Rahul Bothra, about their fundraising plans and also on the outlook going ahead. Listen into what he had to say.
What we have seen in the quick commerce business is that the growth has accelerated. This was the third consecutive quarter of 100% plus growth that we delivered in that business. We've also seen a lot of investments, coming into the sector, both legacy players as well as new players wanting to enter a very, high growth segment. So we felt that this is the right time to, stock up what we call the growth capital. We've also been a very innovative company, and we do expect, a few more new services to continue to come out of our stable, as well as, raise a strategic reserve that helps us that we may never have to raise again. Just the announcement of fundraise does not, change our trajectory in terms of the profitable growth that we have alluded to. So we have reiterated our guidance that we will get to contribution margin break even by the June 2026 quarter. Hard to kind of crystal ball, beyond, say, some of the numbers that I talked to you about. We also want to retain the flexibility to continue to invest in marketing to attract new users. As I said, we have more than, we have close to doubled our user base in the quick commerce business over the last year. And we continue to see very healthy traction on new user addition as well as, repeat user performance. See, as a business, there's a lot of operating leverage. We are a technology platform. Even in the previous financial year, you saw close to 80 basis points, being added. Even in the current quarter, we saw 60 basis points, adding just on the operating leverage, despite contribution margin, being in a certain range bound manner. We do expect, a certain, contribution margin accretion of roughly 100 basis points, and the rest is going to come through operating leverage. And it's, a matter of a few quarters from here for us to be able to get to the steady state.
The management of Swiggy on their fundraising plans. On to the big earnings for the day. Maruti Suzuki is going to report numbers today as well. Sudarshan is here to tell us what the street is expecting from India's largest passenger vehicles maker. Sudarshan.
So before I talk about the numbers, let's take a look at the two statements that you'll see on the screen. So recently, after GST cut, Maruti Suzuki's chairman R.C. Bhargava had said the GST cut has the potential to reset the auto sector, and it's important especially for the entry-level segment for which volumes have been declined for the last few years. Second statement has come from Suzuki Corp chairman, who has said that in India, company is facing the intense competition, and the competition is as such that it has not seen in the last 40 years. So it tells you the story, because Maruti is the leader in the entry-level segment, and in the SUV space, it has been increasing the market share. So Suzuki, the competition that he's talking about, is mainly talking about SUV. Now coming to the numbers. So we are expecting a profit to decline by 7%. Revenue may increase by 7% as volumes have increased both on a sequential basis as well as year-on-year. EBITDA may come down by 5% to around 4,200 crore, and margin may slip below 11% after a few quarters. It may come to 10.6% versus 11.9% in the same quarter last year. But more than numbers, what would be important is what exactly management talks about FY26 outlook, and if after GST rate cut there has been an increase in the entry-level segment demand, because as of now Vahan registration data for festival season indicates that there has been increase in the demand, and growth for the passenger vehicle sector has been more than 20%. So more than numbers, important would be commentary.
We'll await the management commentary. The stock, well, off the highs of the day, still holding on to gains of around 0.6% ahead of the numbers. Take a short break. More news and updates on the other side. Welcome back. Now, SEBI Chairman Tuinkant Pandey, speaking at the Business Standard BFSI Summit 2025, spoke about the regulator's view on the derivatives market. Let's go across to Yash for more on this. Yash.
Well, before I come to what the SEBI chairman said, most importantly, let me just allude to a story that we had done on October 13th. What we had said back then is that SEBI is in the process of collecting data around derivatives. Now, importantly, any action on weekly expiries will be taken only if there is a heightened retail activity that shows up in the data. Even if there is a heightened retail activity which shows up on data, there are other measures which SEBI would first look at before really taking any action when it comes to the weekly expiry. Today, the SEBI chairman made some very important statements which sort of indicate towards the same story that we had done on October 13th. First one, market regulator SEBI chairman said that they have to find the right approach towards the derivative market. Also, he said that many market participants are using weekly expiry as an instrument, and hence you cannot just go ahead and shut down weekly expiry. He also said that there are various measures which have already been announced. Some have kicked in, some are yet to kick in October, December, and the data collection process is going on. But importantly, that one statement becomes very crucial where he says that there are many market participants who are using weekly expiry as an instrument, and market regulator SEBI cannot just go ahead suddenly and remove weekly expiry.
Interesting, and you can see the recovery on the stock as well. BSE now at the highest point of the day. At one point, the stock was down almost 5%. So it's a 6% plus recovery from the day's low for BSE. Yash, thank you for that. Now, in a significant development, Defense Minister Rajnath Singh has signed a 10-year defense framework with his US counterpart, Pete Hegseth. Now, the deal was signed on the sidelines of the ASEAN-India Defense Ministers meeting in Kuala Lumpur. Now, in a post on social media platform X, Rajnath Singh said that this framework will provide the policy direction to the entire spectrum of the India-US defense relationship. He also added that the partnership is critical for ensuring a free, open and rules-bound Indo-Pacific region. Now, the National Democratic Alliance, or the NDA, has released the manifesto for the upcoming Bihar Assembly elections. The document was unveiled in Patna by BJP President JP Nadda along with Chief Minister Nitish Kumar. In the manifesto, the NDA has promised to create over 1 crore jobs, mega skill centers in every district and 10 lakh rupees to people from economically backward classes. They have also promised to provide financial aid for 1 crore women through the Lakpati Didi scheme and the Mission Crorepati for women entrepreneurs. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Just before we move on, pull up Strides Pharma. The stock has now moved to the highest point of the day. Some very, very strong results coming in for the company. 9% higher now on the stock, closing in on its 52-week high of 972. Margins were up almost 5 percentage points. I'll get you more details on the other side of the break. But the big news from last night, a win that felt bigger than all other wins, a semi-final that felt like a final. You've seen it all in the movies over the years, but on Thursday night, we got to experience Chak De, Dangal, Lagan, all of it in real life, and that is how every single follower of Indian cricket felt last night as Team India, with their backs against the wall, facing a record run chase in a World Cup semi-final, pulled off a heist to remember against the defending champions Australia. An unbeaten 127 from Mumbai girl Jemima Rodrigues, very, very ably supported by Harmanpreet Kaur, India's captain, or possibly playing her last World Cup, and a blinder from wicketkeeper Richa Ghosh carried India over the line. And with this, the Indian women's cricket team is now in the final of the World Cup that takes place on Sunday at the same venue against South Africa. As we wrap on this edition of Business Lunch, here's a quick note for our viewers. If you would like access to expert-driven insights and actionable chart patterns, simply scan the QR code on your screen to subscribe to Money Control Super Pro and get daily expert calls, actionable charts and insights to power your investing decision. Plus, this festive season, there is more reasons to celebrate. 10 lucky subscribers every day win 1 gram of gold. So don't wait. Scan, subscribe and make your portfolio shine brighter with Super Pro. Take your lunch on leave on this edition of Business Lunch. Thank you for watching.
Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. It's a Friday. That's one thing to cheer about. The markets, though, not cheering so much. The Nifty is sitting with cuts of around 100 points as we speak. The mid-caps, they actually briefly turned into the green, but back again in the red. Banks also in line with the benchmarks, down around 0.4%.
That's right. Good afternoon, Sonal. And like you mentioned, it's Friday. That's the one thing we're looking forward to. It's been an earnings-heavy week, and the next week too will be dominated by a lot of companies that will declare their results. But we have a lot lined up on the show. Some important corporate conversations post Q2. So let's start off with the top headlines. Stocks oscillate between gains and losses as an eventful week draws to a close. Metals and financials are the big drags, while auto and PSU banks eke out gains. Mid-caps fare better.
Navin Fluorine zooms after a strong set of second quarter numbers. Revenue rises 46%, while profit sees a multi-fold jump. Management has also upped their margin guidance to 28 to 30%.
Shares of TD Power jump over 10% on the back of a strong Q2, where revenue and profit grew over 40% and order inflow rises 45%. The management has also upped revenue guidance to 1,800 crore rupees from 1,500 crore rupees earlier.
Shares of United Spirits rise following a solid set of September quarter earnings, tailwinds from Andhra Pradesh's new liquor policy and an improved product mix and growth.
IKS Health reports a strong set of Q2 earnings, with revenue seeing growth of over 21% on a year-on-year basis and profit around 60%. The management tells CNBC TV18 that they are still focused on large macro opportunity of unlocking total addressable market.
Those are the top headlines. A lot of mid-cap movers on our radar. The mid-cap index, though, is under a lot of pressure. The advance decline ratio in favor of declines. But this is our special segment, mid-cap movers. We have Hormuz today to take us through the mid-caps that are moving around in trade. Hey, Hormuz.
Well, the mid-cap index may be lower, but the earnings reactions seem to suggest otherwise. You look at Strides Pharma now, 13% higher, very close to its 52-week high, which is 972. So 12% higher on Strides Pharma. Intellect Design as well, another earnings reaction. Numbers just came in a few minutes ago, and Navin Fluorine, of course, at a record high, 15% higher on the stock, the biggest single-day gain since 2020. Now, there are some other, so I spoke about smaller banks as a theme doing well today on prospects of being included in the Nifty bank. Yes Bank is one such name. Union Bank is one such name as well. Union Bank's numbers were disappointing. The stock was down yesterday. It's recovered that losses and a lot more. It's 5.5% higher on that stock. But there is some profit booking coming in on the metal names. Vedanta reports results in a few minutes from now. Stock at the lowest point of the day. Nalco is down 1.5%. Hindustan Copper is too down to the day's low, seeing some profit booking there. Volume stocks doing well on the volumes front. IKS Health earnings reaction is 6% higher on the stock there. Welspun Corp another earnings reaction, but look at Bandhan Bank. The stock is now at the lowest point of the day, 8% lower on Bandhan Bank and on very, very strong volumes. And lastly, stocks that are at a 52-week high. Chennai Petro continues to move higher. It's had its best week in almost 6 months now. Canara Bank is another name that did well yesterday, continues to build on to those gains. And IDFC First as well at the highest point of the day, 4.5% higher at a 52-week high.
Well, thank you so much, Hormuz, for joining us and giving us a list of all of the stocks in the broader end of the markets that are moving around in this session. Well, we'll now slip into a short break. Up next, we will connect with Adil Agarwal, the CEO of Dr. Agarwal's Healthcare, to discuss the Q2 numbers. Stay tuned.
Welcome back. Dr. Agarwal's Healthcare was the first management of the show. It reported a good set of numbers. Profits zoomed 79%. Margins came in healthy as well. The stock, though, is at the lows of the day. So let's understand the business outlook. Dr. Adil Agarwal, who's the CEO of the company, is joining us now to understand the outlook going forward. Mr. Agarwal, good afternoon. Thank you so much for joining in. Well, the top line growth has been strong, 20%. Can you give us a sense of the breakup between mature and newer facilities, and how many of the facilities are breaking even right now?
Hi, Sonal. Firstly, thank you for having me on your show. Happy to say that our business has grown 20% compared to last H1. We touched a total top line of 1,008 crores for these 6 months of this year. So totally, if you see our business now, we have a total network of 258 facilities, out of which 239 are in India and 19 are in Africa. Out of these, if you see over the last few years, we've done significant rollout of our new centers. So we have 123 mature facilities, and the rest of them are all emerging facilities. Most of our mature facilities are now profitable. Emerging facilities, if you see the cohorts in the last couple of years, are still ramping up. But as they start to become mature over the next couple of years, they will also start to turn profitable.
Okay.
Happy with the way the business is ramping up right now.
Okay, Dr. Agarwal, at the start of Q1, you had actually highlighted that you intend to grow in this year by at least 20%. You're on track. Are you confident of ending the year higher, in terms of top line by over 20%? And EBITDA margins currently are over 28%. Can this be sustained given the fact that there are quite a few new facilities that are coming on stream?
So Vivek, thanks for that. So we had given a guidance of about 20%. We are fairly confident that the business will continue to keep up with that line of growth. A couple of reasons for that. If you see our business, we have a sizable presence in both the West and the North. And the way our business functions is typically it's a bit cyclical, where in Q3 and Q4 is when you will start to see a lot more patients walking into our centers in especially the Western and the Northern regions. So some of those regions will start to outperform. So we believe with the current growth in our existing base of centers, plus we are adding about 30 new facilities for this year, we're fairly confident that we should be able to maintain the guidance which we had given for in Q1 in terms of revenue growth.
That is for revenue growth. What about margins, Mr. Agarwal?
So given the fact that, we have been able to maintain the margins with this kind of rampant expansion, we believe that we should be able to maintain our EBITDA margins at the 28.5%, which we've been maintaining for the last 6 months or so.
Okay, so 30 facilities is what you're planning to add in this year, if I got that number correct.
Yeah. Absolutely correct, yes.
Okay, so this time around, what was the contribution coming in from complex surgeries? Because that is an important segment. You do have cataract surgeries, which was up 25.5% in Q1, robotic cataract surgeries. How did all these segments perform in the quarter gone by, and what is the outlook overall for FY26?
So what we've been doing in the last few years is we've been significantly increasing the kind of complex surgery that we've been doing across our system. So now if you see in our business, about 73% of our total surgeries comes from one single category, which is cataract surgeries. And what we have seen over the last 2 to 3 years is the contribution from higher end cataract surgeries, which is basically what we call as robotic cataract surgeries. That contribution has now become 25%, which was at about 18-19% about 3 to 4 years ago. So that is something which we are seeing as we add more high-end equipment, as many of our doctors get trained in some of these high-end procedures, as the brand starts to become a lot more familiar, we are starting to offer some of these options to our patients. And that is what is driving significant increases in your higher-end surgery volumes. Similarly, even in terms of refractive surgeries where we operate to get rid of glasses, we have started to increase the contribution from our lenticular procedures. These procedures are what are famously known as the smile procedures. That has also grown by about 11% over last year. So these two trends are actually significantly helping the group, and we hope to continue with this trend by adding more machines and getting more doctors trained to provide these kind of high-end surgeries for us.
Dr. Agarwal, markets are also very keenly anticipating, an update on the merger. What is the timeline? When can we expect this particular merger to be consummated, and what will be the benefit, especially in terms of margins, once the combined entity comes into force?
So Vivek, we have now gotten in principle the approvals from the exchanges. So we will be looking at consummating this merger in the next 12 to 14 months. So the next 12 to 14 months are critical by when we should be able to get this merger done. We believe that we should be looking at least a 1 to 2% improvement in margins once the consumer is done. There will be a lot of efficiencies and synergies we will be able to bring in. So hopefully that will actually help us improve the margins even further.
Okay, all right. Is there a number to how much higher would the margins be once the efficiencies kick in? What kind of EPS accretion will you see?
I don't have the exact numbers right now because that is something which will be difficult to predict. That will also depend in terms of how the business ramps up and how many of our new facilities perform. But overall, we believe there are significant synergies we expect to unlock post the merger.
Okay, thank you so much, Dr. Agarwal, for joining us and giving us a sense of how Q2 panned out. A lot more questions, especially in terms of expansion, but we'll keep that for another day. Right now, we'll move on and slip into a short break. Up next, we will connect with the management of Rajrat and Global Wires to discuss the Q2 numbers. Stay tuned. Welcome back to Midcap Radar, where as promised, Rajrat and Global Wire is in focus. Remember, the company posted a good growth in profit as well as top line, but margins on a year-on-year basis compressed. Sunil Chodia, the CMD at Rajratan Global Wire, joins us now. Well, sir, thank you so much for joining us. Like we mentioned at the start, there has been a 15% volume growth, despite the fact that at the end of Q1 you had indicated that there were various uncertainties, especially related to tariffs as well as export markets not doing as well as earlier anticipated. So what drove the volume growth? And also, first you give us a sense of how exactly business panned out, especially in the export markets.
Yeah, so we had invested in Chennai in a new facility, which is up and running for last 1 year. And now we got major approvals in our Chennai factory from our marquee customers. And we are able to push more volume from that location, which has made a viable capacity available to us. Okay, so this has been possible only in the last quarter. And that is why we are able to sell more. Also, in the global market, we are getting more and more approvals, and there is a good growth in export market also for us.
So, Mr. Chodia, this Chennai facility, two-part question on this. You said in last 1 year it has been up and running and getting you more volumes. How much of the volume growth, or how much volume came from the Chennai facility? Secondly, is it running at full capacity utilization? If not, by when will that happen? And would that mean more volumes coming your way in FY26 and FY27?
Yeah, so Chennai facility, as you know, we had invested into 50% of the actual capacity of our plan is to make it 60,000 tons ultimately. Current capacity is 30,000 tons per annum, and we are running at 60% capacity utilization. And we have also decided to now invest in the remaining capacity to make it 60,000 tons. And we are very confident that the next year we'll be able to use substantial capacity in Chennai.
Okay, we got that. So now we've got Chennai out of the way, but let us talk about the EBITDA margins. EBITDA margins on a year-on-year basis have moderated. Now they're slightly northwards of 13.5%. Street is keen to know, when this can move upwards. What impacted the margins in H1 and H2? Do you have any tailwinds that can aid margin recovery?
Yeah, so if you closely look at the numbers, on a quarter-on-quarter basis, the margin has improved by 1%. Okay. From lowest 12.5% EBITDA margin in the last quarter, we have improved it to 13.6% margin. And this has been possible because of improvement in Thailand business. And in India, the margins will not improve because there is an excess capacity in the market. But for Rajratan, there is a special situation. We are in Chennai, and there is a substantial possibility of reducing our cost. As we improve the production there, our cost will come down. So that is another, possibility of improving margin from Chennai. So in coming quarters, you will see improvement in margin as well as improvement in tonnage from both our Thailand facility as well as India Chennai facility.
So you said there's overcapacity in the Indian market, but still the Chennai facility will allow you to improve margins as costs come down when production increases. So how much higher can the margin be because of cost reduction that you will see? And that 60,000 tons that you said you'll increase the volumes to, when will that come on stream, Mr. Chodia?
So, long term, we see that this business should come back to a 15% EBITDA margin. Exactly, I cannot tell you when it will happen in the next quarter or subsequent quarters. But the normal working will come to 15% EBITDA margin very soon.
Okay.
And sorry, on that 60,000 tons capacity, when does that come on stream for Chennai, Mr. Chodia? Will it happen in next fiscal or after that?
That will be operational from first quarter of next financial year.
Okay.
Okay. Sir, you've told us that Q1 was the bottom in terms of margins. Now, what we want to understand is how has pricing environment been, especially given extremely volatile input costs? And number two, we are short of time, sir. Give us a sense of how the export market demand is panning out, especially in the context of tariffs.
Yeah, so fortunately, tariff has not affected us. It has rather given us an advantage because there is excess tariff on China. And in global market, we are competing with China. And there are good news coming in from our marquee customers in export. So we are getting more and more approval from our multinational companies, whom we have been supplier for many years in India and Thailand. But now we are supplying to them. We have begun to supply them in Europe and
That is what I was going to
North American market. So that is the market which is growing for us.
So, Mr. Chodia, you are saying you're not impacted by tariffs. There are new capacities coming in Chennai, and that is something which could aid margins. 15% volume growth this quarter. What is the target for the entire year? And once the additional capacity comes in, what is the target for FY27? This is in terms of volume growth.
Yeah, so as I have been telling, we will have a volume growth of 15%, and we are close to that number, or we will achieve that. I'm very confident. And we have an aggressive business plan for next year. So similar kind of volume growth you can see next year also.
Okay, thank you so much, sir, for joining us, giving us a sense of how Q2 panned out and what exactly you expect as far as the remainder of 2026 is concerned. Well, a couple of stocks on the radar. If you could pull up the stock of BSE, Bombay Stock Exchange, it's been an extremely volatile day as far as BSE is concerned. Certain news reports had indicated and had spoken about expiry-related information, but an immediate clarification was put out on your channel. And post that, have a look at how this particular stock has recovered. It's up almost 2% after being down 4% at one point during the session. Along with that, another capital market play, which is Angel One. That stock too, after significant volatility, has now moved to the day's highest point. On the other hand, certain chemical stocks, SRF especially, has seen selling pressure intensify. That stock has moved after an extremely strong quarter, is now one of the top gainers, especially as far as the broader end of the markets is concerned. Some of the other stocks, especially when you're looking at hospital names, those stocks are seeing some selling pressure. Max Healthcare, Apollo Hospital, Fortis, all of these stocks under pressure in today's trading session. Important to see, especially what actually transpires in terms of pricing negotiations between hospitals as well as insurance companies.
Okay, some interesting names there. By the way, Lenskart IPO's update, it has totally been subscribed at 0.42 times, and the retail portion has been subscribed 0.97 times. We'll keep getting you updates on this one. But with that, we have run out of time on this edition of Midcap Radar. Stay tuned, your stocks when we return.
Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning into CNBC-TV18. Looking at the markets right now, that's a bit muted in today's trading session. A bit further, more of a decline at least is what we're seeing coming in, especially in the last half an hour is what we could say. Now the Nifty is trading at the day's lowest point. We opened up in the green, but then we just saw a decline coming in. So yes, down 100 points as of now. 0.4% down in terms of the trading session as of now. Let's look at what's not doing well. Metals. Nifty Metals is among the top sectoral losers, so we'll keep an eye out on that. Nifty Bank, Nifty IT, those are also not doing well. So that is something that is not supporting the market at all. But PSU banks, that's managing to hold on to some bit of a green. So Nifty PSU Bank, that's one of the sectors that's managing to hold on to strong gains in today's trading session. 1.84% of gains coming in for Nifty PSU Bank. I want to look at Nifty Mid Cap as well. You know, what is that doing? Nifty Mid Cap 50. That is the one holding on to gains, but overall Nifty Mid-Cap, that's seeing a bit of a decline, right? Nifty Mid-Cap 100 is down 0.06%, very flat right now, trading between the red and the green is what we could say coming in. But yes, the broader end of the market is also not doing well, and advance decline ratio, that's why is in the favor of declines versus advances. Also at the bottom of the screens, you have Sammaan Capital that has reported its numbers. Net profits are down 7%. This is compared on a sequential basis. The stock is also seeing a bit of a pressure. Revenues down by 6% as well. 2,251 crores is what the revenues come in at. So a bit of a spike up and then again a bit of a fall that's coming for the stock. We'll wait out for more internals, but yes, that's Sammaan Capital's Q2 numbers. But this is a show where we solve all your stock related queries, and we're going to be doing just that with Shaina Mukaddam, independent market expert, as well as Vaishali Parekh, Vice President Technical Research at Prabhudas Leeladhar. Shaina, Vaishali, good afternoon. Thank you so much as always for joining us on the show. Let's get started with those stock related queries then. The first query for today coming from Meher Khanna, who's writing to us from Visakhapatnam. She's holding 250 shares of Shakti Pumps. Price it is 893 rupees per share. Right now the stock is trading at 815, so they're making a loss on this one. Wants to know whether she should hold or look to sell this. Shaina, afternoon, what's your view here?
Well, I personally also hold it. So, and I definitely have a positive view on the company, Shakti Pumps. See, they have got 25% market share in the overall solar pumps business. And recently they got a 1,000 crore plus order from Maharashtra State Electricity for the solar water pumps. So I think there is a good opportunity going forward in this business. And if you look at valuations, they are not expensive. If you compare it with EV, the EV to turnover is just about 3 times 1 year forward, and EV to EBITDA is about 15 times. So I would expect the overall growth to be about 20-25% in the top line. So I would say it's a good investment and you continue to hold.
Good investment, continue to hold. That's the word coming in from Shaina. But Vaishali, what's your view? Last 6 months or YTD returns, when you look at it also, nothing exciting, right? Specifically YTD, it's down 27%. What should they be doing now?
Hi, very good afternoon, Vinny. So I think, yes, the overall, when I'm looking at the larger period time frame, the stock is very healthy, robust, and right now we've seen after making a high of around 1,400 and all, it's come to a bit of a profit booking and all. So in my opinion, if one has to look for a longer term perspective, start accumulating at these lower levels. I think 750 to 800 is a very strong support band. And I think once we see the stock moving about 900, it will pick up momentum and get back on track for a good trend. So since this person has bought at higher levels, I would say do accumulate at lower levels to better your cost.
Okay. Keep an eye out on Shakti Pumps over there. Let's move on to the next query. This is coming in for Shriram, who's writing to us from Bhubaneswar. It's an investment query and he wants to know if he can buy Bharti Airtel shares at the current levels. Shaina, what's your view coming in for Bharti Airtel?
My view is positive, and I would say you can buy even at current levels if you have a long-term holding period. Valuations, for this size of a company, I don't believe it's expensive. If you compare EV to EBITDA, it's about 12 times 1 year forward. Also, if you look at their ARPUs, they have been moving up, which is actually supporting very strong numbers that we saw in Q1. And next week will be the Q2 numbers. They also expect good numbers. Last August, they had increased their rates, okay, and their tariffs. And even in August of 25, that is current year, they have actually discontinued the lowest prepaid pack. So I think all these things put together, the ARPU should move up. I would say between 8 to 10% for this current year, FY26. And I think they have got good plans both in Africa. They have got good plans even for, their undersea cables. All these factors put together, I would say about Airtel makes a good long-term portfolio bet.
Okay, good long-term portfolio bet. So can look at buying at this. Vaishali, your view, similar to China?
Okay, so actually, technically, I think, whenever market corrects, this too can go towards 1950 to 2000 levels. So I would say, yes, start buying, but I would say also accumulate in tranches.
Okay, start buying, but accumulate in tranches. Don't go all in at one point of time. That's a word there as well. So yes, buy. Bharat Electonics can buy in tranches as well. Next query for today. K. Padma, who's writing to us from Telangana. She's holding 200 shares of NHPC. Price is 40 rupees per share. Wants to know the future prospects of NHPC. She's bought it at 40, so she's making a profit. Shaina, what should she be doing?
I would say that, it is valuation that's like not cheap or anything of that sort. It's pretty expensive in my view for the type of business. Having said that, I think you have the results that are coming up next week. So the numbers in FY26 and including this quarter number should be better on a YOY basis because optically should look good because last year, especially first half, they had a lot of write-offs and they did one-time expenses, etc. So all those things behind it. Plus, they have got some of their projects that have commenced operations during this year, first quarter, and also by this year end, they will have one more project commencing operations. So till FY27, I think this incremental growth will reflect in better numbers. Having said that, I would take any bounce for an opportunity to switch, and probably I think the bounce could be closer to the numbers, which is next week. I would switch.
Okay, you could look at the switch if there's a bounce that comes in. Vaishali, what's your view for NHPC? Should the viewer continue to hold or maybe look to get out and book a profit?
So I would say it's currently at a make or break level. 84 acts as a very near-term crucial support. So better to book partial profit right now because if we see a dip, I think it can go towards 80 also, 80 to 78 levels. That would be the level to again add more.
Okay. Keep an eye out on those levels over there. Can book some partial profit. That's the word on the technicals there. Let's move on to the next query then. We have this coming in from Dharmesh, who's writing to us from Mumbai. He's holding 900 shares of Biocon. Price is 374 rupees per share. Wants to know if he should continue to hold, sell. What should they be doing right now? Biocon, what's your view there, Shaina?
I would think that is one of the better pharma companies. At the same time, for FY26, I don't expect too much of change in terms of profitability because interest costs are high. They are repaying the debt, okay, and I think the interest cost will remain high through this FY26. Having said that, I think the tie-up that they recently did with Civica is very positive because they already are selling insulin generic in US, and this will give them an additional boost and market share sales in the US. Civica is a low-cost pharmaceutical distribution company, so there I think it will be a very good positive for them going forward. And I believe they are doing well both in the insulin as well as peptide business. So it is one, I would say that you continue to remain invested, though it is now at his buying price, but it would make sense to hold it for the medium to longer term.
Okay. Can hold for the medium to long term. But on the technicals, Vaishali, what's the view coming in? Muted returns that we are seeing in the last YTD performance when I'm looking at it. And right now also it's near their buy price only, the stock. 375, they bought it at 374. What would you say they should do?
Yes, rightly said. I mean, pharma has really not shown any participation. But talking about Biocon itself, I think it's coming out of its consolidation. So that means there is some strength seen. I would say continue holding. This, in all likelihood, can go towards 400 to 420 for now. So that would be the level where you can consider to book partial profit.
Okay, keep an eye out on those levels over there. But we're going to sip into a very short break. But as we sip into the break, a quick note for our viewers. You must have noticed that there is a money control stock score just above the line graph. And for Biocon, you could see it as well right now. Now, this is a score assigned to each stock based on money control's multi-factor algorithm. Each is calculated by analyzing 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, J factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer to carry out necessary due diligence on their own or through a certified registered financial advisor for investment decisions. Welcome back to your stocks on CNBC TV18. Nifty continues to trade below 25,800 levels. 25,777 is what the Nifty is trading at. But let's keep it going with all the stock-related queries. The next query for today is coming in from N. Gopalakrishnan, who's writing to us from Chennai. He's holding 1,000 shares of Route Mobile. Price is 1,400 rupees per share, making a loss on this one. So he's wondering if he should book his losses, maybe look to average, stay invested. Shaina, what's your view?
I would say that the results are there in the near term, so he can look at the results, see if there is any positive developments, and then he can take a call. Maybe 50% he can exit and 50% hold and review. Basically, it's difficult to say totally sell because he's made this huge loss. The stock has actually seen a one-way down. And but at current levels, it is not very expensive. So I would say review the numbers. And actually, the negatives that actually saw this dip are somewhat behind us. The promoter sold out their stake to Proximus, which actually now holds 75% stake in the company. And also, we have seen softness in revenues because of some of their clients discontinuing. But they continue to do well in their CPAC business, even in some of their IT solutions business. I would say while revenues may disappoint in terms of either growth or stagnation, they are doing they have started taking measures for cost optimization, wherein we can see EBITDA margins being better, and this could provide some support for the stock at current levels. So I would say see what the results they sort of declare, and then take a call as to if you want to totally exit it or keep some part for the long term.
Okay. And Vaishali, on the charts and technicals, what is the indication that they're picking up? Any signs that maybe it could come back nearer to that level of 1,400 that they have bought it at?
That's really hard to tell. But all I can say is that even when I'm looking at a weekly chart, it's in deep oversold and the indicators are showing signs of exhaustion. So final support should be 700 and wait for a bounce. If we are lucky, we see a bounce at least up to 800 levels. From there on, we can have a review and probably then we can hope for a target of 900 to 1,000 levels. But right now, absolutely negative territory. But only thing is expect a bounce.
Okay. That's a view there for Root Mobile. Next query for today, we have Ashar, who's writing to us from Pune. He's holding 770 shares of Phenolics Industries. Price is 48 rupees per share is what he's bought it at right now at 188. He's asking if it's a good time to exit or should he continue to hold for the next 3 to 6 months before booking out his profits. Shaina, your view?
Well, the only thing that is positive about the company is that he's gotten at a great price. Entry price is very good. Having said that, here again, the numbers are going to be out soon, so you can review it in the numbers. But I believe that, if you look at the numbers over 5 years, they have been losing market share. The revenues have been more or less flat over the last 4 years. Profitability has been down. The stock price also has not really given you too much return. So I would believe that, because they're losing market share, doesn't make sense to hold it for the long term. It is better to look at it, review it, because PVC prices, which they manufacture also in-house, backward integration, those prices having crashed last couple of months have now started stabilizing. So maybe the pressure on the top line may reduce. At the same time, I would say there is no point holding the stock for the long term. You see any bounce and you exit.
Okay, see a bounce and you can look to exit. Vaishali, your view?
Well, actually, the stock technically is looking weak. It was only showing strength about 200 odd levels. So right now, if he's holding, I would say book profit or keep a stop loss of 180. Because if 180 levels break, that could call for further trigger for selling pressure. So keep a stop loss or book partial profits.
Okay. Keep a stop loss or book partial profit. That's the word there on the technicals. Let's move on to the next query. We have SK Datta, who's writing to us from Kolkata. He's saying that he wants to buy Tilaknagar Industries at the current levels. Shaina, what's your view? Tilaknagar Industries had seen a lot of news flow also that had come in a few months back now. And that time we had seen a lot of move coming in the stock. But now, what's your suggestion here?
Yeah, and the news was quite, substantial. Like a company of the size of Tilaknagar acquiring Imperial Blue, the brand size itself is 3,000 crores. If you look at Tilaknagar's, current revenue, they could at best do about 2,000 crores of revenue for this year. So basically, they have acquired a much larger company, a much larger brand. Which actually, if you combine the two in FY27, will give you a big jump. in terms of revenues. Also, in terms of their reach, they are planning to use this to expand their product portfolio. As of now, I think about 90% of their revenues is in branding. So with this whiskey acquisition, it will not only give them a new line of product, but also move into an all-India type of business. So to that extent, it's a very big positive. Now to fund this acquisition, so they have got, I think they're talking of about over a period of time, 4,150 crores to be paid to, they have acquired it from Pernod Ricard. So I think they will pay it over a period of time. Yeah. So at the same time, I think it's a good acquisition, and they will raise funds through equity also. So that is something you have to look forward to. But otherwise, it's a good stock to buy and hold.
Okay. Do hold on, Shaina, because we have Maruti Suzuki that's just reported its numbers. You can see it at the bottom of your screens. Revenue 42,101 crore versus 39,600 was the CNBC TV18 poll. EBITDA has come in at 4,434 crores, while our expectation was somewhere around 4,194 crores. Margins are also coming in at 10.50% versus the poll of 10.60%. So that's something that we're keeping an eye out on. Right now, the stock saw a fall and now again it's come back in the green. So that is what we'll be keeping an eye out on as well. We'll also have some Devin Choksi who's going to be joining in with us, as well as Sudarshan. We'll connect with him as well once he's done some bit of a number crunching in terms of what are we seeing as well. Shaina, anything in terms of Maruti that you're keeping an eye out on? As of now versus the poll, net profit is below our expectations, but revenue is slightly above what we were expecting at CNBC TV18. Your view for Maruti Suzuki?
Yeah, it is one of the better bets in the four-wheeler space. These are not trading stocks actually, and the numbers that we've seen in volumes also, they should be pretty good actually. Well, we've not seen the volume numbers. It should be good. So in a four-wheeler stock, Maruti looks like a good bet if you're looking to hold it for a couple of months.
It looks like a good bet if you're looking to hold it for a couple of months. Anyways, in our expectation also, Sudarshan had mentioned also that, margins, they were expecting to a bit of a contraction there. Given that, of the higher input costs, expenses with respect to one of its plants, but that was going to be there. So we were expecting a margin contraction this time. 10.5% is what the margins have come in at. But yes, that's Maruti Suzuki. It's right now, I'm just seeing a bit of a volatility because it's flip-flopping between the red and the green as well. Okay, we have Sudarshan here to give us more details in terms of numbers. Sudarshan, Maruti Suzuki, how is it looking like overall?
By the first look, operational numbers are looking largely better than our expectations, mainly on revenue front. It has come at more than 42,000 crore against our expectation of around 40,000 crore. On EBITDA front too, it has come more than 4,400 crore against our expectation of around 4,200 crore. And margin, it has slipped below 11%, but it's in line to our expectation. It has come in at 10.5% against our expectation of around 10.60%. And on a YOY basis, also profit has increased by 7%. Revenue too has increased by more than 13%. And revenue increase has been supported by healthy increase in the volume that company has seen both on a sequential basis as well as year-on-year. And I assume that company might have taken price hike that has helped an increase in the realization. On your YOY basis, realization has improved by more than 11%. Now, over the last 2 months, company has seen an increase in the demand, also mainly because of GST rate cut. So going forward also, we'll have to see from the management if management comments about the increase in the outlook for FY26, because as of now, the outlook for PV industry for FY26 is low single-digit growth. So it will be taken very positively if company goes ahead and says that for industry, PV growth outlook can be increased. But as far as numbers for Q2 FY26 are concerned, it's looking like largely better than estimates.
Okay, largely better than estimates is what it's looking like versus our poll at CNBC TV18. Realizations also seeing an improvement. We have Devin Choksi joining in with us as well. Devin, good afternoon. Have you managed to look at the numbers? Right now, Sud was just giving us some details there. What is your first cut on this?
Yes, good afternoon. Well, I think briefly reviewing these numbers right away, the important part is the revenue contribution probably has increased. even though the margin has remained slightly under pressure as I see it, but I think more or less the revenue contribution has increased. And couldn't be on a disagreement on this aspect because of the premiumization path that this company has been following. Maybe the breakup in the models, I think, will be one thing which one will have to review it as to who contributed what. But in my viewpoint, I think the SUV segment probably has ended up contributing on a larger side. So we'll see the breakup and then we'll make some better judgment on that. But overall, the numbers are happy, I think satisfactory. The currency-related factors in the profit, I'm not too sure, I think, how much it is there at this point of time because I haven't got the breakup. But if at all it is there, still I think the numbers are looking reasonably good from the profit and profitability perspective as well.
Okay. Numbers are looking good, but I don't know what the street is not liking. Deven, anything that you've noticed on that front? Because the stock has come down 1%, since the numbers were reported. So what is it that maybe anything that is the street is worried about right now?
No, I'm not too sure whether the street is worried about. Maybe I think the market is factoring in the results ahead of time. And as a result of each post-result, you see the profit booking happening. So nothing to do with the results, I believe. I think whatever the profit booking is happening, nothing to do with the results.
Okay, nothing to do with the results on the earnings front. Obviously, we'll wait out for more details. But as of now, good numbers is what is the highlight coming in from you, right?
Absolutely, yes.
Okay, we'll wait out for more details in terms of the mix, where what sales were happening, as well as Sudarshan also highlighted some key points that we should watch out for in terms of overall where the guidance starts improving. What is the management's commentary on that front will be key to watch out for. But with that, we are absolutely out of time on this edition of Your Stock. Shaina, Vaishali, Deven, thank you so much for joining us on the show. And viewers, thank you so much for tuning in as always. With that, it's a goodbye from me as well as the team who put this show together. But don't go anywhere. Last hour of trade is still left and you have closing bell up next.
on market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng is the only sore spot among the otherwise largely positive Asian indices.
So this 57,500 odd mark, look at the options data, look at the recent low as well. That becomes the first level of support.
It's open today up until November 4th. The price band 382 to 402. Flattest start. This one on the mild red side of things.
In some of the mid and small cap related, particularly in the SME area, we do see a bit of valuation excesses coming through, but they usually tend to get washed out over a period of 3 to 6 months.
The current year also we are given a guidance of 11%, and we are able to show almost 13.5% in the year-on-year by the end of the September.
We as platforms, will have to create more opportunities for consumers to participate in what we call the low value meal segments.
So GNP Q1 was also 5%. And Q2 is also 5%.
So we expect our operating margins for the full year also to be better than last year.
The Nifty Bank is moving to a very crucial juncture, which is the 57,500 odd mark.
SEBI chairman at the BS Summit has said that they need to find the right approach towards the derivatives market.
The Nifty is sitting with cuts of around 100 points as we speak.
Well, that was the day so far. Hello and welcome to Friday's edition of Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbhi and Nigel. Still subdued, right? The Nifty is down below 25,800. Mid-caps are now back in the green.
Well, that's right. I think the Nifty Bank is actually holding on to this crucial level. So that's one positive, because that 57,500 is the level that we visited last week. And we've defended that mark. And the other positive is at least the mid-cap index is in the green. But it appears that 26,000 odd mark, it's a bit of a barrier. We went very close to that mark earlier today, but we've given it away. But clearly, I think one of the sectors that have done very well is the PSU banking space. Up and about, continues to power ahead. And the last few weeks, I think that's the outperforming sector that we're looking at, up close to around 2%. Surbhi?
Yeah, absolutely. So we'll see. Otherwise, it's been a week of consolidation. It's been a week that at the index level we haven't gone anywhere. Nifty's barely changed, so far. It's all about just following individual earnings, and you're seeing some of those reactions play out. Shriram Finance's stock is reacting pretty well. That profit figure is above our estimates. Gaurav was saying that the expectation on net interest margin is that the compression should be less than 10 basis points, not more than 10 basis points. Most of the lenders are actually surprised on the upside on NIM compression. Let's see if Shriram can continue that trend or not. Right now, the stock's pretty excited. Net interest income rising about 10% as well. Gale's numbers came a while back. They look pretty good. There's margin expansion there as well. That stock's holding up about 1% or so. So it's more about individual earnings. And speaking of earnings, today has also been a day of very sharp reactions. Wherever there's earnings disappointment, case in point being Bandhan Bank, stock has been slammed, 8% down and counting. Motilal Oswal, obviously other regulatory concerns now with this whole MF brokerage issue. Stock's down about 5%. And by the way, Swiggy, something we've been discussing, their 10,000 crore rupee fundraising, that stock's turned negative now in the second half. Started the day with a gain of 3%. Now it's down about 2%, so a little subdued. So guys, I guess it's all about chasing individual stock level news flow and earnings. The index, I think market's saying we'll have to wait. Let's just focus on earnings for now.
Two more stocks. One is Strides Pharma, and we should get that up. Reacting to numbers, the top line growth is 4.5%, but margins have come in at 19 versus 15.8%. Profits have jumped 82%, and there you have that reaction on the screen. 10% up on that. And the other one is Intellect Design Arena. Came out with numbers about an hour back. This is a products company largely catering to the banking sector. So you look at the numbers on a year-on-year basis and not on a quarter-on-quarter basis like we do for IT services companies. But they've done well. Revenue growth 35%, profit jump 94%, and that's been one strong stock. But let's tell you about the action-packed final 1 hour, which is coming up on Closing Bell. The Nifty's dropped below 25,800 level. It's the lowest point of the day. Autos, PSU banks are steady, while metals are seeing some selling pressure. Bandhan Bank has delivered a weak showing in Q2. a detailed fine print coming out from our excerpts from our management conversation. Emphasis is falling in trade despite a strong quarter. What is ailing the stock right now? And then we'll also talk about a few mid-cap players reacting to earnings like Navin Fluorine, Intellect Design, Strides. We'll get the key highlights from the numbers on closing bell and the key earnings to watch out from today. Maruti, we just came out with the number, and Shriram Finance. We'll discuss these two too.
Okay, so how should you be positioning yourself in the last hour of trade? We've got Mitesh Thakkar joining in, so let's ask him as always. Mitesh, very quiet at the index level. Any trades for the last hour at all?
Not on the index, so good afternoon. I think, very clearly, as I said, if we keep failing to get past 26,150, 200, we will look back to 25,800, and we are there. We are just below that. And in a bad case scenario, even 25,600, 565 zone. So I think that is the level which I'm now looking at. Maybe another 150, 180 point downside could still happen. And this will still be a very normal pullback to the entire rally from 24,600 to about 26,100 plus levels. So looks like that, that pullback will play out first. But for the time being, the broader view hasn't turned negative. I think the weekly indicators are still positive. So I suspect around this 25,600, 550 zone, once we get there, I think that will be a very welcome buying opportunity. Having said that, the stocks which I have on my recommendations is a buy on Aurobindo Pharma with a stop at 1129 for targets of 1175, and a sell on Amber with a stop at 8150 for targets of 7850.
Okay. Thanks very much, Mitesh, for that. We'll come back to you for some more ideas in a bit. That's an interesting story flashing on the screen. It seems that hospitals have agreed to hold their rates for FY26. We'll just try and get some more details on that in a bit. Narayana Health is in focus separately. They've done an acquisition as well. So we'll discuss that in a while. But for the time being, let's put the spotlight on Memphis, another stock that's been knocked out quite a bit. Rima, was there something in the numbers? Is there something in the commentary? What could be the issue here?
Well, numbers are fine. The commentary is positive. So it's not to do with the numbers. There could be, two reasons. One, the stock is done, relatively better than its peers. So year to date, the stock is flattish, while the Nifty IT index is down 17-18%. So it's been a bit of a relative outperformer, and valuations too are, with the cooling off that we've seen today, it's in line with the 3-year average of about 25 times. But, so otherwise valuations were not particularly cheap. But, there's this one rumor which keeps doing the rounds, which is Blackstone, which is the promoter of the company, a PE entity. They have a 40% stake in Emphasis. So that news about whether they will sell, do a block deal in it, pare down partially at least their stake, does the round. And whenever the news comes, to the market, the street starts fearing it. So that's the reason why Emphasis, perhaps what I've learned from people in the market, is under pressure. There's one example, of a company which, was PE owned, and then it became completely owned by retail retail shareholders, and it's done very well, is Coforge. So Coforge was also PE owned, but there the PE is completely exited, and under the leadership of Sudhir Singh, Coforge has done very well. But Emphasis numbers were great. The company in the conference call spoke about how revenue growth for the company this year will be twice that of the industry. They will maintain their margins. Their pipeline is at a record high. Deal wins in the first half of the year, more than the deal wins that they enjoyed in the whole of last year. But Gurmeet Chadha of Complete Circle is now joining in. Gurmeet, have you heard anything which explains the 4% drop on Emphasis?
Not really. I think the point you made, Rima, on the promoter supply coming could be some of the reason. Also some positioning, because mid-cap IT has been doing well. And in a market like this, 3, 4, 5% move can happen to the best of the names. So not much, the numbers are good, even the commentary was good. But as I said, I think from a IT perspective, I think the broader up move will come when you have a bit of a trade deal with US. Today, Cognizant talked about secondary listing in India. That if at whatever point of time something happens, that could also be a bit of a positive trigger. So I think IT is a bit contrarian bet right now, but I think the risk reward increment is looking better.
The Cognizant management, when we asked them, said they're very preliminary discussion. It's a long-term project. It's very complex. And I asked them, even legally, is it allowed whether you can be listed in two places at the same time? He's like, we don't know. We haven't decided anything right now. But considering that Indian large cap peers trade at a 40% premium to what Cognizant is, I think that is the allure for a company like Cognizant to even explore getting listed in India. But let's move on to the other big story. Gurmeet, do stay on. Sources tell CNBC-TV18 that Tata Trust will be holding a board meeting on the 11th of November. Parikshit joins in to tell us what could be on the agenda, what we should watch out for. Parikshit.
Well, the November 11 board meeting will be the first meeting that the Tata Trust will be holding after the ouster of Mehli Mistry. Remember, his tenure ended on October 28 without his reappointment going through. Now, this will be the first time that all the trustees will come together in his absence. He will not be present in the boardroom. You will have Noel Tata, the chairman of Tata Trust, Venu Srinivasan, Vijay Singh, Pramit Javeri, Jahangir H.C. Jahangir and Darius Khambata, but no Mehli Mistry. The agenda for the meeting has not been circulated as yet, but we're told that in the run-up to this meeting, there has been no communication about the exit of Mehli Mistry, and some trustees believe that the matter or any agenda before the board on November 11 will be passed smoothly. Now, when it comes to the road ahead for Mehli Mistry himself, Mehli Mistry is currently on an overseas visit. He's not commented on CNBC-TV18's queries about the developments and his exit from the board. It remains to be seen whether he will accept his removal and his reappointment did not go through, or he challenges it. Some experts say he does have a legal ground in the fact that in October 2024, there was a resolution passed that all trustees have to be reappointed unanimously and for life. So it remains to be seen what Mehli Mistry does now. Tata Trust has not commented on the developments. When we speak to about legal experts about what may happen next, well, they are telling us that Tata Trust, the Secretariat, has to inform the Charity Commissioner, which is like the nodal body for trusts, in about 90 days. That's the upper limit. But very often, trusts go ahead and make such intimations about change in boards within 30 days in order to make sure that other compliance procedures go through. So a lot of developments taking place within Tata Trust. What happens in the November 11 board meeting will, of course, be important to show what happens next and whether the proceedings and relationships between the trustees will be smooth thereon or not.
Okay, all right, got that, Parikshit. Thank you very much for that. I think in a bit we'll get Yash on this story that you just saw play out with respect to hospitals and the rates they're charging and whether they'll be revising their rates or not. In the meantime, those are Vedanta numbers on the screen. Nigel, first glance, how's it looking?
You know, for Vedanta, the most important number is the aluminium business. And out there, I think that's a beat, because the aluminium business, I put together 3 or 4 brokerages that came in there and they had put out expectations. So the number was around 4,750 crore rupees in terms of the aluminium EBITDA. I can see that they've delivered a number of around 5,532. So clearly those numbers are better. The aluminium business has done well. The oil and gas business was expected to be a bit of a dampener, and it is. It's a small miss of close to around 80 to around 100 crores approximately on the oil and gas business. But the reason that the absolute number, that's a consolidated EBITDA number, is looking better because the aluminium business has delivered a 700 crore beat in comparison to our expectations, coming in at around 5,500 crores. Expectations were around 4,750 crores. And the zinc business, let's get that as well up. That's around 373 crores, but that's a very small proportion of the business. So Vedanta's numbers, consolidated basis, look good. Aluminium business leads the way. We already have Hindustan Zinc's numbers with us. So the India Zinc Silver business is already known. What you need to focus on is the consolidated numbers, which look good. And obviously, the trigger for the company going ahead is what's going to happen with the demerger and what are the timelines of that front. But numbers, no worries on that particular front. Let's go back to Gurmeet. Gurmeet, what's your view? I mean, you all have been playing a couple of these tactical companies. I think, we're playing some refiners, oil and gas, I think, out there. In metals, I think Mukund is something you like. Any view on Vedanta?
So yeah, we had Chennai Petroleum, Niger as a tactical call, played out well. We have Mukand again as a special situation, more in terms of land monetization, debt restructuring, and company now getting into machine tooling, especially with cranes, supply imports, and now with renewed emphasis on shipbuilding by the government. And valuation-wise gives a lot of comfort. Within the numbers, on the face of it look good. I probably will have to do a bit of a deep dive. Also looks a bit of a beat, as you rightly said, in aluminum. I actually believe that we are in a commodity cycle now. These cycles are much longer. With the emphasis government will have on shipbuilding, I think that will have a huge impact on steel and in general. With capex picking up, L&T commentary yesterday on private capex was pretty encouraging. So you got to get into them a little early. And you have to be a little reverse when it comes to commodities. So tactically, you may look at both ferrous and non-ferrous names, but we have for now just Mukand in the portfolio on commodities.
Okay, all right, got it. Gurmeet, stay on. We have more questions for you, but let's just revisit that story that was just flashing on the screen a while back, which seems to suggest that hospitals may not look at revising their rates this year, and this follows a whole back and forth between hospitals and insurers because they're at odds with each other. Yash has the details on this one. What have you picked up, Yash?
Well, that's correct. So, of course, the important statement is that hospitals may hold any rate revision when it comes to 2026 as a year. What we've been given to understand is that there have been meetings between insurance companies and hospital heads under which it is likely to have been agreed that hospitals may hold rates for 2026. Now, importantly, what we've been given to understand, the meeting and a possible agreement happened because of the intervention from Department of Financial Services itself, which, sort of intervened and asked insurance companies and hospitals to sit together and sort of explored this idea of holding rates for 2026. Now, just the rough numbers that we have, annual medical inflation is about 14%, and as a response to that medical inflation of 14%, insurance companies take a premium hike of anywhere between 8 to 12% each year. What we've been given to understand is that this year and the coming year, 2026, insurance companies would already be under pressure because of the GST changes and the cost burden which it puts on them. And it would have been difficult for them to take this additional cost of not increasing insurance premiums to sort of give complete benefit of that GST cut of 18% to policyholder. And hence, Department of Financial Services is likely to have explored the idea of asking hospitals to sort of hold any sort of rate revision for 2026.
Okay, all right, got it. Yash, thanks very much for that. Gurmeet, just tossing this to you. We don't have too many further details of what this means and in terms of pricing, if there is a material change that will happen right now, but those are the early indications that Yash is picking up. Would this be an overhang on hospital stocks if they indeed don't hike rates at all for the next 1 year?
I don't think so. I think there could be some profit taking. See, just the run-up Surbi hospital stocks have had. I was actually sitting with a hotelier, and he told me that the EBITDA per bed, right, for hospitals is 3 times that of an hotel. So there's no incentive in running a hotel. I think that valuation gap is too high, and at some point of time, some moderation will happen. Obviously, it's factoring in all the good growth. Just look at where, Apollo or Max and others have done. Also, a lot of consolidation is happening. These guys have figured out an asset-light model in terms of buying local hospitals and not so names, and which is what hotels were doing, the managed key concept. So while the growth would be there, but I think price probably captures a large part of it.
Okay, all right. Thanks a lot, Gurmeet, for joining in and discussing those stocks for us. Wishing you a good Friday afternoon and evening ahead. Well, it's time now to highlight our Super Pro chart of the day, powered by Money Control Super Pro, a segment where we turn data into direction. Each day, we pick one chart that sums up the story driving the markets and help you understand the why behind the what. Here's today's chart and what it means for your next market move. Union Bank is a stock on your screen showing a cup and handle pattern on the verge of a breakout. As you can see, a cup and a handle pattern forming, steady uptrend, price on the verge of breakout above the handle resistance. A successful breakout may trigger a strong bullish continuation. And you'd like to access more expert-driven insights and actionable chart patterns like the one that's coming up for you on the screen, simply scan the QR code on your screen and subscribe to Money Control Super Pro. Plus, this festive season, there's more reason to celebrate. 10 lucky subscribers every day win $1,000 of gold. So don't wait, scan, subscribe, and make your portfolio shine brighter with Super Pro.
Welcome back. Lots and lots of financial numbers have poured in. Let's pull up Shriram Finance and see how it's doing. It was up 3% last we checked, up about 2% as we see it right now. There's a bit of profit taking that's happened after the initial surge. Gaurav is with us. Gaurav, that PPOP number looked really good. Tell us more.
Well, as when we look at Shriram Finance, the numbers actually look good, and let me tell you why. When we look at net interest income, that increased almost by 10% on a year-on-year basis. PPOP, that increased almost by 11.5% on a year-on-year basis. Now, what actually came in as a surprise to investors is that when we look at credit cost, specifically if you look at the provisions, that increased just by 3.5% on a sequential basis, and as a result, when we look at credit cost, that remained flattish at around 1.92%. That is the reason why when we go ahead to profit, that increased almost by 11.5% once again. Now, when we look at the net interest margins also, we saw some bit of an expansion that increased almost by 8 basis points. Street was expecting around 10 basis point of expansion. So, more or less in line with the Street's expectation. And lastly, the AUM growth. Now, that has also remained at around 15.7% in line with the Street's expectation. So, all in all, when we look at the numbers, they are good. Specifically, credit cost, that came in as a surprise because when we talk about gross stage 3 and net stage 3 assets, although we are seeing some uptick in gross stage 3, but the area of concern, which is PV and CE, which was highlighted by few other companies. Now, we do not see any concern in Shriram Finance for these areas specifically, because CV and PV both shown some kind of improvement in gross stage 3 assets. And we are seeing some kind of pressure from the construction equipments and MSME segment. So definitely good set of number from Shriram Finance. As a result, we are already seeing some uptick in the stock price as well.
Got that. And PSU banks on fire, Gaurav. Up 2% for the day. The PSU banking index is up nearly 5% for the week. And there are multiple factors driving this optimism.
Well, yes, when we look at the PSU bank and overall segment, how they have performed in the quarter so far, we are seeing some kind of good performance from the banks as well. So let's take a few examples. Canara Bank, for example, the latest result that we saw, where we saw loan book growth was at around 14%. Deposit growth was also healthy and higher than their own expectation. And specifically, when we look at profit, most of the PSUs, they have reported healthy growth in profit. So in terms of Canara Bank, they have reported 19% growth on a year-on-year basis. ROA expanded. The same number is what we saw in Bank of Maharashtra as well, where we saw profit increasing almost by 23%. In Indian Overseas Bank, where we saw profit increasing almost by 58% on a year-on-year basis. And specifically, the loan book growth, that was at around 20%. When we look at Bank of India, we saw some kind of uptick in the loan book growth around 14%. Remember, these numbers are in the time when industry is reporting around 11% growth on a year-on-year basis. Lastly, when we look at Union Bank, the latest bank which came up with the numbers, loan book growth was at around 6%. It was a weak number. But apart from numbers, there are other factors as well who are supporting PSU banks. The first is that specifically now SEBI consultation paper, which suggests that there can be some kind of rejig in the index constituents, and as a result, analysts believe that Union Bank, Indian Bank, Yes banks are a likely candidate who can get included in the index, and that is the reason why we saw some uptick in Union Bank. Apart from that, there is some speculation on the PSU merger, specifically in terms of Union Bank and Bank of India, that will make these merged bank the second largest bank of India as per the reports. We also have speculation around increase in the FDI limits from around 20% currently to 49%. So definitely there are some tailwinds which are helping PSU banks. And when we look at valuations also, they are not that expensive. In fact, we have got valuation for a few banks for you guys. Union Bank, that is still trading below 1 time price to book. Bank of India, when we look at Central Bank of India, these banks are actually trading around 1 times. In fact, the PSU bank index, that is also trading around 1.2 times. So definitely on the valuation side also, it looks very attractive. As a result, we are seeing some kind of supportive rally in all of these stocks.
Thank you very much for that, Gaurav. News on your screen, Lenskart IPO fully subscribed on day 1. Retail was the first to get subscribed, but they have only 10% of the overall subscription, and now the total QIB at 1.39 times, but on the whole, fully subscribed. Let's get in Vaibhav Sanghvi, CEO of Ask Hedge Solutions, now joining us. Vaibhav, afternoon. Thanks for joining in. What's the overall market construct and how are you positioned?
Yeah, I think Rima, from a market standpoint, we've rallied quite nicely this month. And my view is basically depending upon the realignment of flows from an FPI perspective, which will of course follow, our earnings growth story, wherein we do think that this quarter the earnings have been better than expected, and hopefully the recovery continues in the next few quarters as well. And if we see continued recovery in terms of the earnings, my sense is that we will see elevated interest from the FPIs, especially when they are underweight India, as a country within the emerging market basket. So if things go, as per what we are expecting, then there is a possibility that the rally, which may happen probably in the next half of this financial year, or probably calendar year of 2026, would be quite sharp and elevated in that sense.
Hi Vaibhav, good to see you, Ben. So you would think most of the bad news is in the price and the markets are bracing for better times?
Yeah, we do think so, purely because if you've seen the last 1 year where because of the weak growth trajectory of the earnings, we've seen consistent FPI outflows. And also because that the AI plays, which is artificial intelligence plays within the region, especially in China, Taiwan, and Korea, kind of attracted a lot of money in that sense. Now, once that kind of gets plateaued, probably it is when our consumption piece, which is has been always been our strength, if it kind of revives and whatever indications we are seeing, I think it's on the path of revival. Then we will see earnings kind of kickstart again, which will lead the global money back into our market. So my sense is yes. To a great extent, we've seen the maximum pain till now. And in an easing environment and in supportive ecosystem from government and the RBI both, we should be looking up.
Vaibhav, what's your view on the banking and the financial names? That's where the big interest is. If you look at the PSU banking stocks, they've got tailwind of their own. There's some point with regard to mergers as well. Foreign money is coming in there, chasing the smaller banks as well. And the larger banks, they look well placed. In fact, we had one of the managements in the morning, Canara Bank. They sounded very, very optimistic. That's a better run bank. Talking about good loan growth, seeing some improvement in NIMs, maybe not to the extent that the street is working with. And ROAs as well will trend to around 1.1%, and they have that gold portfolio. How are you positioned on banks, financial institutions? I recall you had a neutral rating, but that was somewhere in May earlier this year.
Yes, of course. I think we did have a neutral earlier, and especially because we did see good amount of NIM pressure coming about because of the decrease in terms of the bank interest rates. Now that we do see, when we had spoken before the result season, we had mentioned that this quarter probably will bottom out in terms of the NIMs, and then from there onwards we will see some amount of recovery there. Also, the credit growth is something which we are positively surprised, especially on the PSUs. So my sense is basically on an overall banking perspective, we are getting constructive. And from here onwards, we do think that from a business fundamental perspective, we should be looking up again, in the next few quarters. Of course, the pace of recovery may not be extremely sharp, but we do think that this quarter kind of marks the bottoming out, especially on the margins. So we are very constructive here.
Okay, all right. Vaibhav, what do you make of these IPOs? And if you have a comment on Lenskart, what's the visibility according to you?
Nigel, I think not on an individual name for sure, but if you see a broader thesis, right, and over the last couple of years, we've seen that any business model with a technological edge or a capital edge or a product edge is something which is lapped up by the street in some sense. So you will continue to see those kind of elevated interest. Of course, time will tell whether they are being able to deliver in terms of the expected performances. But the only point I would probably make here is that if an investor is getting into a stock or a business model at an elevated valuations, then the gestation period for getting those kind of returns kind of expands in some sense. So one has to be careful in terms of looking at the valuations and investing appropriately. Market definitely gives always good amount of opportunities because of the inherent volatility which is associated with it.
Okay. Vaibhav, thanks very much. We'll let you go on that note, let you enjoy your weekend. Okay, before we toss it to Nigel once again, quick check on the screen, 154 points down. It's that slow grind today. The one thing is that it's not been a buy the dip sort of a session. So that is a little troublesome, but it's all right. It's not too much of a wide fall either. Just talking about the stocks that are leading it on the downside, Eternal's fallen 3.5%. Cipla obviously has been under pressure right from the morning, and NTPC was the other one. Numbers didn't quite hit the mark, so therefore NTPC has been also one of the key losers. Overall, Nifty down 0.6%, Bank Nifty down 0.4% now. But Nigel, F&O, what's happening?
Well, as you said, today is a bit of a sticky trading session where the bulls actually will be a little bit uncomfortable because any kind of dip that was getting bought into, you didn't make any money, and that's the way it's played out today. So let's pull up a few strikes for you on the screen. The 26,000 call should come up for you. Just take a look at that. The 25,900 call. The premium is down by close to around 50% approximately, and the open interest build up is massive. Even if you pull up another strike, the 25,800 call as well, good amount of open interest build up out there. Premium down by close to around 55%. Tell you the call writers, they are back in the game. On the put side as well, there is some build up, added on the 25,800 put or thereabouts. So there's a mix of activity with the premium closer to around 100 rupees or thereabouts. So if you're looking at a level, you don't want this 25,700 mark to get breached on a closing basis for today. So the bulls will have to put in some hard work right now, because otherwise, it'll be a very, very uncomfortable finish to trade to today's trading session. 20 DMA is still 250 points away from around the 25,700 mark. On the upside, the 26,000 level, well, that's a bit of a resistance zone, and we've seen numerous times. You go to that mark, and then in fact, you did see some kind of selling. Stocks that are in focus. We had mentioned earlier today that Sammaan Capital could possibly be the stock of the day because it's coming out of the F&O ban. It could make its way gradually back into the F&O ban, but fresh buying is what we're seeing on Sammaan Capital. Let's pull up the other few names as well that are seeing a fair bit of open interest build up in today's trading session. Union Bank, that's the other one in there where we're seeing some fresh buying. While IDFC First Bank, I think there is a bit of a short covering bounce that's playing out on that particular name. The stock is surged up, and you have the open interest that's down out there. And finally, Polycab, the stock moved quite well. Remember, the promoter came and sold some stake out there. And from there, in fact, you have seen some bit of unwinding of long positions, explained why the stock is down close to around 1.5%. So the market's a little bit under pressure. 25,700 should not get breached on a closing basis. Back to you guys.
Thank you. And on that note, get into a break. On the other side, as always, we'll get you a check on what Dealing Rooms is saying in our segment D Street Chatter, and a few BTST calls from our technical experts.
Come on, India. Come on, India. Now, if you're wondering where the spirit is coming from, that is where it's coming from. That game that lit up the screens, that lit up hearts, and that inspired like never before. I mean, Team India, women on top. They've defeated the, 7-time champions, right? Australia, all 7 times in the Women's World Cup. They're in the finals. Come on, the girls in blue.
And you know what's special this time? Usually, whenever we wear this cricket jersey, it's always for the men.
Yeah.
When was it that we're bleeding blue for the women? And this is the first time ever, and that's what makes it so special.
Well, that's right. Very special. And I'll leave the commentary to both of you all today. You know.
No, you know what? I was so excited, and I was looking at all the posts that the male cricketers put out for the women, and that was very, very heartening. And from the greats, the Sachin Tendulkar, and I think there was one from Virat as well. I thought what Yuvraj Singh said was very, very telling and touching. He said this is a huge moment. I mean, it's a huge win. It's a huge moment. It's beyond just one game. It's beyond the stats of this one game. It's a milestone that's going to be remembered for a very, very long time, irrespective of what happens in the final. But of course, it'll be great if we get the cup.
Amol Majumdar, the coach of the team, he said one thing yesterday, right? We need to finish this off.
Yeah.
We need to finish it off well. Yeah. So it's a job that's being done well, but we need to finish off and we need to come out on top. And we know Amol Majumdar, one of the best domestic players that we had here in India, who didn't, conquer the global stage, but he has his moment on Sunday when the team lifts the cup, and due credit to that man because he has formed this team and backed them up.
Gives you goosebumps, huh? This video, I've seen it so many times.
These images will stay. They're part of history now. Absolutely.
I've seen it like 10 times, and every single time it's tearing me up and it's giving me goosebumps.
And Mr. Anand Mahindra also said something so beautiful on social media yesterday. He said that this moment has now turned the tide. Instead of constantly asking for their place under the sun, the Indian women's squad has now defined it, and they've just called for it. It is theirs for the taking. So, yeah, 3 cheers and all the very best to the girls in blue.
All right, 1 to go on Sunday, and I think every living room in India will be cheering for the girls in blue. So, go India.
Absolutely. I mean,
all set.
Right, all set.
All set, all set.
Markets are flashing red, but we're bleeding blue.
Okay, all right. So as we get set for the big Sunday final, for the timing, we still have about 15 to 18 minutes of trading action left. So getting back to that, Nimesh is joining in as always. It's that time when we get the D-Street chatter. Nimesh, what's the chatter about the women in blue? And then also, of course, on the markets overall and the earnings today.
Well, it was really a great game, right? I mean, to win in such a fashion, it was really a very heartening moment, so to speak. But again, I would rather say that even we have a very strong women team and you all are part of it. So and you all have also delivered, right? Day after day, every earnings season, Rima is there, you are there, everyone is there. So hats off to you guys as well, yeah.
Thank you, Nimesh. Thank you. Oh God, we're getting all very emotional. No, let's just get back to stocks now. Okay, what's on the menu today? What did you pick up?
Well, should be a couple of things. One, this week stood out for the PSUs. I've been saying for the last 3 days that it's the PSUs which is seeing buying interest, and that's really outperforming. Even in today's weak market, that's the space which has outperformed. The PSU bank index is up nearly 2%, and generally there is buying, which I can sense of from a flow perspective into the PSU basket all of this week. Having said that, this week was a bit weak for the markets in general, and that's largely because of the FI selling. For the last 3 days, if you look at the FI data, the FIs are net sellers in the cash market, and they have increased the short positions as well in the futures market. So that's clearly telling on the Nifty and few stocks in the last couple of days. From today's perspective, again, the sense is that the FIs are better sellers. So watch out for the institutional data even in today's market. It might suggest a bit of a down day as far as the FI selling is concerned. Again, but the thing is, after this kind of weakness, normally we've seen, when the PCR hits close to 0.65, 0.6, market sees a bounce back. We are at actually 0.65 level. So I wouldn't rule out a possible short-term pullback purely from a technical perspective next week. So that's something should be watched out for. But the weakness this week is largely on back of FI selling and fresh shorting as well in the futures market.
For now, the Nifty looks like it's going to be testing 25,700. So we're grinding lower and lower. And the Nifty loss tally stands at 160 points now. On the Sensex, it's nearly 500 points. Nimesh, what stocks?
Well, so the first stock on my list is Gujarat Fluorochem. It's been buzzing in trade today, but the street is anticipating some corporate development very soon, and that's likely to be a potential further fundraising in their subsidiary business. Remember, I was the first to highlight when they raised 1,000 crores in the subsidiary business. Now another round of 1,000 to 1,500 crores is something which is quite likely to come. So that's the buzz. As far as Gujarat Fluor is concerned, that's the first name. The second stock is Time Technoplast. Again, it's been consolidating with a positive bias of late, but again, there the sense is that maybe the QIP is around the corner and the company will raise funds by QIP very soon. The third name is AU Small Finance Bank. It's actually outperformed the banking stocks, post the Q2 numbers and some upgrades as well. But there could be a small block in the offering in AU Small Finance Bank very soon. So that's the trigger there. And couple of stocks, whether it's delivery-based selling today, NHPC in the PSU basket and Nykaa, both stands out in terms of strong delivery-based selling in today's market. So watch out for delivery stats. But largely the sense is there is selling in both those names from larger FIs in today's market.
Okay, all right, got it. Nimesh, thanks very much for that. Well, with that, let's quickly hop across back to Mitesh for some final trades for the day. Mitesh, which stocks?
I think very clearly, I think, we are likely to close below 25,800, which means that there's a good chance that we might actually see 25,600, 550 zones being tested. So a couple of STBT calls. Bajaj Finance is STBT with a stop at 1,050 for targets of 1,025. That looks to be the first level. And the other one, which, when negative positions can be taken, that's STBT on Cipla with a stop at about 1511 or 1512 for targets of 1485.
Okay, all right. Mitesh, just one more stock, Chennai Petro. The stock is now up 10%. The second day running, massive volume and delivery-based volume as well is quite high on this name for the second day running. What's your view? I think the all-time high is around 1,000 or 1,100 or thereabouts. How is it looking on the charts?
Chennai Petro is something, which after a big correction, it has kind of recovered, went down all the way to about levels of 400, 410, and then has recovered. I think the medium to long-term trend has turned on the positive, but it's now also heading towards 1,000, 1,010 level, which is where the stock had its weekly closing last time when it peaked down. So I think somebody's having the stock, time to take at least good profits on the table. This week, the stock is up 28%, but in case we start getting past this 1,020 mark, then I think we will see continuation. But as of now, it looks like that looking at the rally, there are high chances of profit happening.
Take some money off the table. That's the call coming in there. Thanks a lot, Mitesh, for giving us that call. Well, next couple of days, we'll be waiting by for the auto sales numbers. Sudarshan joins us to help us out with the preview on that one. Sir?
So auto sales for the month of October will start trickling in from tomorrow, and overall in this festive season, since the time GST rate cut was announced, sales have improved, and majorly both the segments, passenger vehicle and two-wheeler segments, have been seeing growth for the festive season. That is in the range of 20 to 22%. But whole sales growth might be constrained because there was more number of festivals, and because of that, production was shut for these companies. So now in two-wheelers, two companies that continue to perform and that have been outperforming for the last few months, those companies are TVS Motor and Eicher Motors, and both these companies are expected to outperform in the month of October as well. TVS is likely to see a growth of 10%. Eicher Motors, that is Royal Enfield, is likely to see a growth of 11%, while Bajaj Auto may see a growth of 4% and Hero Moto may see a growth of 1%. In the four-wheeler space, two companies that are likely to outperform this month are Ashok Leyland and Tata Motors, having CV exposure. For Tata Motors, growth is likely to be of 13%, and for Ashok Leyland, growth may be in the range of 10 to 11%. Maruti Suzuki may see a growth of 4%, while Hyundai's growth might be just 1%. For M&M, auto segment may see a growth of 6%, while tractor may see a growth of 1% or maybe almost flat. So overall, if you talk about the segment, tractor in this festive season is the outperformer, followed by passenger vehicle and two-wheelers.
Thank you, Sudarshan, for that. Get into a break. 10 minutes to go to wrap up the day and the week. More market talk coming up on the other side. Welcome back. We have with us Money Control Super Pro expert Naresh Mirani, a SEBI-registered market professional who tracks the market movements and identifies trade-worthy trends for Super Pro subscribers every single day. Naresh, thank you very much for joining in. Share your quick thoughts on Swiggy, the numbers, and that big fundraising that they're planning to do. How does it position? I mean, now if you have to choose between Eternal and Swiggy, what would the advice be?
So it would still be Eternal, given that the trend has been much more positive for the stock compared to Swiggy. And we need a lot more time for Swiggy to settle up into a consolidation phase. We saw it happen with Eternal also. After the listing, it took almost 12 to 18 months before it started getting into a trend. So I would be still in a preferred mode for Eternal. Closer to 300 could be a good entry point.
Naresh, want to fill us in with an idea?
So stock specific, we are seeing good momentum across the financial space as well as selectively on the mid cap and the small cap space. So today, one stock which has broken out of our list is Latent View Analytics, which has seen a 3x to 5x volume jump as well as a breakout out of the last 3 to 6 month range. So that could be a stock which could head up towards 500, 550 in the short to medium term.
Okay. In terms of numbers, Naresh, which one is a standout performer from the earnings that we've had this week?
So a couple of earnings which came out today. One was Welspun Corp, which came out with a solid earning performance as well as price action post that. And second is Strides Pharma, which is another stock which has been sideways. And now today the earnings were good and the price action is good. Both these stocks look interesting on a dip post the earnings going forward in the next few sessions.
Anything in the tech pack which looks interesting? Now, for instance, Mphasis numbers were fine, but the stock is weak in trade. There are fears of supply, a potential supply coming in from the promoters. That rumor keeps surfacing. But anything in the technology pack other than Latent?
So out there, hardly any stocks are coming up into a strong uptrend. And the sector as such for the last 6 to 12 months has been a relative underperformer. So overall on the tech side, one should be better off avoiding the space unless we see another 15-20% correction in some names.
Oil and gas, the refining stocks. Look at a Chennai Petro, up 12% for the day. Week to date, it's up 28%. This year, it's up 57%. What a move. Even MRPL is up nearly 2%. Not quite the same kind of gains, but oil and gas, especially Chennai Petro. What are the charts telling you?
So strong momentum across the space, whether you look at a Chennai Petro, MRPL, as well as, say, Hindustan Petro. So as of now, in the near term, they're a little overbought because they've moved up 10-15% in the last couple of sessions. But the trend is pretty strong. Some of them are hitting multi-month highs, multi-year highs. So on dips going forward, the top pick would still be Hindustan Petrochemicals, which is one of the leading names in the sector. And on a contrarian theme, could even look at ONGC, which has gone nowhere for the last many years, but has started showing some bit of outperformance and sustaining above that 245 to 255 resistance mark. So it will be interesting to look at ONGC going forward as well.
Naresh, what about these gold finance companies? Gold had dipped a little bit. Manappuram's numbers weren't very, very good. But if I look at the chart today, suddenly it's seeing some support at lower levels. And even Muthoot Finance, gold came down substantially, but there was some buying that we saw even on the bigger name. The problem is valuations have got a little bit stretched out there. Your view on the gold finances?
So I would expect some bit of a pause in these names. There are only two names as such majorly. And they've had a strong uptrend over the last 6 to 12 months, as well as gold is taking a pause. So overall, looking at it, I would expect a consolidation phase rather than a major correction. So a time-wise consolidation on both these names. So on a longer-term basis, it's still a hold, but on the short term, we would expect some consolidation.
And PSU banks, again, that's been the bright spot this week.
So strong moves across the PSU banks, and we still have the largest one yet to make a larger move, that is SBI. That has just touched its previous all-time highs. So at current levels, the best relative choice across PSU banks would be SBI. So at 900 to 950 is a zone where one could keep accumulating on the longer term. This could be a stock which could lead the whole banking pack as well. So I would have a medium-term target price of 1100 to 1200. So SBI would be the top bet in the PSU banking space, and maybe one could take a punt in some of the smaller names like Bank of Maharashtra, which are shaping up for a breakout.
Any other stocks which are on your list for next week, which are interestingly poised, and why you would be watching them?
So would be looking at the whole public sector enterprises as a pack. The CPSE index is on verge of a breakout. The largest weight, BL, came out with numbers today, has given a good move. And we've seen Coal India consolidate, NTPC, Power Grid, all of these names consolidate well. So if we see price action follow up over the next week, that could be an interesting spot. But overall, as a trade, CPSE ETF itself looks interesting. But a lot of these names from this basket could be interesting over for the next 2 weeks.
Thank you, Naresh, for joining in. That was an insightful session for all our viewers who want access to these kind of actionable insights daily. Do check out Money Control Super Pro, where market expertise meets technology. Subscribe now and get an ad-free, data-rich and globally connected experience. And here is a festive bonus. 10 lucky subscribers every day stand a chance to win gold coins. Just scan the QR code on your screen or download Money Control app to know more. Well, 2 minutes to go to wrap up trade. It's been a bit of a disappointing session. Markets extending the slide for the second day in a row. For the day, it's down about a little more than 0.5% on the benchmark indices. The Nifty ending below 25,800, while the Sensex is down close to about 450 points. Midcaps were holding flat, but by the end of it, they closed with a cut again of about 0.4%, and the advanced decline ratio ending in favor of the losing side. While the Nifty ends the week with a cut of about 0.25%, the midcap index was up 1%. And the key takeaway is that market seems to be facing some resistance around the 26,000 level. We got there in the early part of the week. We were flirting with those levels. We crossed it, but by the end of it, closing about 250, 300 points off the level. For the day, on the way down, Eternal was the top loser as Swiggy expands its war chest. Eternal was down 3.5%. NTPC, Cipla reacting negatively to the second day in a row. Again, US business has been slow, and plus there was a resignation of Umang Bora yesterday. It took the stock down, and it's followed it up with another slide. In the banking pack, Kotak Mahindra Bank and ICICI Bank and HDFC Bank weak in trade. Remember, SEBI has proposed some changes to the way the Nifty banks will be constituted. So there is a possibility that the weightage of these large banks like an HDFC Bank, ICICI Bank comes down, and some of the other smaller banks make their way. Apollo Hospitals, Hindalco, Bajaj Finserv also ending in the red. On the way up, it's BEL that's reacting to numbers. Shriram Finance, also good set of numbers. Stock higher by nearly 1.8%. Keep your eye on all the auto names as they report their auto sales numbers next week. Outside of that, outside of the Nifty gainers, Bandhan Bank was a big drag today. A weak set of numbers. Swiggy ended lower by nearly 2%. On the way up, TD Power, Chennai Petro, PSU banks, IDBI Bank, Union Bank, even other banks like an IDFC First Bank, Canara Bank, Yes Bank, PNB, UCO Bank. The list of gainers, mid-cap banking gainers, was quite large. Well, that brings us to a close on this edition of Closing Bell. Thank you for watching. Don't go anywhere. A very special offering, Editors Roundtable, comes up next.
The Lal Street snapped its 4-week winning streak. What we've seen is a bit of a week of consolidation, but one that was ending with a negative bias. The Sensex and the Nifty were down about 0.25% for the week. Broader markets were also under pressure. It was all about individual stock reactions. It was earnings driving stock prices at the headline index levels. Some of the big cues the market is looking for instance, this resolution between US and India in terms of a trade deal. We didn't have any further evidence of that. So in the absence of it, it was all very, very micro. It was all about individual stocks. And we had, of course, some of the sectoral winners that stood out, and we'll talk about that as we go forward. This is Editors Roundtable. We are here with the team of editors, as always, putting the spotlight on all that's happening, not just in the secondary market, by the way, but also in the primary market, where there's never a dull moment. Thank you for joining in. I'm Surabhi Upadhyay. With me, as always, Nimesh Shah, as well as Nigel D'Souza. And today we have a special guest joining in, Ramesh Mantri, CIO at White Oak Capital AMC. And as we get started, let me tell our viewers that White Oak has been one of the very early investors in the new age companies, in the internet-based companies. Ramesh, welcome to the show.
Thank you.
I hope you're ready.
Yes.
You know, we're fired up with our questions. Thank you so much for coming in.
Thank you.
But overall, guys, I mean, it's an okay week. We don't have a big move to talk about at the index level. But I guess, I mean, most of the earnings that we've seen, it's been more positive than negative, from what I can remember.
Well, that's right. I think, the 26,000, 26,100 mark seems to be a bit of a hurdle, but I think it's just near term. The trend seems still to be up, till the 25,500 mark on the downside gets violated. The 20 DMA as well is in that vicinity. But towards the end of the week and the close on Friday was a little bit uncomfortable, though we did manage to, support to not break the lower levels. So that's okay. What went on in the week, the earnings season continues, and you're getting those positive earnings. You could say that expectations are so low that that's why the numbers don't look so bad. But the hope is that the second half of the year will be far better, and the ingredients appear to be in place for that sort of that sort of a result. The FI selling though returned. Remember, the last few weeks the FI selling has been on a bit of a hole. Last 3 trading sessions again they've started selling a little bit. So let's hope that doesn't get too bad. And we were complaining that there are shorts in the system are actually less. Now they've added some shorts as well, which may not be such a bad thing. Shorts in the system is what you want, but in terms of flows, you want a more or less neutral number coming in from the FIs. The Fed rate cut, well, that was on expected lines. So net it appears that the market still appear to be in an uptrend. However, earnings is going to be most important, because we keep complaining about the flows. But the flows will turn positive once we have better earnings. I think the foreign money will come gushing in. So tell us, how are you feeling about the markets, Mr. Mantri? I mean, what's your take? Cautious, getting constructive? We've had a period of underperformance. Our time has come.
I think, clearly with this last 1 year of underperformance, particularly relative to the world, I think the relative valuations have corrected quite a bit.
Yeah.
And I think lower inflation, lower rates, now this GST push, I think clearly the environment is really improving. You're also seeing a strong revival in consumption. So I think I would say I'm positive on equities now. Even our asset allocation models are now overweight equities.
So, but Ramesh, then what would be a strategy? A top down or a bottom up? Because India has generally been a bottom up. But if you look at even in the last, say, 4 weeks, last month was good in terms of top down. Nifty, Bank Nifty did very well. Now there are first signs of broader markets starting to do some catch up. From here, if the market has to rally, you think the broader markets will participate much better?
No, I think it'll be now a lot less about the cycle or the broader markets. It's individual companies, how they'll perform. And you are seeing a number of good results in the smaller companies.
Yes.
And those companies, even in this kind of market, in a weak market, even today, a number of stocks were up more than 5%. Yeah. So that tells you people are still willing to buy into stories which are delivering growth.
Yes.
So that's the real sign that matters.
Yeah, we keep talking about the market just 1 or 2% away from all-time highs. The Nifty next 50, that is 12% away from all-time highs. The small cap index is 6-7% away from all-time highs. So portfolios ain't feeling anything like that 26,300 that we keep talking about.
Yeah, I guess. Ramesh, let's dive straight in, because I think the one thing that's very clear in the market is that everyone's looking out for adding some innovation stocks in their portfolio. Now, you could call it renewable energy, it could be consumer tech companies, it could be quick commerce, it could be guys who want to set up data centers in some way. What are your thoughts on this? Because like I introduced earlier as well, that you guys were very early on into looking at technology from a fresh lens, not traditional IT services. So, what comes to mind now? What have you been doing?
See, one of the advantages is we have looked at how the US markets have evolved, how East Asia has evolved. So you know what patterns play out at certain point. And India with young demographics, the kind of access to cheap data we have, a lot of these new businesses will get adopted. Demographics is also a huge factor. Young people just adopt technology quickly. So clearly now the important point is a lot of those new age businesses, one, have hit critical scale. Number two, many of the entrepreneurs have figured out that you cannot burn cash and you have to focus on sustainable economics. The companies that didn't figure that out have died down or got, you not get funding. But the ones which have figured out, the unit economics and are now able to deliver strong growth. So if you look at today, what are the fastest growing businesses in India? Invariably, it will be a tech-led new age business.
Yeah, true. All right, let's talk about the IPO of the week, right? I mean, social media was a buzz. Everyone's talking about the new IPO. Lenskar, I'm going to get your view on that. But for the timing, Surbhi, you want to give us a preview, run us through the basic details?
Some of the basic numbers. And obviously, the issue got subscribed on day one itself.
Yeah.
And I think Lenskart is an issue which has stirred up the biggest debate that we've seen in the last many months on social media and even otherwise. And the debate is all about valuation once again. And you would have, seen a lot of the memes, a lot of the raging views which are out there. Now, let's get to the heart of this debate and where it really is coming in from. So some of the basics first, starting with the price. At the upper end, Lenskart is calling out for 402 rupees per share, which means that if it lists somewhere in this vicinity, then we'll be looking at a company that has a market cap of 70,000 crore rupees. So, that is the big number first to focus on. Let's look at, what exactly is happening, what kind of an issue is it? It's a mix of an OFS as well as a fresh issue, but the money that's coming into the company, it's a lot lesser. That is just about 2,150 crores. The rest is actually an offer for sale. So all put together, they're raising just under 7,300 crores from the company. Also important to note that in this OFS, after this issue is done and the dilution happens, the promoter's shareholding is actually going to go down. It's going to come down from just about 20% to 17.7%. So something to keep in mind. Now let's talk about the anchor book. Because even though the asking rate was 402 rupees per share at the higher end of the band, it's managed to, whet appetite across institutional investors, local as well as global. So this is how much they've raised, little under 3,300 crores. And the total allocation to domestic mutual funds, 21 mutual funds, comprising 35% of the money that they've raised through anchor investors. And it's many times the anchor book itself, the size of the anchor book. So these are the names. The who's who of the Indian MF industries out here: SBI Mutual Fund, HDFC, ICICI Pru, SBI Life, Axis, Kotak, White Oak, of course, we're talking to them, and a bunch of life insurance companies as well that have participated. But FIIs are also equally active, and some big names here from the Norwegian government pension fund to the government of Singapore, T. Rowe Price, BlackRock, and several others. So, the story has been sold strongly and institutional investors are biting. Then where is the debate? Now let's come to the details on the company, what it does and its financials, what we know as of the draft red herring prospectus. We all know Lenskart is a very well-known brand, admired brand. A lot of us have, perhaps connected with it as customers. But what's interesting is that its business is not just limited to India. It has an international presence and a significant one and a growing one. 40% of its FY25 revenue actually came in from international operations. Singapore, for instance, is one market that it's very active in. It has 2 manufacturing facilities which are here local in the country itself. Now the numbers actually don't look bad, because at least here's a company which is profitable when it is coming to the market. So this is the store rollout, which the numbers that were just there. But coming to the FY25 numbers, a revenue of about 650 crores, an EBITDA margin which is almost touching 15%, and a profit after tax of 297 crores. That EBITDA margin number, by the way, looked even better if you're looking at the Q1 financials, because now it is 17.7%. So on the financials, I think the investors are going to be happy. But we come back to the main central question, and that question is the pricing. And here's how the numbers stack up at a price to sales multiple. This is trailing. We're talking over 10 times. At a price to earnings multiple trailing, we're talking over 200 times. That's the Lenskart story as it comes to the listed public market. So now, Ramesh, that's really the question to you, right? And I think you guys have participated. So, just give us your thought process. This is not a buy or sell conversation, but we want to understand your thought process. What made you comfortable subscribing, even though that when the asking price is what it is, what we're seeing on the screen?
Mr. Bay, it's not appropriate for me to comment when an IPO is on. Yeah.
Okay.
Understand. No,
but a broader
give us a broader sense on how should investors value
I think
the platform
one of the
businesses.
most important ideas about investing is you are not investing in the past, you are investing in the future.
Sure.
One of the companies that has created the most value in India in the last 4-5 years was hugely loss-making when it went public, right, on the food delivery side.
True.
It is still not very profitable, even as we speak today.
Yeah.
But just look at the value creation that's happened. One of the other fintechs that went public about 3 years ago was not making money then. It's actually now turned profitable. So we are not buying the past, you're buying the future. And remember, in certain categories, there is a potential. Please understand, there is a potential for Indians to build world-beating companies over a long period.
Oh, absolutely.
I'll give a very simple example. How many of you know that globally in eyewear products is probably one of the most consolidated industry in the world? One company, Luxottica, which actually there was an Italian company and a French company that merged. Luxottica and LSR merged. They dominate the entire global eyewear industry. So the most premium brands in the world, you'll often see 3 eyewear stores, but they're actually owned by the same company. That's the kind of consolidated industry. It's an industry with tremendous margin.
And how far are Indian valuations vis-a-vis global benchmarks where businesses have stabilized? I mean, it's okay we are a market that typically trades at a premium on everything.
Yes.
But just to understand.
No, so I think it's very early. I'm just saying it's all about the future. For example, if you look, the quick commerce model globally completely failed.
Yeah.
But India now it's understood the model works. So you always have to use the local context.
Sure. Yeah.
Otherwise, you're going to look at a US comparable, it's never going to work.
It's not going to work. One more point on this, Ramesh, and that's something that we always think about. The usage of the word technology has also become very loose. These days, everybody, including my, wonderful, next door tailor, wants to say that he's a high-tech person, and that's okay. It's aspiration. Every company is going through a transformation, and tech is a huge part of that. But this is also where things get a little fuzzy in the, in the markets, where it gets hazy between truth, reality, and a bit of fiction as well. So at the end of the day, some of these businesses, should we look at them as retail businesses, as eyewear companies, as consumer companies, or as technology companies?
See, I would say one is a technology company that finally deals with data, 0 and 1s. There's no physical product. And other kind of businesses are which tech-enabled. Even food delivery is actually tech-enabled.
Yeah, absolutely.
Even quick commerce, the core product is not technology.
Yeah.
But let's say if you're using a UPI transaction on an app. Remember, there's nothing physical. There's just data.
No, that is a point well taken, because there is an app and that is your interface largely.
So a lot of businesses are actually tech-enabled. Yeah. Tech is a core part of the moat of how it gets done. But fundamentally, they're tech-enabled business. They are not tech business.
Sure. Ramesh, the other theme that you've been very bullish on is the data center.
Yeah.
Again, there is a lot of myth around how to play this theme. Is the real estate play the best play who are getting into data center? Just explain us how are you playing the data center theme?
See, if you think of a data center, it's actually fundamentally 3 things in a data center. 3 large cost items. One is a building, high-grade building. Number 2,
cooling systems.
Number 2 is a large cooling system. Absolutely. Because the servers, GPUs generate huge amount of energy.
Yeah.
So you need a world-class cooling system. And 3, a huge amount of power. Both primary power, because you need so much, it's energy intensive, and a backup power if the primary power fails.
Sure.
So the opportunity, I would say, is building and owning data centers may not be a great business. Sure. But if you're a critical component supplier, either on HVAC systems, cooling systems, or on power, or backup power,
sure.
Think of generators, gas generators, think of key transformers, think of the HVAC systems, complex HVAC systems.
Yeah.
Those are the companies that are going to make a lot of money. Sure. And interestingly, there's an opportunity in India, and I would say in a data center built out, India is at a very early stages. Yeah. Considering all the geopolitical concerns that are out there, governments will require data to be saved locally.
Yeah, correct.
So that is going to create a huge boom on data center construction within the country. Yeah. But interestingly, there are Indian companies which are participating in the global data center capex cycle.
Right.
You know, whether they are supplying into HVAC systems, whether they're supplying into energy systems and power backup systems.
Sure.
So there's opportunity on both sides.
In case our viewers are wondering what is HVAC, high voltage alternating current. So it's just so that you're not lost in the acronym. But I guess, great thoughts, and we want to discuss more of this, other themes, innovation beyond that, but we need to take a very quick break. So back in just a moment.
Welcome back. You're tuned in to Editors Roundtable. Well, I want to come across to you. We discussed the new age themes. Wanted to focus on the banking names because that's clearly got a good amount of interest, Mr. Mantri.
Yeah.
We've seen a lot of infusion, whether it's Sammaan Capital or you're looking at Yes Bank, RBL Bank, Federal Bank, and I believe Nimesh tells us there's more in store. So we'll wait by for that. What is your view? This kind of capital that's rushing behind banks. How would you place this theme? NBFCs, banks, public sector, private sector banks, your take?
See, the only reason banks get into trouble is asset quality.
Yeah.
And we had a small asset quality cycle in unsecured loans, in MFI. That's over.
Yeah.
Otherwise, if you talk of, whether corporate, prime, retail, there is no asset quality issues in India. And in India, if you want to deploy a lot of capital, financial services is really the opportunity.
Yeah.
And it's an extremely well-regulated sector. It's been very profitable. The regulation by various regulators is, the prudential norms are well managed. I would say the central bank is probably one of the best central banks in the world in terms of financial markets regulation. So it's a very attractive sector where you can deploy billions of dollars.
Yeah.
So I think
and it's coming, right? We already saw big checks getting drawn for.
Yeah, because you can't deploy billions of dollars in India in consumer, right? Which is a large sector. It's very hard to find those opportunities where you can put billions of dollars to work in the consumer sector, but you can put it to work in financial services. So that's the real sector. And I think the fundamentals are very strong. Growth is coming back with the GST cuts. Margin pressures are going away. There are no asset quality concerns. And actually valuations are also quite reasonable.
Yeah.
So which part of financials, to be a little more specific? I mean, it's a very wide universe.
Yeah, so I see, of course, I would say one is the lending businesses, but because the asset quality cycle is now looking good, you can actually go down the curve.
Okay.
Because see, when the asset quality is uncertain, you tend to go towards the most safest banks, who are the most prudential lenders. But as the asset quality picture is getting better, people can start taking risk on the lower, smaller names. Because they are at the margin, the biggest beneficiary when things improve, right? So people are going down the cap curve. So lending across the board, there is clearly opportunity. And I think the other part of financial services that's attractive is the whole wealth management and asset management space, which is again seeing very strong growth and competition coming.
Speaking of asset management, that was the other big debate of the week, right? I mean, all the stockbrokers are saying, what is this? Sell side can never have, or buy side can never have as great research as sell side.
Yeah.
So therefore, please pay for it. Your thoughts on the asset managers and the brokers, because those stocks got pummeled when this draft paper from SEBI came out.
See, first let's understand it's a draft paper.
Yeah.
So people will provide feedback and there'll be a...
No, but is this a MiFID kind of event for us? You feel so?
I don't know whether the regulator thinks on the MiFID lines, right? Where they want to segregate execution and research. And, that's been the MiFID idea. So I'm not sure of that. I think they looked at the trading cost of arbitrage funds and then implemented similar norms, suggested similar norms. But the important point to understand is arbitrage fund trade at a huge volume.
Yeah,
so
absolutely.
A person that gives you a huge volume pays a different price versus person who gives you a very less volume.
Yeah.
So, and secondly, it's like in a same customer, right? In a train, there's economy class, there is first class. You can't say apply economy class prices, 2-tier prices to the first class guys. Because the train makes money off the entire average, So that concept has to be understood and appreciated. And I think there'll be a rethink on some of these elements.
Yeah, that's the hope. I spoke to Mr. Ramdev Agarwal as well, and he said, this could be damaging in current form. So hopefully he believes that, there will be some tinkering out. But since it's the end of the week, let's cheer up things, right? If there was one sector where we have seen good amount of beats, it's the Alco-Bev sector.
I can guess that.
I knew it.
I knew it.
No,
I can preempt that question every Friday.
Very carefully.
But not
beer.
Not beer. People are consuming the hard liquor. And the few numbers we got, we had Radico Khaitan, great numbers out there. You had United Spirits, superb. You have Allied Blenders that's already at a 52-week high. Float is limited.
And associated alcohol, I said yesterday, and look,
we had one of the influential investors in Purunju bought a lakh shares in that one. And Tilaknagar Industries, they're having brandy. They're going to have a stiff peg of whiskey, but still people are buying it. Normally people will be cautious, it's becoming very expensive. How are you approaching that?
And let's not forget, those who are only making the mixers with the drinks now want to get into drinks as well, at least in Africa. Varun Beverages saying, they want to try with Carlsberg. So much going on.
So how are you all approaching that theme? Because clearly, I remember Madhu Kela as well. He said that there's a single company in China, and that company is valued more than all our companies put it together. Montai, right? And we had discussed it on this show itself a while back. Do you buy into this sort of a bullish argument, or there's another part? When I speak to some of my younger cousins, they say we're getting into healthy living. We don't want to consume so much. I don't know what's wrong with them, but you tell us.
So first, I'm going to disappoint you. I'm a teetotaler.
Yes.
So that's see. I think two perspectives here. One, there's a very large potential out there. I think that opportunity was true 10 years ago, 20 years ago also, and with rising per capita income, people drink better. So this is one of those categories where premiumization just goes off. It's not people drink more, they drink better. Right? So that's why premium brands come into play. So one, it's a great category and people are fairly loyal to brands, right? The challenge is that India operates like 28 different countries in Alco-Bev revolution. It's not one country.
Yes.
In GST, we are one country, is to operate every state has a different way of working, and every time a state government changes within that state, they change the way, whether who retails, the format of retailing, the pricing is controlled by states. It's a chaotic structure, so it's a very difficult market to operate. It also means people who are set there are in a great position. It's very hard for newcomers to come into the market. So it's a great market, and I think if the regulators become easier on allowing more. Let's say one of the biggest change in alcohol can be if you allow more places where alcohol can be served. I'll give you an example. In Bombay, the experience of buying alcohol is generally very poor, right? You go to Delhi or Gurgaon, just look at the nice showrooms where you just like you walk into a supermarket and you can also taste wine, right? At the store. So the experience of buying alcohol is very bad, right? So there are a lot of challenges in alcohol in India. You're also right about the second commodity, young people. In US, alcohol consumption is falling. Because the same narrative that people are changing behavior because of health habits. But I'm not worried about white drink.
People are moving to white drink, the gins and vodka.
But I'm not worried about that mega trend. It's like people saying, are people eating more? People are eating healthy food, but are also people eating more junk food? And over a long period, it's actually the alcohol consumption will continue to grow a long time in India.
I think Nigel has a lot to think about, whether it's coffee this evening or whether it's something else. on that note, I think we'll call it a day. Ramesh, great conversation. So nice of you to come over. We'll look forward to the next one. But for the time being, it's a wrap from the whole team that puts this show together. Many thanks for watching. We'll see you with the markets again bright and early on Monday morning.
Good evening. Thanks very much for joining us on Business 360. I'm Shriram Finance. The headlines that we're tracking for you this evening. Dalal Street continues to see selling pressure. The Sensex loses over 450 points. The Nifty drops below 25,800. Both indices also snap a 4-week winning streak. SEBI Chief Tuhin Kantapande says we cannot just shut down weekly F&O expiries. Adds we have to find the right approach as many participants are using them. India and the US sign a 10-year defense framework on the sidelines of the ASEAN summit in Malaysia. Indian government sources say both nations will enhance defense industrial cooperation, focus more on co-development and also work on underwater domains. The framework also covers more military exercises between India and the US. Higher realizations boost Maruti Suzuki's Q2 revenue. However, higher input costs, ad expenses and the cost of a new plant drags margins lower. Big tech continues to beat estimates in Q3. Apple reports its highest ever revenue from India, marks the 14th straight quarter of record iPhone sales. Amazon posts its fastest cloud revenue growth in nearly 3 years. Big tech has promised to pour $400 billion into artificial intelligence this year. Cognizant explores a secondary listing in India through an Indian depository receipt in a bid to enhance shareholder value. Talks are underway with regulators and the proposal is at an exploratory stage. Lenskart 7,200 crore rupee IPO sales through on the first day of bidding thanks to strong demand. The company raised over 3,200 crore rupees from 147 anchor investors, 35% of allocation made to 21 domestic mutual funds. Tata Trust to hold its first board meeting since Merely Mistri's ouster on the 11th of November. The trust is yet to issue a statement on Mistri's tenure coming to an end. Legal experts say Tata Trust must inform the charity commissioner that Mistri's tenure has ended within a 90-day period. 4 years after shutting operations, Ford plans to revive its Chennai plant and focus on next-generation engines, signs an MOU with the Tamil Nadu government for an initial investment of 3,250 crore rupees. The project is expected to create 600 jobs. NDA unveils its Bihar manifesto, promises 1 crore jobs and employment opportunities, major infra boost and women empowerment schemes. The state votes in the first phase in a week. NVIDIA CEO Jensen Huang attends the APEC summit in South Korea, brings downtown Seoul to a halt by stopping by for a casual dinner with the chiefs of Samsung and Hyundai in a rare display of camaraderie among global business leaders. Redemption for Jemima Rodrigues after being dropped for the World Cup in 2022. The 25-year-old batter hits a commanding century to beat Australia. India will face South Africa in the World Cup finals on Sunday. But first up, the market action. The Dalal Street continued to see selling pressure today, erasing gains from earlier this week. The Nifty dropped below 25,800. 40 Nifty stocks closing in the red amidst the broad-based fall that we saw. The Sensex down 0.5%, and so was the Nifty mid-cap, lost about 0.5%. For the week, both the Sensex and the Nifty snapped their 4-week winning streaks. The markets closing in the red. The Nifty down just about 70-odd points. The mid-cap index, though, closing higher by about 1%, and the Nifty Bank also closing in positive territory. PSU Banks, of course, the standout performer with the index ending higher. That's the market action for you. And staying with market-related news, SEBI Chief Tuhin Kantapande says the weekly F&O expiry cannot be shut down as several market participants use these instruments. Speaking at a business standard event, Pandey also said that regulators need to find the right way to approach the derivatives market and that the regulator is collecting data to address the issue. Remember, this is a story that CNBC-TV18 broke. Now, SEBI has also proposed changes to weights of individual stocks within non-benchmark indices. According to a circular, the weightage for top stocks of an index will be capped at 20% from the current 33%. Further, the total weight of the top 3 stocks cannot be more than 45%. The cap is currently 62% for all non-benchmark indices. This essentially means the top 3 constituents of the Nifty Bank Index, that's HDFC Bank, ICICI Bank and SBI, will see a gradual reduction in weightage. The norms also state that all non-benchmark indices should have a minimum of 14 stocks in it. The Nifty Bank currently has 12 constituents. Well, the other big story that we're tracking, India and the US have signed a 10-year defense framework on the sidelines of the ASEAN summit in Malaysia. Defense Minister Rajnath Singh has termed the deal a signal of India's growing strategic convergence. US Secretary of State Pete Hegseth said that ties with New Delhi has never been stronger. Parikshit standing by now to take us through the contours of the defense framework. Parikshit.
Well, the last India-US defense framework had been signed in 2014-2015, so it was coming to an end. Now, top government sources telling us that the renewal of the India-US defense framework for another 10 years is an important signal for the India-US partnership. This indicates that progress in the defense partnership continues, even as trade negotiations are yet to find a landing zone. Sources add that the positive momentum shows that a trade deal is within reach soon. What this new 10-year defense framework does is that both nations will enhance defense coordination, information sharing, technology cooperation. The agreement paves the way for increased industrial cooperation, more production and co-development and cooperation in underwater domains in future. We'd also like to see more military exercises between India and the US as a result of this agreement. In terms of current acquisitions from the US, sources say India is in talks with the United States to acquire P-8I reconnaissance military aircraft. India is also in talks to acquire Javelin anti-tank missiles from the United States and Excalibur ammunition. Both Javelin and Excalibur ammunition orders are part of India's emergency procurements to replenish stocks after Operation Sindoor. And what is again an important indicator and positive signaling in the India-US defense partnership is that the US government has assured India that all emergency procurements will be delivered within timelines.
All right, Parikshit, many thanks for joining us. And staying with global developments, the meeting between US President Trump and Russia's President Putin has reportedly been cancelled. According to a Financial Times report, the meeting was supposed to take place in Budapest next month. However, US officials reportedly called off the summit after reviewing Russia's conditions, which included concessions on sanctions and recognition of its territorial claims in Ukraine. But let's head back to Parikshit. For the big CNBC-TV18 exclusive, Tata Trust will hold its first board meeting since Meli Mistri's ouster on the 11th of November. The trust is yet to issue a statement on Mistri's tenure coming to an end. Parikshit is still with us. Parikshit, back to you. What's next now for Tata Trust and Meli Mistry? And so far, no official communication from either.
Tata Trust to hold its board meeting on November 11. The reason why this is significant is because this is the first board meet after the tenure of Meli Mistry came to an end. Tata Trust has not commented on the agenda for the board meeting just as yet, but some trustees expect this meeting to go off smoothly. What is the road ahead for Meli Mistry really? Meli Mistry, we're told, is on an overseas visit. He's not replied or commented to any of CNBC-TV18's queries. It remains to be seen whether Mistry will challenge his removal or accept the decision of the board not to reappoint him. Some legal experts say he can challenge his removal on the ground that a Tata Trust resolution in October 2024 had said that all trustees have to be reappointed for life and reappointment is a mere formality. In the current case, the majority of trustees voted against him and therefore Meli Mistry ceased to be a trustee at Tata Trust on October 28. Legal experts we spoke to say that Tata Trust must now inform the Charity Commissioner, which is like a nodal body for trusts, that Mistry's tenure has ended. As per rules, any change in any trust must be communicated to the Charity Commissioner's office within a 90-day period. The trust can even inform the Charity Commissioner earlier, that is within a 30 to 35-day period, to complete other compliance formalities. In the current case, we are told, as banks and financial institutions and the government may need to be informed, Tata Trust may begin the process very soon.
All right, Parikshit, many thanks for joining us. So, Meli Mistry's ouster, no official communication yet, but we expect some developments to take place shortly. And of course, 11th November will be the board meeting of the Tata Trust. Maruti Suzuki delivered a steady Q2 performance, largely in line with expectations. This is high realizations boosted the Q2 revenue for the company. However, higher input costs and expenses and the cost of a new plant have pulled margins lower. Sudarshan is standing by with the Maruti report card. Sud.
The first look operational numbers are looking largely better than our expectations, mainly on revenue front. It has come at more than 42,000 crore against our expectation of around 40,000 crore. On EBITDA front too, it has come more than 4,400 crore against our expectation of around 4,200 crore. And margin it has slipped below 11%, but it's in line to our expectation. It has come in at 10.5% against our expectation of around 10.60%. And on a YOY basis, also profit has increased by 7%. Revenue too has increased by more than 13%, and revenue increase has been supported by healthy increase in the volume that company has seen both on a sequential basis as well as year-on-year. And I assume that company might have taken price hike that has helped an increase in the realization. On YOY basis, realization has improved by more than 11%. Now, over the last 2 months, company has seen an increase in the demand, also mainly because of GST rate cut. So going forward also, we'll have to see from the management if management comments about the increase in the outlook for FY26, because as of now, the outlook for PV industry for FY26 is low single-digit growth. So it will be taken very positively if company goes ahead and says that for industry, PV growth outlook can be increased. But as far as numbers for Q2 FY26 are concerned, it's looking like largely better than estimates.
All right, so that's Maruti for you. And staying with American auto company Ford plans to restart operations at its Chennai plant in Tamil Nadu, ending a 4-year production hiatus. The company has signed an MOU with the state government to set up an engine manufacturing line. Ford will invest 3,250 crore rupees in that project, which it says will create over 600 direct jobs. On to IPO corner. Eyewear startup Lenskart 7,200 crore rupee IPO fully subscribed on the first day, and thanks to strong demand. The demand was led by retail investors whose portion was fully subscribed last night. The company released the details of the anchor book, which had 147 investors, raising more than 3,200 crore rupees. 35% of the anchor book was allotted to 21 domestic mutual funds. These include the likes of SBI, HDFC, ICICI, Kotak Funds, Axis Mutual Fund, White Oak Capital, among others. The anchor investors also included marquee global names like the government of Singapore, Norway's pension fund, BlackRock, T. Rowe Price, among others. Let's consult valuation, saying it is close to the company's competitors.
Firstly, as a company and as an entrepreneur, our job is to create value for the customer. Even if we look at the valuation, there are investors who are selling shares, there are investors who are coming in, and they have done a lot of working to arrive at these numbers. All I can say is they'll be very close to comparables. They won't be off. Sometimes when you look at things without looking at the full perspective, they look different. But yeah, be rest assured that everything will be in line with what they should.
One of the companies that has created the most value in India in the last 4-5 years was hugely loss-making when it went public, right, on the food delivery side.
True.
It is still not very profitable, even as we speak today.
Yeah.
But just look at the value creation that's happened. One of the other fintechs that went public about 3 years ago was not making money then. It's actually now turned profitable. So we are not buying the past, you're buying the future. And remember, in certain categories, there is a potential. Please understand, there is a potential for Indians to build world-beating companies over a long period. So I think it's very early. I'm just saying it's all about the future.
Well, buying into the future, that's White Oak Capital, one of the investors in Lenskart. Orkla India's 1,667 crore rupee IPO offering subscribed nearly 48 times on the last day of bidding. As of 4 p.m, the portion reserved for QIBs was booked over 117 times. The retail portion booked nearly 7 times. And talking of listings, a possible listing, Cognizant is considering a secondary listing in India via an Indian depository receipt. The company is mulling India listing to enhance its shareholder value. The US-based IT services major is holding talks with regulators and other authorities to explore possible options.
We also get an opportunity to be attracted by a different set of investors who are India-based, emerging markets-based, sovereign funds who are emerging market-based. So we kind of going to explore this for our employees, for our shareholders. Early days, so hard to say how much time it will take, hard to say what are the bottlenecks and the roadblocks which will come on the way. But it's in an exploratory stage.
Exploratory stage, a secondary listing in India, that's Cognizant. And a quick programming note, the countdown to the 21st India Business Leader Awards
has begun. For over 2 decades, IBLA has celebrated visionaries who've shaped India's economic narrative. The theme for this year is the road to global dominance, the India playbook. Don't forget to tune into CNBC TV18 and log on to our social media platforms for that powerful jury meeting, a power-packed panel comprising the biggest names in corporate India. Our coverage starts at 5:30 p.m. Well, we will head into a short break, but coming up next, NVIDIA CEO Jensen Huang brings downtown Seoul to a halt by stopping by for a casual dinner with the chiefs of Samsung and Hyundai. That and more when we get back. Well, global stories. Hamas has handed over the bodies of 2 more Israeli captives from Gaza under the ongoing ceasefire arrangement. The remains of 11 more captives are still in the enclave. Meanwhile, the Israeli militaries continue to carry out attacks in the Strip, with aerial bombings being reported near southern Gaza's Khan Yunis. From one war-torn region to another, Russia has launched a barrage of drones and missiles at Ukraine's energy infrastructure. This has caused nationwide power restrictions and has killed at least 7 people. Ukraine's President Zelensky has said that Russia launched more than 650 drones and 50 missiles in the attacks. Most of the drones were neutralized and 2/3 of the missiles were downed. On to global earnings. Amazon's third quarter earnings exceeding streets' expectations, driven by the company's cloud computing unit. Revenue from that vertical soared 20% on an annual basis. Overall revenue also came in at over $180 billion. The company CEO Andy Jassy says that Amazon Web Services has grown at its fastest pace in the last 3 years. And we're not done with earnings. Apple reporting the highest ever revenue from India, marking the 14th straight quarter of record iPhone sales. Apple has also also provided a strong forecast for the next quarter. The company CEO Tim Cook has said that Apple expects total revenue to grow by 10 to 12% year-on-year, adding that he expects the iPhone revenue to grow double digits on an annual basis as well. So good news there from Apple. And from Apple to NVIDIA, the company CEO Jensen Huang attending the APEC summit in South Korea just days after the semiconductor giant became the world's first $5 trillion company. Jensen Huang brought downtown Seoul to a halt by stopping for a casual dinner with the chiefs of Samsung and Hyundai in a rare display of camaraderie among global business leaders. Speaking at the APEC summit, Huang pledged to provide more chips to South Korea and deepen the company's relationship with Samsung and Hyundai.
In the next year, we will deploy another 250,000 in just Samsung, SK, Hyundai, Naver, and the Korean government. And so just 5 teams will deploy another 260,000. That's very significant. After that, there's no question in my mind that Korea will build many more AI factories here.
Well, that's Jensen Huang in South Korea. And back home, the Supreme Court has held that lawyers cannot be summoned for questioning by law enforcement agencies for professional advice given to their clients. The apex court made the ruling while setting aside summons issued by the ED to 2 senior lawyers. The court ruled that summons should be vetted by an officer not below the rank of the superintendent of police. Now, India's once celebrated craft beer startup Bira 91 is in the middle of a serious corporate and financial storm. Employees of its parent company B9 Beverages have now taken their grievances to the central government over unpaid dues and tax violations. Rachna joins us now with more. Rachna, what's going on at Bira?
Well, it's been a rocky year for B9 Beverages. The company, which renamed itself as a public limited firm last year ahead of a planned IPO, has instead run into mounting losses and growing financial distress. Now, around 90 current and former employees have written to the Ministry of Labour and Employment, the CBDT and the Ministry of Corporate Affairs, alleging 7 months of unpaid salaries. The letter also accuses the company of not depositing around 50 crore rupees in TDS, delaying PF contributions since April 2024 and failing to clear gratuity and vendor payments. Adding to the gravity of the situation, employees allege that B9 Beverages has liabilities of around 1,400 to 1,500 crore rupees, including 950 crore rupees in debt and 150 crore in unpaid statutory dues, 300 crore owed to vendors and over 50 crore rupees in employee dues. They say the company no longer has a functional office due to unpaid rent and that CEO Ankur Jain has made no formal communication. Employees also say that over 600 families are struggling to meet daily expenses, accusing the management of repeated false assurances. They've urged the government now to investigate B9 Beverages and freeze directors' assets to secure dues. At the same time, investors including Peak 15, Sofina, Six Sense Ventures, MUFG, Tiger Pacific and Kiran Holdings have flagged concerns over Bira's burn and weak financial performance. Soon after the employee letter surfaced, which was a couple of weeks ago, investors moved to oust CEO Ankur Jain. Japanese brewer Kiran Holdings and lender Aniket Capital have since taken control of the beer cafe business, which is Bira's profitable hospitality arm under its subsidiary Better Than Before. Sources now say that the move is meant to protect the only profitable vertical if B9 faces liquidation. CEO Ankur Jain has challenged the takeover in the Delhi High Court, saying the matter is now sub judice. We reached out to him and the investors for a comment but have not received a response yet.
All right, troubled times there for Bira. Rachna, many thanks for joining us. IKEA is set to invest 1,000 crore rupees in a solar park in Rajasthan in a bid to become green energy positive in India. This will mark IKEA's first renewable energy investment in the country. Speaking to CNBC-TV18, IKEA India's CEO Patrick Antony said the 500-acre park will generate 210 megawatts of clean energy within a year's time.
So globally we are producing more than we consume, and now it's time for India also. So we are announcing right now that we're investing 1,000 crores into a solar park in Rajasthan, Bikaner, which is about a 500-acre site where we will produce around 210 megawatts of peak power of solar green energy in India. In about 1 year from today, actually, we will put it live.
Well, that's IKEA also investing in green energy in India. And with that, it is time for us to wrap up this edition of Business 360. Don't forget to tune in to CNBC-TV18 on our social media handles for the India Business Leader Awards jury round. Our coverage starts at 5:30 p.m. this evening. So tune in on TV, online for all the action.
Hello and welcome to CNBC TV18 Conversations. Our conversation today is with an iconic banker who is in the thick of the global economy and the financial markets, who will perhaps have all the answers that Indian financial investors are seeking. My guest is Vis Raghavan, the Executive Vice Chairman and Head of Banking at Citigroup. Mr. Raghavan, thank you very much indeed for joining us.
No, thanks for hosting me.
Well, I want to ask you about a lot of things about Matunga. You come from Matunga, where I come from, but we'll keep that conversation for later in in this chat. Let me start with what our viewers really want to know, the growth story. I mean, you must be talking to the largest number of bankers since you head banking at Citigroup. Are you getting a sense that the corporates are willing to invest? Is the growth story intact in the US and in, the global economy in general?
Absolutely. I think, you clearly, we will not go, there's a whole AI-fueled, AI-powered boom that is, absolutely omnipresent. You can feel it everywhere, and almost you get the sense that if you're not part of that entire AI regeneration, you're going to get left behind. And that is very, very real. It's palatable. And everyone is investing, everyone is focused on it.
Okay, 1 minute.
Yeah.
That part of the growth everyone is buying in.
Absolutely.
I'm asking you, if outside the AI part, when you talk to corporates, what's the sense?
So look, I think there too, you are seeing growth across the board. And if you look at, that growth engine, technology, I'm not talking AI, technology is very much at the heart of it. So if you look at a major industrial in the US, they're looking at acquisitions in the tech adjacencies. So software, so if you take a real diehard, core industrial company, they will look at the tech adjacencies. If you take retailers, it's e-tail. So if you look at the autos, it is kind of, autonomous driving, driverless cars, it's really a tech nexus there. Same with healthcare. So I think a tech undercurrent is very much at the heart of, the growth, but there is growth everywhere.
Okay.
The biggest wild card is M&A. So with valuations where they are, if you're not growing organically, then it is acquisitions. And that is really a big part of the growth theme.
Okay. No, I'm persisting on the growth story simply because when this tariff issues cropped up, there was a sense of uncertainty in the world.
Yeah.
And there was a lot of fear that global growth will slow down. You're not seeing signs of that. I mean, give me US and global separately if you wish.
I think US, what you're seeing is 20%, maybe even up to 25%. You're seeing tariffs generally are being absorbed in most cases, in some cases passed through. The inflationary impacts of those remain to be seen. Okay. But right now, you're keeping a lid on it, and most companies are assimilating the tariff impacts. If it is beyond that, then the question is, you have to rejig your trade channels. You look at your supply chains, and then say, okay, what do I do? Do I friendshore, nearshore, onshore, offshore? How do I, play with the mix so that I'm still competitive and I can keep doing whatever I used to do? But what you're seeing is there is an element now prevailing that, in most cases, sanity will prevail. There is kind of a base tariff that will stick. But beyond that, reason will prevail. There's a deal to be done. There'll be negotiations, and you'll land somewhere which is acceptable.
Actually, in the past 2 weeks, there have been a series of deals, especially in the ASEAN countries. The president has also tweeted that something is coming with India. So it clearly looks like the ruffled feathers are getting softened at the moment. But let me come to financial markets itself. What have you made of this rally in gold? You think it continues?
I think multiple drivers there, and it's a bit complicated. I think clearly gold benefits at times of tumult when there is uncertainty. You flock to that asset, and there's an element of that. The other point which is relevant here is clearly there's a lot of government debt, Western government debt, that needs to be rolled, refinanced. You take it. I mean, 30 trillion plus in the United States. There's France, there is the UK, and a lot of that debt will come up for redemption, rolling over, refinancing and the like. And a key kind of factor there is not all the traditional buyers of this paper are natural buyers of this paper in the same magnitude going forward, because of geopolitical tensions, because of different stances. So I don't think it's been kind of I've not seen any kind of calculation, but it's not entirely, just a coincidence that you have gold at $4,000, $4,000 at a time when you have got government debt also kind of piling up. So the question is there any kind of rebalancing that's happening within those portfolios?
So gold's higher, this big run, this 50% rise in the past year is likely to remain that way. You don't see it getting corrected.
I don't see any catalyst that kind of drives that. Bar some very stable world where all the conflicts get resolved and
which doesn't look anytime
and everyone
soon.
is in a happy place and and we go about holding hands. And
let me couch the question in the context in which you have come now. We just saw NBD buy 60% stake in an Indian bank, RBL, and then we saw before that SMBC buy about a 24% stake in Yes Bank. So foreign bank interest, not just private equity, which is of course Blackstone is buying. Foreign bank interest has increased. Can you just explain, would Citi be doing more? What explains this interest?
So I think this is a pivotal moment because just like in 91, 92 was a pivotal moment for the equity markets, I think this is a pivotal moment for FDI liquidity flows into India. So I think, really kudos to RBI and, really I think the whole kind of regulatory framework for enabling this to happen because this will be a watershed moment for liquidity flows, just like the gates were open for equities, a few decades ago.
Yes.
So I think this you will mean more liquidity flows. I mean, yes, you talked a few about the bank investments and the like, but I would say this is auspicious for broad liquidity in general. And this is good for corporates. This is good for inward investment.
Absolutely.
And this has come at the right time and really hats off to.
Yeah, we could do with more banking capital.
Absolutely.
If this growth story rolls the way it is, which is going to be my next question. I mean, I know you're looking more at deals and banking rather than, FPI flows, portfolio flows.
Yeah.
But actually, lately the flows have been attracted to, China and some of the ASEAN countries.
Yeah.
Do you see the reversal?
Absolutely. I think it's a no-brainer. I mean, if you look at there are pockets, when you look at the big pockets of investment, America rules right now. I mean, this is where...
Outsized.
It's outsized. I mean, nearly, close to 70% of the world's capitalization is in the United States. I mean, U.S. corporations, take 40-50% of the world's profits are generated by U.S. corporates. The pools of liquidity, whether it is in public markets, private credit, private equity, public credit, all the walls and pools of liquidity are there. And the point is, if you wanted to invest, where do you go? So I think Europe is kind of, soul searching a bit. The UK has its own kind of nuanced post-Brexit kind of problems and issues that it is navigating. France, you've seen the story. Germany is kind of rediscovering its kind of industrial, strengths and the industrial framework. So I think Europe is kind of, right now, it needs to refocus and rejuvenate. China, you cannot ignore. I mean, it is an incredible economic power. We will figure out how to navigate China better and better. And right now, I think most folks are figuring out how to navigate it in the current, even more so in the current tariff framework. And then where else do you go? It's India. So there is an inevitability to India ruling the waves, its relevance, massive consumption economy. When you got 1.4 odd billion people, whatever we can produce, we can consume, within this country. And also most folks are actually going up the consumption curve.
Yes.
So disposable incomes are going up, and quality of life is increasing and improving. So I think you cannot ignore.
So the portfolio flows will come.
The portfolio flows will come, and there has been the market has had an incredible run.
Yes.
Retail interest has been super strong. I don't have a view where how much leverage sits in that portfolio, in that framework. But clearly, retail have been big buyers, herein. So I think India, medium, long term, you simply cannot ignore. And you can see the other region which is absolutely blossoming is the Middle East. I mean, Saudi, I think they are just fresh on the back of FII. I think incredible momentum and a real kind of a energy in that market. And likewise, UAE is kind of is booming, and also benefiting from a lot of money flows outside of coming from Europe and the UK, where within our wealth management business, within our kind of private bank, etc., we've seen a lot of money flows, out of the UK, flock to the Middle East.
Okay, that's important. Well, speaking of buoyant financial markets, how much would you worry about something like this? First Brands or Tricolor or generally private credit in general? They had an exuberant run. This is a market which you should be looking at very closely. Are you worried about anything?
I won't make any reference to any insects and stuff like that in this discussion. But I mean, look, I think in all of this, there is a lessons learned exercise as to could this happen at Citi? What went wrong? And every institution kind of on the back of every one of these events, looks through their portfolio, runs the kind of the cleanse and makes sure that, are we robust? Are we buttressed? And is this kind of going to be? So I think a lot of that, Citi, we have done at Citi, and we made sure that, our defenses are intact.
But it's a minor.
It is.
Hiccup, or is it a big problem?
No, there's fraud here, and at the end of the day, my view on fraud is somebody's going to rob your house. They're going to rob your house, and all you can do is put all the defenses and the bells and whistles and the controls around to make sure it doesn't happen. But there's elements of fraud, from what I understand, in these instances. Are these, is there kind of a ripple effect of any form? Yes, there are a few lights kind of flashing,
but not a big domino.
But there's not a big domino, and all you got to do is you'd be very remiss to not kind of take this and make sure that you are, running your sanity checks and making sure.
Okay, fair point. We have to take a quick commercial break, but I'm back with more questions on the financial markets. Our viewers will be dying to hear a lot more about the Fed in particular. Back in a minute. Welcome back to this CNBC TV18 Conversations. My very special guest is Vis Raghavan, the Executive Vice Chairman of Citigroup. We've been speaking about the global growth story, and Mr. Raghavan has been very positive on the global growth environment in general. But let me come to the financial markets yet again. You don't see this AI boom tripping markets? Is it like overdone to such a point, like we saw, at the turn of the century with the dot-com stocks? You don't see anything like that it can.
I mean, famous last words. If I had a crystal ball, what is incredible is look at the dot-com boom. If you look at the whole internet revolution, and it started 97 or thereabouts, it really got hold. You saw frenzy. Any company with a dot-com could go get an IPO done, and then you saw a bit of a correction, and then look at where the 2 decades of prosperity, e-commerce, was invented just then, and it is now, it's mainstream.
Yes.
You do not, most of us, that is our, our consumption channel.
Our way of life.
Our way of life. So I think AI will do something similar. It'll be seismic in the impact it has, and it'll be incredibly accelerated. So this will be, it took us 2 decades. This will be much more compacted, and new leaders, new champions, new heroes will emerge, and certain legacy models will get crushed. I mean, there is a natural. It's a bit Darwinian in a sense, and there's a natural evolution that comes on the back of that.
Fair enough. So the concept will survive, but the fittest will survive.
But exactly, and the point is, within that, fasten your seatbelts. There'll be rally correction. There'll be a lot of volatility. It'll get overdone in some cases, and it'll get oversold in some cases. And when it gets oversold, there's a whole bunch that are waiting to pile in, and then and life goes on. So I think we get to kind of besotted by kind of the short term, and it's too myopic to kind of just say is this overdone, is this gonna the revolution is absolutely here, and within that it's a roller coaster. I think it'll have its moments, and you got to approach it eyes wide open. The one thing, as I said, I do think though that unlike the whole internet era or the kind of pre-dot-com era, I do think that the early winners will also feature. Many of the early winners will also feature as late-stage winners. Whereas you remember with that, with
the dot-com, that was not the case.
AOL and Netscape and all of that, and then you had some real champions come through, after. But here, I think the investors and the companies that are really kind of leading us into this revolution have the wherewithal, the financial wherewithal, and the economic might to really invest and kind of see through this journey.
It's difficult to see a world in our own lifetime without the Magnificent Seven. I mean, they're too solid to be wished to be.
And does the mix change? There'll be somebody more magnificent that that comes, and someone who loses and falls by the wayside. I think that's inevitable. That's kind of a fact of life. So
absolutely. Okay, let me come to perhaps one of your older favorites, debt markets and Fed. What are you expecting? Do you think the Fed is going to continue? I think the broad market expectation, if you go by CME Fed Watch, is another 100 basis. Do you think that's coming, or do you think inflation is going to be? I mean, it's 3% inflation.
Look, 100 basis points everyone is pricing that in. I think that is widely anticipated. The inflationary aspects are unknown. You are seeing energy prices, oil at about $60 or thereabouts, is almost kind of a damping mechanism around kind of inflation and the like. And then you have, within the mix, you have things around productivity, efficiency gains, and all
just the tariff-led inflation that everyone is worrying about.
We don't know that. We don't know what the unintended consequences of that are. And then the question is what happens to employment, and what happens to consumption, because I think that is the wild card, and generally, if the macro environment is uncertain, you tighten your seat, tighten your fasten your belt, and then you consume less. And so I think that equilibrium will be attained. But you're still looking at, even if it is a 3-handle yield curve, that's a healthy yield curve. And what you will see on the back of that is a much more robust M&A environment, because financing becomes more attractive.
Yes.
Your cost of capital becomes more attractive. And then with equity valuations where they are, boards today have to justify their share price.
Yeah.
So if your share price is near lifetime highs, near historic highs, or is fully valued, fairly valued, whatever you want to call it, with that comes responsibility. So the question is, where is the growth? And
therefore more deals.
More deals. Because if it's not coming organically, I better go buy my growth. Because if there's no growth, investors work with their feet and they punish you for not delivering on that lofty share price you have. So you have a very deal conducive environment, especially with a getting more benign yield curve. And then on top of that, you have the whole macro around tariffs, supply chains. Do I have to make in America? Do I have to buy in America? And the ultimate kind of, fuel for the deal environment is the firepower of private equity. Private capital, whether it's private, there's about $2.5 trillion plus of dry powder, which they're paid to deploy.
Yes.
I mean, that's their job, is you got to go spend the money. So then with the yield curve, your spending becomes a bit easier, better. So there is a very healthy underpinning of, if valuations come down, there is buyer interest. Whether
golden period for deal makers.
I hope so, but the key is a relative certain backdrop, because uncertainty is the worst, and it's a deal killer. Because boards will say, we don't have to do anything now, let it pass, let's wait. And that let's wait is dangerous from a deal making point of view. So I think you are in an environment where the macro, the micro, the share prices, the yield curve, the amount of liquidity there is in the market, all kind of is pointing to, at least in the United States, a very healthy kind of dealer environment. Then one other last point I'd make there is the relative valuations. So you have, pockets of Europe, et cetera, where you have fantastic companies that are undervalued. And there was a big move, last year and beyond, where they were looking at redomiciling, listing in the United States and the like. And this suddenly looked very attractive when you have the currency to say, hang on, you got some very nice houses in bad neighborhoods
yes.
that you can go and prey on. So, and I think even for Indian corporates, the time is fertile to really kind of, if you wanted to, really kind of, spearhead your growth agenda and have a global kind of growth agenda. I think it's a fantastic time.
No, actually, the Indian government, the Reserve Bank has liberalized foreign loan rules.
Yeah.
And now we can Indian corporates can take foreign loans for M&A, which they couldn't earlier. And they can use even Indian bank loans.
Absolutely
fund acquisition. So,
which is important, because that means deals of size are eminently doable, eminently financeable. And the valuations are very attractive for if you want to prey on an overseas corporate.
Okay, I believe I'm running out of time, but I have to ask you the stable coins and crypto coins questions. With the Genius Act coming in, stable coins is a reality. Well, crypto also may come because there is the Genius Act also coming. Would you worry that you're lending against something which you're not sure?
I think the question is, lending against any asset is a function of the liquidity of the underlying asset.
No, but this one has been more volatile.
It's got more volatile, but then the question is, what is the collateral? What are the collar levels for the margin calls and the like? So I think there's a price for everything.
Yes.
Which is kind of so it is so long as you're risk managing it appropriately, you should be.
Now one hopes the world will figure it out.
And the question also is, increasingly, folks are going to provide custody against these digital assets and the like, and then it's a payment. It's more of a payment mechanism. Yes. So you are you cannot ignore this. This will slowly become mainstream.
Oh, okay. We have to be prepared for that, and I think India is preparing for that. Well, it was a pleasure having you here. Since we both belong to the same suburb in Mumbai, have you done are you doing the usual rounds in Matunga? What are your favorite spots?
So I have my dosa fix on my way back to the airport. I go to Ramanayak, the Udupi place, and I it's a free commercial for Sai, who owns it. He went to school with me, so it's kind of so it's kind of it's a fantastic community. So I usually haunt the same places, and it's really fantastic to see they're all still standing there.
Yes, Ramanayak has not changed. Concern's coffee has not changed.
No, exactly. And then I it's the Hanuman temple near Don Bosco where I have to go, and then the Ganesh temple near Matunga station on the way to Royal College. So it's kind of it's the same drill, and all of my friends are still kind of in different guises still there or about.
So good to hear that. Those are my favorite places too. Thank you very much, Mr. Raghavan, for joining us and taking us on a global tour as well as the Matunga tour.
No, thanks for hosting me. It's been a pleasure.
Well, that's it on this edition of CNBC TV18 Conversations. I'm sure you enjoyed it as much as I did talking to Mr. Raghavan.
Hello and welcome to Global Eye. I'm Parikshit Luthra. India and the United States have solidified their defense partnership with a 10-year defense framework. Defense Minister Rajnath Singh and US Secretary of War Pete Hegseth inked the deal on the sidelines of the ASEAN summit in Malaysia. India's defense minister has termed the deal a signal of India's growing strategic convergence. Meanwhile, Hegseth said that ties with New Delhi have never been stronger. Top government sources have told CNBC-TV18 that this indicates progress in the defense partnership, which in turn shows that a trade deal may be around the corner. So what does this mean for both nations? Enhanced defense coordination, information sharing, technology cooperation. The agreement will also allow India and the US to co-produce, co-develop military infrastructure also in underwater domains. We're also likely to see more military exercises between India and the US as a result. When it comes to current acquisitions from the US, India is in talks with America to acquire P-8I military aircraft. Also in talks to acquire Javelin anti-tank missiles from US and Excalibur ammunition. Both Javelin and Excalibur ammunition orders are part of India's emergency procurements to replenish stocks after Operation Sindoor. So how will India's arsenal benefit from this framework? Let's listen in to our guests now. We're joined by former Indian diplomat Rakesh Sood and former Deputy Chief of Integrated Defence Staff, Lieutenant General Anil Ahuja. Gentlemen, thank you very much for joining us. Ambassador Rakesh Sood, what's your view? Is this a positive for the trade negotiations as well? We managed to renew the defence framework agreement, which is a 10-year pact, despite the fact that we've had very difficult trade negotiations. Does this show that a trade deal is on the horizon and we may finally reach a landing zone soon?
I think that the trade deal, I would consider the trade deal done when it is both sides announce that it is ready for signature, because nothing is completed till it is actually completed and is ready for signature. The devil is always in the details. Insofar as the defense framework is concerned, look, this was signed for the first time in 2005. It was then renewed in 2015. And now it has been renewed again. There is no denying the fact that during this period, US has emerged as a major defense partner from literally zero. We today have defense equipment purchases that are close to $25 billion, if not more. US is today the country with which we have the largest number of joint exercises of all three services, of combined services, and things like that. So therefore, the defense agreement is a reflection of growing defense cooperation, but it began actually, the first defense cooperation agreement was actually signed in 1995, after we had a defense planning group set up at the defense secretary level, a defense technology group set up at the level of the secretary DRDO, and service-to-service steering groups set up to begin first talking to each other and planning on joint exercises. So from there to now has been a long walk, as it were. But then defense relationships are relationships that don't go up and down as quickly as something like trade deals. I mean, trade deals, as we have seen particularly during the Trump years, have had a tendency of fluctuating very widely because of the manner in which he uses tariffs.
Okay, General Ahuja, to ask you now. Right, I'm going to come back to you, sir. But General Ahuja, if I were to ask you, what real improvements are we expecting or you really hope for? Because yes, our defense partnership, as Ambassador Sood said, has been growing since 2005. Since 2014, we've seen a series of enabling defense agreements between India and US, which have uplifted the partnership. But what's really missing? What more needs to be done? And does this new, renewed framework address that?
Thank you, Parikshit. And Ambassador Sood has just recapitulated how we started in 1995, and successively 10 years lapse, we have moved forward. So one, it is a continuation. Two, it is a consolidation of last 10 years, where we've achieved, where the momentum has been exceptionally strong, if I may say, that it was during the period 2015 till now, that is between these last two framework agreements, that we went in for all these LEMOA, COMCASA, BECA, Industrial Security, Annex, STA1, Major Defense Partner. And over these 4 administrations, what has happened is that defense, in any case, defense is a field in which the cooperation comes under a lot many verticals. It's mill-to-mill cooperation, it's technology cooperation, it's trade cooperation, and it's defense industry cooperation. So what we've done is that during this period, we saw, and particularly during the last Biden administration, that besides the mill-to-mill cooperation, we moved along into a defense industrial roadmap, which was concluded in June 2023 during the then US Secretary of Defense visit. We have gone in a big way into technology cooperation and technology cooperation beyond defense. We had DTTI, which was in the field of defense per se, but then we went into ISET, which has now been christened as Trust. And under this, very significantly, we've had this IndusX, Impact Challenges, where we've been getting the innovators to come in field of underwater communication, detection of satellites in the space, and various other critical areas. So this framework consolidates what we have achieved so far, and it gives an indication that there are newer areas. Why I say newer areas? You've seen our Yuddha Abhyas exercises, the army-to-army exercises that we have. By far, we focused, the last one we had in September in Alaska, we focused in exercising in high-altitude areas on themes of peacekeeping, HADR, counter-terrorist operations. But today, we are moving into cooperation in underwater domain, cooperation in space, cooperation in cyber. So this is what will add new areas of our cooperation and give continuity to this, otherwise an island of continuity amidst the turbulence.
All right, very important points. But let me now also get in Ambassador Sood. Ambassador Sood, how difficult will it be to balance our partnership with Russia? Now, as we speak, we've seen 2 developments. One, HAL signed a defense MOU with a Russian entity for building civilian aircraft. Now, this was a sanctioned entity. Do you think this was done in order to somehow balance the relationship with Russia, assure them that we want to continue that partnership as well? We're also looking at the Secretary, Department of Defense Production. He's traveling to Russia, and we're playing out some pictures also of the 23rd Working Group meeting of the India-Russia Intergovernmental Commission on Military Technical Cooperation and Defense Industry held in Moscow on October 29. How do you think we will take the partnership with Russia forward, which is very critical for our defense needs as well?
Well, right now, we are also under sanctions because we are buying Russian oil. We are under sanctions by the United States. So clearly, which is the point I was making earlier, that just because we've signed or renewed this 10-year framework agreement doesn't mean that we have turned the page insofar as India-US relationship is concerned. It doesn't mean that tomorrow it clears the way for signing of the new trade agreement or anything like that. Secondly, we must remember that insofar as defense is concerned, we have been wanting to slightly broad base and move away, because during the 70s, 80s, 90s, and so on, our military hardware in all the three services was heavily Russia and before Russia, Soviet dependent. So in that sense, we wanted to make it a little more broad-based. To that, the government has also added the slogan of Atmanirbharta and trying to develop our own manufacturing capabilities. So therefore, we are also looking for technology partnerships. We are looking, for example, negotiations with the US company GE on the 414 engine for our combat aircraft, the next generation, the AMCA. We have also, Tatas have moved in and they are now assembling and manufacturing key components of a cargo aircraft for the Air Force, which has been negotiated with Airbus, and that the C295. So at the same time, there have been reports that India is also looking at a fifth generation aircraft. And the aircraft that are supposed to have been offered by the Americans is supposed to be F-35. Trump had put out a message about it a couple of months ago. And the Russians are talking about Su-57. President Putin is likely to visit in December for a bilateral summit. And so we are also exploring the possibilities of what are the key deliverables. So perhaps we need to look at the civilian aircraft deal as part of the Atmanirbharta, as part of the deliverables and so on. After all, our airline sector is sort of poised for a massive growth, really a massive growth.
Right.
And as tier 2, tier 3, tier 4 cities and runways come into operation and connectivity increases, they can't all be connected by the Airbus 320 or, aircraft like that. So we will have to have turboprop aircraft and so on. So we need to have multiple levels. And I think we need to look at it purely from that point of view of being able to keep more than one ball up in the air. And that's what diplomacy is about.
Right. Absolutely. Let me get in General Ahuja as well. General Ahuja, how real is the threat of sanctions on Russian companies which supply major defense equipment? For example, the supplies of the remaining S-400 equipment and consignments has to take place in 2026. What if the US were to sanction all of that? What kind of a situation would that really create? And why do you think in the case of a civilian aircraft, HAL has inked a MOU with UAC, a Russian aircraft, which is under both US and European sanctions?
See, Parikshit, it was just brought out by my co-panelist that we have diversified our arms acquisitions over a period of time. And it was for the first time since the mid-60s that our defense acquisitions from Russia went below 50%. That is, they range around 36% of our acquisitions now. That happened in 2023. But we are definitely not changing one dependency for another dependency. We have, till the time we become Atmanirbhar, we have defense dependencies, now largely distributed between Russia, between France, Israel, and our own acquisitions, our own indigenization. And the US share by far has remained 11%, 12% or so. Now, our Russia relationship is there to stay. It has tapered down over, if you look at last about 15 odd years, it has tapered down from about 76% to 58% to 36%. Now, as far as this particular SJ100 inking of this deal is concerned, now USC has been under sanctions right from 2018 onwards. You would know that they were strengthened during the period 2020, 2022. And now this company, United Aircraft Corporation. Now, it's an amalgamation of the companies which have been producing already the TU series of aircraft, the other Antonov series of aircrafts, IL series of aircraft, MiG, Yak, etc., etc. So, to say, and we have done it in the field of civil aircraft, the need has already been highlighted. So the question is, we are calibrating it, we are diversifying our basket, but we know where are the criticalities. And after the CAATSA sanctions were waived, I don't see US going into so much of a restriction on these aspects, because that will really hit the foundation of our relationship. I don't see that happening. It shouldn't happen if the US is prudent in this part.
All right, we've completely run out of time, but I'd like to thank Ambassador Rakesh Sood and Ambassador Ahuja and General Ahuja for joining us in the program, which has been a very interesting discussion on India-US ties. And we really have to see how US actually delivers on these promises, as we've seen with GE engines, engine deliveries for Tejas, deliveries of Apache helicopters. A lot of that has been delayed. And one of the points that Rajnath Singh had made to Pete Hegseth was that please speed up deliveries and meet timelines. Let's see what happens in the months to come. We're taking a short break on Global Eye, but when we return, we will get you a special interview with the India MD of British International Investment on their investment in India's energy sector and key areas of focus in India for the future. Welcome back to Global Eye. India's green aspiration is set to get a big boost. The UK's development finance institution, British International Investments, has signed a deal with Asia's Blue Leaf Energy to develop clean energy infrastructure in India. As per the agreement that was signed in Singapore, BII is providing a $75 million financing facility to Blue Leaf. The company's renewable energy projects are expected to generate over 3.2 gigawatt-hour of clean energy annually, avoiding about 3.1 million tons of carbon dioxide emissions. Joining us now to discuss this is Shilpa Kumar, Managing Director and Head of India British International Investments. Thank you very much for being with us. Let me begin by asking you, what is the significance of the investment that BII is making in Blue Leaf, and how does this impact India's energy transition?
Yeah, so as you're aware, Parikshit, we have a deep interest in climate finance in India. And out of our portfolio of $2.2 billion, we've invested a substantial part in climate finance. What we try to do is to support private capital and entrepreneurs in the space of generation, transmission, distribution, through different forms of climate finance. And I think Blue Leaf is significant from a couple of reasons. One, because it squarely supports the country's ambition of 500 gigawatts renewables by 2030. Secondly, we like the team which runs this, which is committed to executing these projects. And thirdly, the kind of capital we have come in with is really mezz debt, which honestly in India is a space where you don't see that much commercially available capital. So for all these reasons, we think this is a significant deal. And we do hope that, with this check, we will be able to see many more deals of this kind in the market.
Right. I would like to ask you about the total portfolio that you have in the country right now. And we're nearing the end of 2025. What about 2026? How do you plan to scale up investments in the country?
Yeah. So if you look at our current portfolio, like I said, it's about $2.2 billion and about a fourth of BI's global balance sheet. It's really focused towards supporting three things, which is productive, sustainable, and inclusive growth for the country. When we invest, we try and, focus on these mandates of ours. And at a very, high level, that's what we'll continue to do. However, one important point is that we're ending our last strategy horizon, and that gives us an opportunity to really rethink what we want to change. But fundamentally, climate will stay front and center of what we want to do. And inclusion also at a broad level will continue to feature in our investments.
All right. So you've said climate and inclusion. Going forward, within these areas, what are some of the sectors, the kind of companies you would like to invest in? Today, the major theme is around self-reliance, having domestic capabilities to somehow protect yourself from global vulnerabilities and supply chain challenges. So keeping that theme in mind, within climate, within inclusivity, what are some of the companies and sectors you would like to target most?
Yeah, no, that's a really good question. And if you look at, the two big pillars of our climate finance work, one is renewables, the second is mobility. So we have very interesting portfolios across the width and depth of these two sectors. And one thing that we spend a lot of time thinking about is how do we build robust supply chains, both for renewables as well as in the mobility space. If you look at what we did this year, in the middle of this year, we actually supported Renew with a $100 million check to build their solar cell plant. In the same vein, we keep looking at other parts of the supply chain, both for renewable energy, as well as, of course, for electric mobility, to try and see what are those things for which we are dependent on imports. I think one important thing to keep in mind is India is such a large market. And when we have made big shifts, both in renewable energy as well as in mobility, we need to ensure that these big shifts are supported by strong supply chains. And I would add, we're seeing very interesting business models and evaluating both across equity debt, mezz debt, different models in these spaces.
Right. Now, one of your major investments in the mobility space was the Mahindra Group. Following that, how interested are you in the electric vehicle space in the country? Are you mulling similar partnerships, similar investments in other OEMs?
Yeah. So, we actually have a very interesting portfolio in electric mobility. We've spent $330 million, or invested rather, in various different kinds of models. We are present in manufacturing, we are present in three-wheelers, four-wheeler trucks, four-wheeler autos. We actually have three subsectors of investment. The first is manufacturing, second is what we call sales, and the third is what we call platforms, which is, it's great to have all the different form factors of electric mobility, but how do you ensure that the whole ecosystem kind of grows up and supports electric mobility? So some of our platform level investments are charging infrastructure. Some of the more interesting innovation-based models we've backed are battery technology, battery swapping. We are looking very closely at financing in this area. So there's a portfolio, I would say, of almost 15 to 20, both direct and co-invest checks that we've funded in this system. I also want to say that what makes this a really interesting portfolio is we've supported a number of funds and also have, therefore, the ability to watch young ideas grow up and, then kind of take our bets on direct investments in this sector.
Right. Shilpa, when it comes to rare earth magnets, due to supply chain challenges, India is considering a 7,300 crore scheme to manufacture rare earth magnets in the country. Is that a sector you are interested in? Are you looking at companies? Because this is a very early stage.
Yeah, no, very true. And what happens is as you, backward integrate, what also happens is the check sizes go up. The technology risks are also much higher. And therefore, we are, I would say, studying all of this very closely, because in the end, why we're keen on, having robust supply chains, we also need to kind of ensure that the kind of investment we make is backed by, an entrepreneur who's capable of taking these technology risks, who's capable of building out at scale, and who's capable of supporting CapEx at scale. So that's something we are looking at, but, much work still needs to be done.
All right. Thanks, Shilpa, for joining us on the program. With that, it's a wrap on this edition of Global Eye. Many thanks for being with us. Goodbye.
Watching us here from the red carpet of the 21st IBLA Jury Round India Business Leader Awards. This is where, what is decided by the jury goes on in the award ceremony. The best across the board in business and sports, entertainment, multiple categories, disruptors of the year, the ad campaign of the year. Basically, we celebrate leadership, we celebrate excellence. And what better example of leadership and excellence than what our girls did yesterday in the semi-finals of the World Cup, right? So it's all about the women, it's all about female power, it's all about girls. What we do is we will go across to some of our jury members who, to open the batting, we bring, the wonderful power women. We have Arundhati Bhattacharya, who's joining us, obviously, from Salesforce. We're just talking about the force of the women power in the cricket game, etc. What kind of opening batter that we have better than you, Thanks a lot for joining in. Just got to ask you, what do you make of the environment right now when it comes to leadership? And what do you think the strong moat for leadership would be in a time when AI is disrupting everything?
So I think what we really need right now are leaders that are agile and resilient, because today's world is very uncertain. And uncertainty can only be faced by people who are willing to sort of accept anything that's thrown their way and to be able to respond very, very quickly. So I think agility and resilience are the two things that leaders need to really sort of internalize in this particular age.
Is there a better example than you of both agility and resilience? Because someone who's been heading the largest bank in the country, the private sector bank, to going and moving into a totally disruptive tech arena. So you have been agile, you've been resilient. Tell us a little about the AI investments that you guys are making, what has been earmarked, and what do you think should one do when the onslaught of that starts to worry, businesses which otherwise wouldn't have been as disrupted by artificial intelligence?
So first and foremost, I don't like the word worry. Okay. There's no question of worrying businesses, but businesses need to be excited instead. I want them to be excited about the opportunity that this all brings to the business itself. The second thing is regarding investment. All of our investment is currently into ensuring that our regular products are infused with AI, because AI is the way of the future. It's not something that is here to come and go. It's something that's here to stay. It's going to redefine the way we do business. It's going to redefine the way we look at the future. And therefore, I think for everybody out there, it's important for you all to get excited about it. It's important for you all to lean into it. And it's important for you to understand that all of this needs to be done through collaborations, through partnerships, through looking out, and ensuring that you're really latching on to the right things and really building on those right opportunities.
Right, and a message that you would like to give to the world which is so uncertain right now, not only technology-wise, but, boundaries, geopolitical issues, H-1B visas, etc., all of these things happening. What would you say to relieve that sort of uncertainty? Agility, resilience, and what next?
I would say that, these are things that will happen. All cycles have become shorter, and it's going to be the way the world will be for a long time coming, that I can see. And as a result, my message would be that for all of you is to live for the time, for the present, with an eye on at least the medium term, and not to worry too much about how things happen, because frankly, worries are always where you paint the worst case scenarios. And sometimes the worst case scenarios do come to pass, but most of the times they don't. So there's no real point in, painting those scenarios and getting extra anxious about it all. So live your life.
Live your life. Don't worry about anything. Be resilient, be agile, and be ready. Don't really worry, because the worst case scenarios seldom always come true. But with that, let's go across to Nigel. He has with him someone extra special as well. Nigel.
Well, thanks a lot for that, Mangalam. I have with us, Mr. Tarun Garg. Thanks a lot, Mr. Garg, for coming down for the event, and great to see you in person as well. We've spoken a few times across the Zoom, but good to meet you. My question to you is, how do you see India's growth story pan out? We have a long runway. There are various measures in place as well. So how do you see things evolve?
Oh, it's amazing to say the least. I think India is one bright spot in the global economy. If you see, we are poised to become the third biggest economy by 2028. In terms of GDP size, Prime Minister's vision is to be a Viksit Bharat by 1947, which means about 35 trillion economy. I think 6 to 7% GDP looks very cool, because if you see last 1.5 years, despite so many headwinds and macroeconomic challenges, geopolitical challenges, we were still able to navigate them quite well. Even now, the GST 2.0 reforms has really brought in a new boost to the demand in the economy. So I am very confident, and you can see that from a Hyundai perspective, after the IPO, and now, of course, our CEO, global CEO Jose, has announced 45,000 crore investment, and the second phase of growth story of Hyundai in India is beginning. So I think it's all pointing to that the world is looking at India with a lot of interest and a lot of respect. Yeah. And of course, the supply chain challenges is also making India a destination for the world to see and take care.
Well, that's right. I think if I spoke to you a few months ago, what would be on your wish list would be GST rationalization. And that's precisely what's happened as well. Tell us a little bit about India's ecosystem with regard to EV, because that's clearly penetrating more. That's clearly developing. How do you see adaptation, pan out on that front?
I think that's a very good question. And if you see globally, people have been talking about the EV chasm happening. But if you see India, last 2 years, we were stuck at about 2.5% penetration. I'm talking about the passenger cars. But this year, what happened? Suddenly the change happened, you know. And August, September, we looked at almost 6% penetration. So what has changed? What has changed is, I think, a huge push by the government, the PM e-drive scheme, which means that so many charging stations will be installed. Because if you see, the biggest enabler for EV adoption is the range anxiety which customers have. And you know, once you take care of that anxiety, so by giving him the option of charging at the highways, because people are very comfortable charging at home for intracity driving, but then once they have to go out of the city, then they need that kind of a comfort. So that was one very big driver. The second thing was more and more OEMs joined the race. So we had some very exciting EVs. Even Hyundai launched the Creta EV. We already announced that in 2027 we are going to have a very dedicated EV for India. Yes. So I think the entire ecosystem, in terms of more products, in terms of charging infrastructure, in terms of the supply chain, if you see the battery packs, we have already localized. We are talking about cell manufacturing with a local Indian partner. We are looking at powertrains, power electronics, drivetrain. So the entire ecosystem is giving thrust to this EVs. And I believe with the government's vision of sustainability, I think EVs are here to really, really have a tangential growth.
Well, final word from you before we let you go. You're going to be the first Indian, to head Hyundai as well. So congratulations on that. What is the big plan that you have for us? Say 5 years down the line, what's the roadmap? If you could quickly tell us on that.
I'll be very honest that I'm very honored, and it's a little bit overwhelming to be the first Indian, and I think it really puts in a lot of onus. But if you see, over the last 29 years, Hyundai has been in India. We have done very well. We have got the love and affection of the Indian people, and with the IPO, the aim was to really become truly Indian. Yes. And then you see, like I said, the Pune plant coming in, the additional capacity of 2.5 lakh vehicles, then 45,000 crore investment, and now me being at the helm of affairs. I think the ammunition is set to lead this second phase of growth. Basically, we want to focus on sustainability, on electric vehicles. If you see in the investor day, we had an investor day, and now that we are a listed company, very transparently we shared the next 5 years plans in terms of hybrids, in terms of electrics, and so the whole idea is how really we can contribute to the Prime Minister's vision of making India Viksit Bharat by 1947. And I'm very, very happy and very honored to get this kind of opportunity.
Well, it's a pleasure talking to you, Mr. Garg, and good to hear you're sounding very, very optimistic, both on the economy as well as on the auto space. And all the best with regard to your plans to scale up Hyundai here in India. Well, that's it from me, but I think Mangalam's got another guest. Mr. Singh is in conversation with him. Mangalam, take it away.
That's correct. We have with us none other than Mr. P.D. Singh of Standard Chartered. Standard Chartered obviously has been partnering with IBLA. First time Mr. P.D. Singh comes in here as well. Thanks a lot, Mr. Singh. Congratulations, and what do we say? We're honored. But I have to ask you, when you thought of the India Business Leader Awards, what is it that your impressions were? And now that you're so closely associated with it, your first time, what have your impressions been?
So from the outside, of course, it's one of the most prestigious awards that one always look forward to. And you always thought that the winners were truly deserving of what they achieved. Now, being inside the tent, I find it very difficult to actually, as a jury member, make the distinguishing between the some of the candidates, and they're so close to each other. In fact, when you know some of them, you say, okay, I will remove my bias by looking at the numbers, but even the numbers are so close. So truly, I think very deserving candidates, all of them, and let's see how the evening goes.
All right, and what are you looking forward to most in the evening, apart from, choosing the candidates? Because the jury that we put together, it's an assortment of some of the smartest, wisest, most inspiring people that we have, obviously, right from the chair of the jury, which is Mr. Kumar Mangalam Birla. So are you looking forward to some of those interactions? I've been part of a few in the past, and those conversations are valuable. Those conversations are incredible nuggets of wisdom.
You're absolutely right. I think what I'm looking forward to is the entire diversity. We have so many people with all kinds of experience, those that are industry stalwarts, bankers, the legal eagles, etc. So I think a very diverse perspective on each of these candidates will come forth in that, and I'm pretty sure it's going to be a very robust discussion. That's why I was asking you earlier, do you think the time is enough? Do you think we'll be able to take a call in such a short period of time?
You'll be surprised, you know, when such assortment of experts come in, decision making is so quick, and that's what tells you that why, you know, those leaders are where they are. So I'm looking forward to that evening as well. But in your experience so far in professional life and personal life, how would you define leadership? How would you define success? How would you define achievement? And how would you define excellence?
Yeah, so I think leadership is when you can inspire others to take the baton forward, when you can truly make sure that there is an impact, when those that you have inspired are able to see the differences that they are making in lives of people rather than just the numbers that they report. And ultimately, I think leaders their legacy will be also remembered by those who carry forward the value that they have created. And it's a continuous process of value creation from one to the next leader.
All right, thanks a lot, Mr. Singh, for joining in. And back to you, Nigel. I believe you have with you Ms. Zia Modi.
Well, that's right, Mangla. Ms. Modi is in conversation with us. Thanks a lot, ma'am, for joining in. Well, tell us, as one of the top legal voices here in India, how do you see corporate governance levels shape up here in India? What was it? What is it? And what's the way ahead?
So I think if you're looking at what it was 10 years ago or even 5 years ago, I think the uplift in corporate governance has been significant. I think it is partly because you realize that better governance gives you better value, and your stakeholders are now just wider than just the shareholders and the promoters. So you have to be very mindful of the holistic impression that you give to the public about who you are, what you stand for, what is your purpose, and it's not just about money. So definitely I think with the regulator breathing down hard, with several regulators wanting to make sure that all the dots are ticked on governance, and you really can't escape maybe the wrong way, but you should not be navigating away from that. So I think most corporates who want to be respected, reputed, have an international ability to go out, will choose corporate governance over not.
Okay, all right, Ms. Modi, one more quick question. You know, a lot of young entrepreneurs here in India, if you had to tell them, you know, give them a lesson in terms of something they should take away with regard to governance in particular, because everyone wants to take the lift, but no one wants to go via the staircase. But sometimes that could be more helpful as businesses shape up, as they expand and as they get bigger.
It's a tough call for these youngsters because, you know, they want to do things quickly. And so my advice would be to say, take a deep breath at the right time, maybe show a little more patience. We all know how frothy the markets are. Yeah. What goes up can come down. But what you can't give up in any walkway that you choose is the reputation and the ability to be able to go out again. Yes. And tell your investors, I've done good by being good.
Indeed. Create a brand, create a reputation, and the markets will always trust you. Always a pleasure talking to you, Ms. Modi. Thanks a lot for speaking to us. Well, Mangalam, I believe you're in conversation with Mr. Birla. Take it away.
That's correct. Mangalam having a conversation with another Mangalam, Mr. Kumar Mangalam Birla. That there is Nigel. Thanks a lot, Mr. Birla, for joining in. You're the chair of the jury of the India Business Leader Awards. You've been there in the past, and you've been a part of the jury. You've won multiple times as well. So, you know, so if I had to ask you in simple words, what according to you is success? What according to you is leadership? What according to you is excellence? How do you define these?
Wow, that's a lot of questions rolled into one. I think leadership is about someone who has a target, who is willing to and is able to, get a team around that and create passion in all of them to reach the target and provide the guardrails to do that, give them the sort of what it requires to keep the morale going high. And I think a very confident leader is one who creates leaders under him or her. So someone who creates a leadership pipeline. Success, I think, is, there's so many shades to success. It depends on what kind of activity you're talking about. Maybe just sometimes just being very happy is success, right?
So, you said success is about being happy. Leadership is about giving a target. So let's ask you about that. What are the targets that you've given to your team, your group, as you see the Indian economy over the next 1 year, and what would make you then happy?
Well, we're a conglomerate with many businesses, so targets are different for each business. But, I think being in the top 1 or 2 in the industry that they are in, with return on equity, that's specifically each one's target. Largely, that's how we work.
Are you particularly chuffed about some of the forays that you've made, especially in the consumer space? With the GST cuts that have happened, that would boost consumption and the money that people have in their hands. Have you seen that on the ground?
Yeah, I think they had a very good Diwali. I think both paints and as well as retail, jewelry retail. It's our first time with such sort of hardcore consumer brands, and it's good to see them having taken off so well.
Right. You speak about your consumer brands, etc. The one thing that we have to learn from you, and what according to you would be the Birla playbook of entering and disrupting a category which has had a lot of incumbents. You've done that multiple times in the past, but now as well, the consumer foray that you've made in the kind of categories that you've entered, including the likes of jewelry and paint. What according to you would be the Birla playbook?
I think the first is very thorough preparation and understanding clearly what it takes to win in the industry, what our levers to win would be, and then executing to precision almost. I think it's basically both of these. It's understanding what ticks for the customer. Consumer insights are very important to build a business model around that.
So how happy are you with what you've done? And obviously it takes a lot of capital commitment to that as well. So
I think both have gone off to a great start, much above targets and much better than I had expected. So let's keep our fingers crossed.
Let's keep your fingers crossed. And just before we let you go, this is a personal question that I have to ask you. You're also the conduit of what, the legacy that has been left behind by your father, your grandfather, and all of them. And you will be conducting and passing that on to your children who have also now in many forms entered the business. What is it that you've gained from them which you want to pass on? And at the same time, what is it that you learned from them that you believe you can, add to?
So we follow what we call the trusteeship way of management, which is that you're managing in trust for all the stakeholders, in particular the shareholders. That's our underlying overarching principle of how we run our businesses. That's something that I learned from my father, grandfather, great-grandfather, and I think that's something that my children have already imbibed.
And what is it that your children are teaching you right now?
Lots, new things every day, and I think that makes going to work even more exciting.
Right. Thank you so much, Mr. Birla. Always a pleasure speaking with you. Right, with that, back to you, Nigel.
Well, that's right. I'm in conversation with Dr. Reddy. Well, Dr. Reddy, thanks a lot for joining in. There's so much of focus on technology, but in the business that you deal in, you'll have to balance it very, very, carefully, because technology as well as patient care. How do you balance the two?
There's no going away from technology, and I think as responsible healthcare providers, we have to see what is best in class and see that the patients get it. And we're constantly doing it, consistently doing it in the area of cancer care, or whether it's cardiac, or in the intensive care spaces. Technology is extremely important. AI comes in a big way, and it's helping us with quicker, faster diagnosis. It leads us in the right direction, and I think that's a great boon to the way diagnostics and technology is working out. But I'm constantly telling our teams, our clinicians, or maybe everybody who comes in within our hospitals, is that you can never replace high tech with high touch. And it is the intuition of the clinicians, it's the intuition of the people who are looking after our patients, which makes a huge difference. And I think technology has to be used well, it has to be used wisely, but we can never forget the fact that high touch can never replace high tech.
All right, high touch can never replace high tech. Well put there, ma'am. Since we're at a leadership summit, tell us a couple of lessons you would like to tell young entrepreneurs out there, young budding entrepreneurs. They have a vision, but if you would like to give them a couple of words of advice.
Whatever you do, I think we need the passion. You need to believe that what you're doing is the right thing, and focus more on getting it right. And there will be challenges, there will be glitches along the way, and don't let that get you down, because it happens constantly. In my industry, I've seen a lot of it happening. But at the end of the day, we are here to make a difference. And India is a great country to be in. And we are in our country, especially the young entrepreneurs, in the right place at the right time. So see what you can do to make it a better place. And there is so much of opportunity out there. And I'm sure that we will see as a country a lot of young and rising entrepreneurs.
Well, as a country, there'll be one big message that everyone will be waiting for tomorrow or over the weekend. Our girls in blue, they'll be taking center stage and looking to lift the World Cup. A quick wish to them?
Definitely, our girls in blue should do us proud. I'm excited with the fact that, women are taking center stage in the area of sports. There is so much more we can do as a country to encourage them. But girls, good luck. Bring home the gold, bring home the cup. We're all there praying for you and backing for you.
Well, thanks a lot, Mrs. Reddy, for speaking to us. Well, Mangalam, on that optimistic note, tossing it back to you, the girls in blue going to bring it home over the weekend, by the way.
Bring home the gold, bring home the cup. That's where the word came in from, right? The girls of Indian cricket team making us proud, and perhaps do what maybe we missed out on in November 2023. The boys unfortunately fell short. But we have with us Mr. Dilip Sanghvi. He brings the brightness because he's the founder of Sun Pharma. Thanks a lot, Mr. Sanghvi, for joining in. In an industry which is so volatile when it comes to the external environments, how do you keep yourself sane? How do you stick to a process? And how do you ensure that you are immune to all the external problems that the world may bring?
Oh, I mean, my own assessment of our industry is that it's a very stable industry, because pharmaceutical products are used for treating patients who are not well. And that's a process which gives us much more consistent business. However, globally, internationally, there are changes which are happening, especially because of certain changes in Europe and US. But fortunately, I think pharmaceutical industry has not been affected, because there are no tariffs likely to be imposed.
There are no tariffs, but there have been some radical changes as well, right? How do you see demand in the US, in Europe, and the unregulated markets?
No, I think not very different from what we've seen in the past.
All right, and you believe that this will continue, right?
Hopefully, yeah.
Hopefully. All right. In your own assessment, of the stellar journey that you've had so far, what do you think is defined as excellence, and what is the one message that you'd like to pass on to anyone and everyone who's watching this, looking at you as a source of inspiration?
No, I think focus on helping who you treat as your customers. And ultimately, pharmaceutical industry succeeds if you solve problems for the patients. So that's what we've always focused on from the beginning.
And what do you think is your message for the pharmaceutical industry right now? What are the challenges that, according to you, they're facing? What are the opportunities here? What are the threats?
I see a tremendous opportunity for pharmaceutical industry. India already is the, pharmaceutical export or pharmacy of the world. So we're largest exporter of generic products. I think what we need to do is catch up on innovation. And that's something which I see significant progress being made.
That's incredible words of wisdom. Thanks a lot, Mr. Sanghvi, for joining in. We have been the pharmacy of the world, but now we got to focus on innovation. That's an optimistic note, Nigel, and an inspiring one. With that, it's to you.
Well, thanks a lot for that, Mangalam. Well, I'm in conversation with Mr. Sethi of SBI. Mr. Sethi, thanks a lot for coming down for the awards, and good to have you on the show as well. A couple of quick questions then. With regard to the Indian banking industry, things seem to be shaping up well. What's the next big frontier for the Indian banking system?
First of all, thanks to CNBC for taking me as a jury on IBL. It's always an honor to be there. And as far as banking is concerned, I think we are going through one of the most benign asset quality life cycles in the financial services. And I'm sure with a lot of improvement in underwriting and the way we are looking at and the data availability, the asset quality cycle will continue for some more time. I think the balance sheets of the banks are good and profitability has improved. what banks have to definitely look at is in terms of the customer offerings and the expectations from the customers in terms of intuitive customer surveys, personalized and hyper-personalized surveys. We are now focusing on in terms of technology, digitalization, and without losing the human touch. I think that's a unique feature of Indian banking industry now.
All right. Asset quality is looking very, very good. You all are adapting as well to the customer needs. But some bit of a niggle in terms of worry is the credit growth pickup is not yet there. The RBI has clearly pivoted towards a pro-growth focus. Do you think we're in for better times and that credit growth uptick that we'd like to see is just a matter of time?
Absolutely. I think a couple of things. Of course, as you mentioned, RBI has done, kind of banking reforms 3.0, what I called 22, announcements, which MPs, this is a wide-ranging announcement, which move towards growth orientation, as you mentioned. And more importantly, I think the both fiscal measures in terms of the income tax relief up to 12 lakh rupees and the GST readjustment of the GST rates, the stage is set in my view. And as far as credit growth is concerned, it's not appropriate to say that credit growth is not happening. Some sectors are doing extremely well, yes, obviously. And when we talk about corporate credit, it is waiting for sustained consumer demand in the country, and we see that a visible uptick on the consumption side. And if it is sustained, I'm sure the corporates will come back to the private capital expenditure.
Well, Mr. Sethi, what I meant was, hamesha ye dil mange mo, right? People want to see better credit growth, and hopefully we're in for better times in the second half of this fiscal itself. Yes. Final question before I let you go. You head a very, very large team. What are the factors you keep in mind to keep the team motivated, to pull them through the difficult times and set them up for better times as well? The top few points, so that a lot of our viewers will be wanting to understand that.
In a large organization, or even in a small organization, I think whether it is manufacturing, services, the critical component is people. In fact, in SBI, we believe that product, process, people, and technology. Among these three elements, products, process, and technology can be replicated by anyone. The people are the ones who cannot be replicated. So you build those teams which cannot be replicated by anyone, invest in them, invest in their well-being, invest in their skill building. I think that is what has been sustaining SBI for more than 200 years.
Well put, sir. The human touch is most important. Thanks a lot for speaking to us here on CNBC-TV18. Well, guys, that's it from us here on the IBLA red carpet. Tossing it back to you all in the studio. We take a break, come back, and we continue our coverage.
Watching us here from the red carpet of the 21st IBLA Jury Round India Business Leader Awards. This is where, what is decided by the jury goes on in the award ceremony. The best across the board in business and sports, entertainment, multiple categories, disruptors of the year, the ad campaign of the year. Basically, we celebrate leadership, we celebrate excellence. And what better example of leadership and excellence than what our girls did yesterday in the semi-finals of the World Cup, right? So it's all about the women, it's all about female power, it's all about girls. What we do is we will go across to some of our jury members who, to open the batting, we bring, the wonderful power women. We have Arundhati Bhattacharya, who's joining us, obviously, from Salesforce. We're just talking about the force of the women power in the cricket game, etc. What kind of opening batter that we have better than you. Thanks a lot for joining in. Just got to ask you, what do you make of the environment right now when it comes to leadership, and what do you think the strong moat for leadership would be in a time when AI is disrupting everything?
So I think what we really need right now are leaders that are agile and resilient, because today's world is very uncertain. And uncertainty can only be faced by people who are willing to sort of accept anything that's thrown their way and to be able to respond very, very quickly. So I think agility and resilience are the two things that leaders need to really sort of internalize in this particular age.
Is there a better example than you of both agility and resilience? Because someone who's been heading the largest bank in the country, the private sector bank, to going and moving into a totally disruptive tech arena. So you have been agile, you've been resilient. Tell us a little about the AI investments that you guys are making, what has been earmarked, and what do you think should one do when the onslaught of that starts to worry, businesses which otherwise wouldn't have been as disrupted by artificial intelligence?
So first and foremost, I don't like the word worry. Okay. There's no question of worrying businesses, but businesses need to be excited instead. I want them to be excited about the opportunity that this all brings to the business itself. The second thing is regarding investment. All of our investment is currently into ensuring that our regular products are infused with AI, because AI is the way of the future. It's not something that is here to come and go. It's something that's here to stay. It's going to redefine the way we do business. It's going to redefine the way we look at the future. And therefore, I think for everybody out there, it's important for y'all to get excited about it. It's important for y'all to lean into it. And it's important for you to understand that all of this needs to be done through collaborations, through partnerships, through looking out, and ensuring that you're really latching on to the right things and really building on those right opportunities.
Right, and a message that you would like to give to the world which is so uncertain right now, not only technology-wise, but, boundaries, geopolitical issues, H-1B visas, etc., all of these things happening. What would you say to relieve that sort of uncertainty? Agility, resilience, and what else?
I would say that, these are things that will happen. All cycles have become shorter, and it's going to be the way the world will be for a long time coming, that I can see. And as a result, my message would be that for all of you is to live for the time, for the present, with an eye on at least the medium term, and not to worry too much about how things happen, because frankly, worries are always where you paint the worst case scenarios. And sometimes the worst case scenarios do come to pass, but most of the times they don't. So there's no real point in, painting those scenarios and getting extra anxious about it all. So live your life.
Live your life. Don't worry about anything. Be resilient, be agile, and be ready. Don't really worry, because the worst case scenarios seldom always come true. But with that, let's go across to Nigel. He has with him someone extra special as well. Nigel.
Well, thanks a lot for that, Mangalam. I have with us, Mr. Tarun Garg. Thanks a lot, Mr. Garg, for coming down for the event. And And great to see you in person as well. We've spoken a few times across the Zoom, but good to meet you. My question to you is, how do you see India's growth story pan out? We have a long runway. There are various measures in place as well. So how do you see things evolve?
Oh, it's amazing to say the least. I think India is one bright spot in the global economy. If you see, we are poised to become the third biggest economy by 2028. In terms of GDP size, Prime Minister's vision is to be a Viksit Bharat by 1947, which means about 30-35 trillion economy. I think 6 to 7% GDP looks very cool because if you see last 1.5 years, despite so many headwinds and macroeconomic challenges, geopolitical challenges, we were still able to navigate them quite well. Even now, the GST 2.0 reforms has really brought in a new boost to the demand in the economy. So I am very confident, and you can see that from a Hyundai perspective, after the IPO, and now, of course, our CEO, global CEO Jose, has announced 45,000 crore investment, and the second phase of growth story of Hyundai in India is beginning. So I think it's all pointing to that the world is looking at India with a lot of interest and a lot of respect.
Yeah.
And of course, the supply chain challenges is also making India a destination for the world to see and take care.
Well, that's right. I think if I spoke to you a few months ago, what would be on your wish list would be GST rationalization. And that's precisely what's happened as well. Tell us a little bit about India's ecosystem with regard to EV, because that's clearly penetrating more. That's clearly developing. How do you see adaptation, pan out on that front?
I think that's a very good question. And if you see globally, people have been talking about the EV chasm happening. But if you see India, last 2 years, we were stuck at about 2.5% penetration. I'm talking about the passenger cars. But this year, what happened? Suddenly, the change happened, And August, September, we looked at almost 6% penetration. So what has changed? What has changed is, I think, a huge push by the government, the PM e-drive scheme, which means that so many charging stations will be installed. Because if you see, the biggest enabler for EV adoption is the range anxiety